Kimi、智谱等等。那但是呢，其实我们有很多普通的老百姓只是应用在 Chatbot 里面。其实有超过98%、97%的朋友呢，其实没有实实在在的应用在提高生产力，还有用 AI 或者是用 Crypto 提升我们那个公司的一些生产力里面。那所以呢，接着下来就我们呢就做了一些研究。其实假如我们能广泛通过一个公司应用 AI， 或是用 AI 的 agent 来提升我们的生产力，加上我们用一些金融工具，包括 crypto 来提升我们的 cross border 的 trading 的过程呢，其实呢我们能提高超过70%到90%的生产力，也可以帮公司省了不少的一些成本。也解决了一些问题，就包括假如我们 AI 的话呢，我们少的 response， 平时用人为的一些 response 会很少，然后呢成本会很高，每一个人的 focus 也会专注多一点点。那这个呢是我认为AI 还有 crypto 和 Web3 能具体解决我们生产力还有每一天我们老百姓在遇到的问题。时间不多啊，然后呢，我想最后呢跟大家分享一下。一个闭环，sorry， 就是我认为就是说在接着下来 Web3 还有人工智能一步一步往外拓展，或者越来越多人用的过程里面，香港或者是未来的机会在这几个点。首先，第一，我们有算力，现在包括香港，包括全世界，大家也看到，从东南亚来的朋友，欧洲来的朋友也好，我们的算力在全球各地越来越多。以前可能有很多我们挖比特币的矿场，一步一步的也会转成 AIDC 的 computing power。好了，当 computing power 多了以后呢，我们 token 就会越来越用得多，模型会越来越丰富，我们的底层的AI 的模型呢会越来越好，导致到呢我们的 application 呢也会越来越多，消耗 token 的一些情况会越来越多。就当消耗 token 的一些机会越来越多的时候呢，我们需要的算力也越来越大。那这个情况呢，是一个什么机会呢？就是说，其实我想跟大家分享的是 AI， 或者是通过 AI 发展的一些Web3 的一些应用层面来说呢，其实产业链很长。我们参与在某一个环节，我们现在都有机会。那所以呢，希望大家通过5分钟的时间来启动我们 Web3 Plus、AI Crypto 的一个机会。那欢迎大家来到香港，希望大家在这次会里面收获满满，感谢大家。
好，谢谢 Casper 跟我们分享的 Web3 Plus 的发展及方向，谢谢你。接下来我们将会讨论一下关于 PayFi 用稳定币纵构全球支付网络。So we are now proceeding to the first roundtable discussion for today. So we need to do the setup for the stage. So just a review for the topics for the roundtable discussion. This is the PayFi rebuilding global payments with stablecoin rails. So as stablecoins becoming more increasingly relevant to cross-border settlement, payment efficiency, and digital financial infrastructure, PayFi is opening new conversation around how global payments can become faster, more accessible, and more transparent. So for this upcoming discussion, our speakers will try to explore the practical opportunities, regulatory consideration, and industry collaboration needed. So while the stage is getting ready to set up, I'm going to introduce our moderator and our guest for today. So for this part, we're going to welcome our moderator, Toya Zhang, Deputy CEO of XIO, onto the stage. Welcome our moderator. Thank you, Toya. And now, let me introduce our guest for today. So first of all, we would like to invite Alihon Akashan, Head of Payment of Click. And we have Paul Lalouvic, PhD Managing Director, Organizational Effectiveness and Strategy Execution, Practice of Agile Dynamics. Danny Long, Co-founder and CEO of PQA Labs. And we have Dave Lee, Deputy Chief Manager of Oasis. So, good morning, all our guests on stage. So please show me to welcome our guests on stage, and we're going to have the first roundtable discussion. Let me pass the time to our moderator, Toya. Thank you.
Thank you. Ooh. Okay, good morning, everyone. And I hope everyone has already getting their coffee or bring the coffee to the stage. Okay, let's kickstart the day by a round of self-introduction. And of course, where do you work with? How does it evolve with stablecoin? After all, today we're talking about stablecoin and its global payment. Okay, let's dive into the conversations already. My name is Toya Zhang, Deputy CEO of EX.io. We are one of the licensed here exchange in Hong Kong. By exchange, I don't mean HKEX, I mean like virtual asset exchange. Yeah, hand over to you, Adhan.
Thank you. My name is Alihan Kesan. I work at OEX, which is a Web 2 and Web 3 banking and stablecoin rail based in Hong Kong, UK, and Singapore. I'm the head of payments there, and I'm also the MLRO for several of our entities. Basically, my job entails managing the stablecoin flows, building partnerships with payment partners, and also making sure that our app is regulated and adheres to the several compliance guidelines of several jurisdictions. So that's basically what I do. Thanks.
Thank you, Alihan. And over to you, Paul.
Thanks. My name is Paul Alovich. I'm a managing partner at Agile Dynamics. It's a management consulting company focused on a business architecture, and our core expertise is helping organizations execute their strategy, spending past 5 years in a Web3 and a blockchain space. I'm also a co-founder of management solution for the Treasury, and really looking forward to today's conversation.
Thank you, Paul. And Danny, I feel you're too far from me already.
A little bit far. Hi, my name is Danny Long. I'm a co-founder and CEO of PQA Labs. PQ in the company name stands for Post Quantum. So we are a Hong Kong-based FinTech startup that's focusing on building quantum-resistant blockchain technologies, as well as stablecoin as a service. And what does that mean? We spent a lot of time in our early days focusing and concentrating on the stablecoin issuance side of things here in Hong Kong. And now we are focusing on how to leverage that into the payment rails that we'll be talking about, as well as how we can build our post-quantum security into that payment rail. So nice to be here.
Thank you, Danny. And Dave.
Good morning, everyone. Dave here. I'm the Deputy Chief Manager of Oasis. Oasis is part of the government arm. We focus on attracting strategic enterprises to be in Hong Kong. My shop focusing on FinTech development. So basically, my job is to talk to Tier 1 payment company, to come to Hong Kong every single day. And some of our enterprises are actually focusing on stablecoin development. So look forward to this discussion. Thank you.
Thank you, Dave. So we have an awesome panelist arrangement. We have consulting firms, payment firms, and also like government offices representatives. So let's kickstart by the first topic that we're going to address here. And obviously, the reason why we're sitting here and talking about stablecoin and payment is because 2025 has been an awesome year. Like we have a total of stablecoin transactions, I think it was a 30-something trillion, but as a payment, it's 9 trillion, which is already kind of almost the Visa transaction volume and 5 times of PayPal's transaction volume. But when we're talking about this 2025, USDT or USDC is nothing new, right? It has already been around for several years. What actually drove this? Like suddenly people realizing stablecoin is a payment rail, or something happened, policy happened, and anything happened that actually construe what we witnessed in 2025? Yeah, Alihan?
Thank you. I think the reasons are a couple-fold, right? 8 to 9 years ago, stablecoins were mainly used as a way to transact liquidity between different crypto exchanges. It was used as a means of purchasing different crypto assets, right? The user comes in, buys stablecoin first, and then uses the stablecoin to buy other tokens on a crypto exchange. That's what it was used for. But in this 8 years, there were like different developments that we saw in the industry that pushed this stablecoin use around the world. What are these? One is like US dollar use in markets that aren't able to reach US dollars, like some markets that are not that do not have the US dollar liquidity. USDT and USDC are, since they're stable coins, one-to-one backed, these became the ways for these markets to reach USD. Another point why stablecoin use increased, I think, is because of regulatory guidelines became more clear during these 8 years. Because when the stablecoins first came out, no government in the world, no regulator had any idea how to regulate these, right? But in the 8 years, we saw a lot of different regulators, for example, VARA, ADGM in the UAE, MiCA in the European Union, the Hong Kong's SFC regulations, MAS in Singapore, came out with very clear guidelines, so firms knew where they stood with stablecoins, so it became easier for them. Another thing is cross-border trade frictions, I think, because transferring money cross borders is expensive, it takes time, but stablecoins are cheap, they're quick, right? So it became a way to also pay your trade partners based in other countries. So it also replaced some of that trade volume with instead of fiat, right? And the final thing I think is APIs. The technology became more sophisticated. It became easier to route stablecoins. It became easier to run the blockchain. Banks, partnered up with a lot of stablecoin firms also, and they made their open API, so it became easier. So I think those 4 reasons why it increased. Thanks.
Thank you. And I do have follow-up questions, but let's go through this. I hope I still remember them. Paul, what do you think?
Well, one thing that really we spend quite a bit of time when it comes to stable coins is how this is going to impact the business model of our clients. And there are 2 prevailing questions that some of our clients are asking. Number one, what is the level of finality of the stable coins? How will that impact their treasuries? In other words, once I get paid, can you cancel the payment? Can you withdraw the money? So that's a big ticket item. And when we're talking about a regulated stable coins, from European Union, from, Hong Kong, Singapore, their appetite is to actually approve stable coins that are centralized, USDC, case in point, and USDT is being sidelined. The other big topic is also what are these stable coins backed with? So a vast majority of these stable coins are backed by the US Treasuries. So essentially, you have a superpower unloading their national debt upon the world. So is this really, something that we want to venture in and support? So these are, 2 strategic questions that warrant, deep thinking and analysis. And what we are seeing, especially in the emerging markets, they are basically hard-pressed to replace their weak currencies with the strong currencies. So essentially, the adoption is driven by necessity and desperation, not necessarily with a well-thought-through business decision. But as the market matures, we are confident that topics such as quantum resistance, such as, finality of the transactions, and most importantly, the shape and form of the stability of that token is really going to become the key decision points.
Thank you, Paul. And Danny, from your point of view?
Yeah, I think, both of them really touch upon quite a bit of kind of the advantages and why, stablecoin has kind of got the adoption today. Actually, when I first started in the space, not so long, just a few years ago, today, what happened with stablecoin today is absolutely not a surprise to me. I think anything that has value are there to stay and to grow. within the crypto and blockchain space, obviously in the early day you got your meme coins, you got your NFTs, and then eventually they kind of die off because they simply don't have, let's just say, as much value, right? And stablecoin is simply something that has value, so it was never really a matter of if, it's a matter of when. And I think we're seeing the when right now. And if you look at, and Troy mentioned, the USDT and USDCs, they actually represent like two different spectrum of kind of stablecoin in terms of their, let's just say, regulated compliance, right? And I think for USDT, and then I think Asia is actually one of the biggest, user and driver for kind of using stablecoin payments. And that's just simply because for a lot of these kind of retail kind of users, they simply see the value that the two gentlemen has mentioned in terms of, kind of US dollar, stronger currency, financial inclusion, because many of them were unbanked, right? So, when people start to see the value, they start to see people around them using it, they're going to start using it. It's simple as that. And when it comes to USDC and some of the other more, compliant stablecoins, it's just that regulatory clarity, right? In the last year, different jurisdictions, especially the US, come up with regulations, the Genius Act, all that stuff, that kind of solidified and, the regulatory status, right, of USDC, for example, this stablecoin, that actually allows institutions, banks, financial institutions to actually take, a bigger position, right, in using stablecoins. And that's why, you have BlackRock with the largest ETF, ETF, Bitcoin ETF, they start to use a lot of stablecoins for their transactions. So I think all this thing kind of comes to why stablecoin has taken, the payment rail by storm last year, and I think we'll just simply keep growing.
Thank you. And I do have a different question for Dave about the same question. Because you're here in Hong Kong, you witness a lot of like ecosystem, what's happening in Hong Kong locally. We know names like Red Dot Pay, we know names like Reap. What do you observe? Like, what kind of advantage they're having, and to take the leader role of these payment businesses, or is it the policy that give them the enough benefits to grow, or the economy of people's adoption? What is it about it?
Yeah, I think what we have observed, there are two things really driving the stablecoin adoption. The first thing is the infrastructure. It's a bit like what we are all using a wallet nowadays, right? Like Alipay, WeChat Pay, whatever, PayMe. Like I think the stage is like back to 10, 15 years ago. Stablecoin wallet is becoming more and more easy for everyone. So I think first of all, a lot of companies offering digital asset wallets as a service nowadays. So when we are trying to use stablecoin, it's no rocket science. It's very easy. One app, one QR code, you can easily use stablecoin already. So that's the first thing. And the second thing is driven by use case. When you look at stablecoin, the people in Hong Kong, we may not have much feeling because Hong Kong itself is kind of a stablecoin. We're packed with US dollar. But when you look at other countries, like Africa, South America, the currency can be really fluctuated. Maybe it can be like 10, 20% every single month. So that's why some of the people, they really need stablecoin to actually protect their wealth, to have transactions overseas, whatever. So back to your question, regulation is the key for every stablecoin issuer. Because when you look at what is happening in the last 2 or 3 years, I have a client, he told me they have spent $1 million every single month purely on the legal and compliance costs. So that's why they are really seeing regulated stablecoin, compliant stablecoin is their top priority. Yeah.
Thank you, Dave. And the same question, this is a follow-up. Alihan and Danny both mentioned the word kind of compliance or regulatory clarity, right? And you didn't mention Hong Kong specifically. You mentioned VARA and ADGM. And Hong Kong has the first actually stablecoin act worldwide, I think. Even Clarity Act is still kind of struggling a little bit. So what do you think about the regulatory different speed, which country is leading, or is this Hong Kong Stablecoin Act, how is it helping, or is it helping? compared to VARA and ADGM?
That's a good question. Hong Kong issued first 2 stablecoin licenses, right? One to a bank and the other to a financial institution. So the difference with Hong Kong and areas like UAE is that Hong Kong has been a very big financial, market for many years, right? So it's been the financial center of Asia. It's one of the biggest financial markets in the world. It knows traditional finance. It knows a lot of banks. And the compliance and regulations because of this, because you need to build trust in order to become a financial market in the world, right? And Hong Kong is extremely regulated. Hong Kong's traditional banks, traditional finance is extremely regulated. So when you're moving to a stablecoin issuing license, when you're moving into this kind of business, you cannot drop the ball on regulation. So that's why Hong Kong regulators are very, very strict on requirements, because they don't want to break the trust of the entire world that Hong Kong is a very regulated, very safe, very trustworthy market, right? So there is no room to quote-unquote experiment with this, right, when it comes to Hong Kong. But when it comes to areas like UAE with VARA and ADGM, yes, they are also strict. They're not strict. I've worked in 2 different companies that applied and ultimately got the VARA license, got the ADGM license. They're also quite strict, but they are more willing to welcome new players, experiment a little bit, because they want to build the financial markets in Dubai and in UAE. They want to position it as, and it's already become as the financial center of the Middle East, right? But they're still growing. They're not at the same level, in my opinion, as Hong Kong, right? So I would say that they're more willing to experiment a little bit. They're more willing to welcome new players, whereas Hong Kong errs on the caution side a little bit. They just, really make sure that the stablecoin licenses are granted to players that are already big, that already proved themselves as regulatory, with strong regulations, such as HSBC, for example. That's my take on it.
Thank you. And Danny, you have anything to add on that?
Yeah, I think, and definitely, I was, as I mentioned very earlier, me, myself, and PQL Lab were actually very much involved in the early days of the stablecoin, kind of the license application sandbox kind of regime in Hong Kong in the early days. So very much entrenched, had a lot of good communication with the regulators, right, HKMA. And let's just say, as Ali Khan said, it doesn't come as a surprise that Hong Kong take a more conservative approach. Given that we are, international financial center, we are dominated by large banks and financial institutions. So there's no surprise to it. But now, I think what my understanding from the regulator is that this is only their first step. They want to take kind of, a kind of slow-phase approach before kind of opening it up to other use cases, as Dave mentioned, which is always the underlying driven force behind anything, right? You need to have use cases, you need to have demand, you need to have the users. But I think eventually, I'm hoping the regulators and the license will get there a little bit sooner rather than later, only because of all the advantages that the gentlemen have mentioned. The current use case, the current way it's set up, it's not driven by those use cases, right? Hong Kong has a very steady currency, right? So there's no currency fluctuation like Dave mentioned, right? And one of the biggest stablecoin, kind of advantage, right, that Paul mentioned is about like cross-border trading, right? So if you are right now, the Hong Kong stablecoin issuer has only been based on Hong Kong dollars, which, let's just be honest, is not a major cross-border trading currencies, right? So if you don't use stablecoin for cross-border kind of payments, then I think you are really limiting one of the biggest use cases for stablecoins, right? So I think, so back to what we mentioned earlier, having regulatory clarity is key, it's important, but followed by real practical business use cases is what will make this thing grow.
Thank you, Danny. And let's We're going deep and slow. That's now the next topic about payment companies, right? In the payment companies, what we see recently, especially, there are a lot of M&As. PayPal is acquiring Bridge, and also MasterCard is actually eyeing on BVNK. So all this merger and acquisitions from the payment giants, what does it tell us? Like in movement, market, capital movement like this, or business opportunities like this, what does it tell us? Like, are they swallowing the stablecoin payment businesses, or they're actually getting into competitions? Or from maybe Alihan, your point of view, you are looking forward to be acquired by some giant someday. Like what's the strategic move here?
So the optimist inside me wants to say that the big payment companies want to adopt crypto, right? Because I'm a big crypto supporter, big user, passionate about industry. But I don't think that's the case. I mean, yes, they do want to adopt crypto. They do see the market moving in that direction. More and more people using stable coins. But I think the main reason is because they don't want to be left out. Right.
So I think that's the main fear of missing out.
Yes, fear of missing out, like FOMO, right? They don't want to be left out because they see the market going that way. So they want to diversify, and they have a question in their heads like, what if one day everything moves on blockchain? What if everything moves to stable? Because right now we're not there yet, but we're slowly moving there. So the crypto and stable coins stopped becoming a fad, quote unquote, right? They're real use cases right now. They see that. They don't want to be left out. That's one of the reasons. Another reason is they want to own the whole, because I work in payments. When you're a company that works, that orchestrates payments, you want to own the entire end-to-end process. You don't want to own just part of it. It's better to own the end-to-end process so that people depend on you. So you become kind of like I don't want to say a monopoly, but think about Visa and MasterCard, right? So they almost own the entire end-to-end structure. Like you cannot process a transaction without them, right? So that's the second reason. Another reason is stablecoin settlements are cheaper, right? So in the back end, they can orchestrate it as settlement using stablecoin instead of using traditional finance, so they can save money, they can make more profit. So I think all these three reasons is I think why these companies are looking to purchase stablecoin issuers, crypto companies, and add it to their team. Right?
Thank you. And Paul, from your point of view, what do you see all these capital movements?
So one of the things that really inspired us to build a treasury management IO under Swift Motion is the complexity that is introduced by technology, by all the startups, as well as the large incumbents. So essentially, the way we see the market is that liberalization of the payment systems, banking systems, is going to lead to a massive complexity. So put yourself in the shoes of your average CFO. So how will you navigate the complexity introduced by thousands of different stable coins, by massive complexity introduced by different financial products and digital assets? So that's what we kind of recognize as an opportunity, and we see the need for the business intelligence layer that will help you sift through all the noise and get the best deal for yourself. Because ultimately, all these big corporations, as Alan pointed rightly, are running monopolies. And the future belongs to smaller, more agile organizations that are built around creating value for their customers. So that's really what's going to be the future. It's not going to be logos, it's not going to be commercials and advertisement. It will be the real empirical value. Do I get a better treatment by this service provider or that service provider? And my loyalty is going to last only as long as this value is created for me, my business, and my family. So that's the future.
Thanks. And Danny?
Yeah, I think this kind of movement is only going to get stronger. in terms of all these kind of consolidations, right? I think one of the biggest event that happened in the last couple of months is the foundation of OUSD, OpenUSD, right? It's a consortium of 140 plus different companies, Stripe, right, MasterCard, Visa, they're all in it. So basically all the large corporations, they are getting together to kind of have their own standard in terms of when it comes to stable coins. So, and that's one of the reasons why I feel that when it comes to stable coin issuance, that playing field is pretty much set. Going for in the next couple of years, and this happened in the biggest market, the US, right? And now we have Hong Kong, we have, Europe. So the opportunity next is really lies, as Paul just mentioned, really on the application side and how different players, right, can leverage stablecoins and its payment rails to drive value-add services on top of it, whether it's better user experience, whether it's accommodating to the rising agentic economy, whether it's for more security. These are where the kind of the value adds that we're going to accrete on top of this issuance path, and those are already dominated and will continue, and that trend is not going to be reversed. Yeah.
Thank you. And the same question to Dave.
Yeah. It's really interesting to see those deals. I worked at Visa, MasterCard, Swift before. And when you look at those giants, when they make those announcements, it means that there's no more discussion on whether do we need stablecoin railway. It's a confirmation. It's end of discussion. Every payment company, they need a stablecoin railway. Just a matter of how
and which
they can do that. So interestingly, when you look at one of our clients, he showed me a day before. When he showed me there's a Hong Kong to Indonesia corridor. When we make money from there, the all-in cost is only 0.2%. It's crazy when you look at, because they ride on the stablecoin railway. You see the adoption is real, the value is real. So I would say that stablecoin railway, no doubt, gonna be a really important portion in the future payment movement. I think that's the real signal the market is seeing right now. Yeah.
Thank you. And can I ask 0.2% of cost, which stablecoin is that?
It's company, the name starts with R, so you can check out the app. It's crazy, 0.2%, all in, yeah. I don't know how they make money, but yeah, you see the adoption is just, yeah.
The margin is getting thinner. That's another thing, like for PayPal and MasterCard, if they're adopting stablecoin. Yeah, hopefully the volume will also tell the story. Yeah, we're not leaving the panel without talking about AI now. Every panel we talk a touch upon it, find an angle to go through AI. So, but of course, for payment, people have been telling the story that stablecoin and AI and the future agentic era, like the payment should be made by stablecoin. It should be digital twins about stablecoin and AI things. But how? Is there any real case studies? What are the risks lying alongside? Is it AML? Everything involved this? Let's start from Dave and Danny of this question.
Yeah. So I think agentic payment is a topic I have been hearing since earlier this year. So I've been asking, like, what's the use case behind? I asked Danny this morning. You get to see that a lot of people are trying to make the agent, to run the business. But like inevitably, the agent has to make certain payment. No matter to purchase a computing power token or you make any subscription, they need to make payment. But the risk behind is actually if the agent fails to do anything or any fraud, who is taking the responsibility? I think that's a discussion, that's an ongoing discussion. And some of our clients, they will just jump out. Actually, they will mention, I can even offer insurance. If my agent fail, there could be an insurance backed by those things. And the other discussion is if my agent fails, there should be a RO, like the current model. Someone has to take the responsibility. I don't know who should take that, but that's the thing I heard like from the recent discussion. That's going to be really interesting. Yeah.
Absolutely, right. I think the biggest, well, I think one of the biggest issue right now, potentially holding back the agentic payment and commerce side, is the whole identity, matter, right? Who's responsible behind it? So, and that's where I see that a lot of these different kind of services and startups are actually working on this particular thing, using decentralized ID, using automated AML solutions. So I think we're going to get there very soon. Insurance is always one of the things, but again, they're step by step. But I think it's a direction, a trend that's not to be reversed. And a stablecoin is a perfect match for it. The way I see it is when it comes to kind of agent, payment using agent, there's actually a difference between agentic payment between agent, like A2A agent payments or machine-to-machine payments, versus agentic commerce, where you have your e-marketplace, your merchants using, people actually using agent to buy a pair of shoes, some clothing, right? I think on the commerce side, there could be more of maybe a larger payments in terms of the volume, in terms of dollar value, right? When you talk about the A2A kind of payment, a lot of time we're talking about micropayments. It's almost like right now, if you want to use ChatGPT, large language models, you want to buy compute tokens, it's almost like right now you have to pay using credit cards, and I'll buy like, I have to shell out X amount of money for 1 million, 2 million, 3 million tokens. But with agents, with agentic payments, you can make a pay per use, right? And then literally, and that's why you have to make agentic payments literally frictionless or costless, because I'm not going to pay $1 of gas, right, if I'm only making a cent on my payments, right? So all these are the issues that we are going to need to resolve. And I think when it comes to the growth and the volume, it's going to be so great that eventually you will have to deal with not only the compliance side of it, but also security side of it. So these are all the different matters that we'll have to tackle as the agentic payment kind of grow in scale.
Thank you. And for Paul and Alejandra, let's wrap up with another topic of this panel. Like, Paul, from maybe your client's perspective, what's the hardest part of doing this stablecoin payment thing? Like, and from maybe your perspective, what are the blockers? What struggles you the most? Is it a banking relationship, or is it different jurisdictions of different compliance requirement, or convincing the clients that this is, the number tells the story, this is much cheaper, just do it? Or is it cybersecurity? Anything that you can share with us, Paul?
Sure. So we're currently running rounds of proof of concept for the treasury management that's powered by AI. And to be honest, it's much simpler than it sounds. Essentially, the key driver behind the decision-making process in treasury management is corporate investment policy. So that's, the first level of the guardrails that sets the parameters that will, act as guardrails in terms of how decisions are made. You have your delegation of authority. You have your compliance documentation. So feeding that into treasury management decisions is gonna set up the key theme. And then the agentic AI is really going to be, the added value that's going to help, with making some immediate decisions when it comes to, placing your bets. So ultimately, the biggest challenge is obviously going to be resistance and fear of change. So a lot of people, build careers on, pressing the button, staring at the Bloomberg terminal, and just going to meetings. So displacing these people, changing that generation of financial, professionals, and replacing them with bots, and, introducing this kind of almost immediate decision-making process is creating a lot of resistance, fear, and everything that comes with it. In my humble view, a lot of this transition is going to be driven by a proper change management and simply reassuring people that, there is future beyond, their current job.
That sounds another 40 minutes of panel discussion topic. Yeah, from your point of view.
I'll just keep it short. I'll try to keep it short. So
that was such a probably next year hot topic, like how AI and adoption is going to change people's professions.
yeah, exactly. I'm fearing for my job as well. So, the main blockers for stable coins, it's what you mentioned, right? The biggest blocker is not the technology. It's not the blockchain. That's there. That's easy to build. It's not difficult. The real blockers and difficulties are like, one is compliance regulation. If you're operating in different markets, each market's regulation is different. So you need to really know your compliance, know your customer, the KYC, KYB processes. You need to have a good KYT tool so you can, you can really make sure that the funds are safe. And there is banking relationships. Not all banks are willing to provide services for, crypto firms such as us, because they think that it's too high risk. They don't know they just don't know how to operate in this, right? In this environment without taking risk, right? So that's the other thing. And one more thing is like the blockchain is there, but you need to make sure that the customer gets actually paid, right? So you need to really make sure that the funds are there. So liquidity is also a challenge. So you need to make sure that liquidity is there, because like the money sent on the crypto sent on the blockchain is not the issue. The issue is that if the client can actually withdraw that money, can they off-ramp, right? So that's another thing. And final thing is like you don't have to really mention to the client all the time that you're doing stable coin. There's stable coin running in the background. For example, I have clients that do FX exchange, Hong Kong dollar to Philippine peso, for example. As long as they know it's cheap, they can actually do off-ramp. Stable coin is running in the background, and we explain it to them, but like as long as you can actually do end-to-end conversions, doesn't really matter for them, and it's cheap. That's my take.
Yeah. Thank you for my panelists. It's a great panel. A round of applause to my panelists, and we're wrapping up for the first one, and looking forward to more insightful conversations in the following day. Thank you.
Thank you so much for all guests on stage to share their insights about the global payments and also stable coins. Thank you so much. Okay, so it's a photo time, just looking at the cameraman in the middle. Maybe just take a quick view video. Stand a little bit closer. Okay, that's good. All right, let's give another round of applause to our guests on stage. Thank you for the sharing. Thank you. So after this roundtable discussion, we are moving back to the presentation. So for the next presentation on stage, the topic is about the next financial revolution, stablecoins, tokenization, and the future of global finance. As stablecoins and tokenization continues to move from concept to real-world adoption, so they are reshaping how value is transferred, assets are structured, and global finance is connected. For this upcoming section, our guests will share insights on the opportunities about the regulatory consideration and trust building, foundations needed for the next stage of the financial innovation. 所以接下来的分享就是有关稳定币、资产代币化与全球金融的未来。现在我们就是准备我们的分享嘉宾。Let's welcome our guest speaker, Loretta Joseph, Chair of IDXA and consultant at FSC Jamaica on stage. Let's give a round of applause to Loretta.
I think, is this on? Morning, everybody. Is it on? I can't hear. Can you hear me? Okay, it's on. So I've just been over there listening to the real world asset tokenization panel, and I just listened to the stablecoin panel. Two very interesting topics and some that are very close to my heart because I actually write law on both of those things. The biggest problem I have with real world tokenization, and we're all talking about it, is just because you tokenize an asset doesn't give you liquidity. And I think we all really need to learn that, because I've traded for 35 years across markets. Tokenising an asset's not just going to give you automatic liquidity. And the other issue I find is that the tokenisation process involves smart contracts. Nobody has figured out how to do a smart contract properly. Go and ask Gavin Wood. He built the first smart contract in the world in Ethereum, and if he can't work it out, if anybody else can tell me how to do that, I'll be very, very happy to hear, because the biggest problem we have at the moment is smart contract audits that are showing code bugs, and it's getting worse with AI. So I do believe, though, the next financial revolution is already here, and that comes out of many things. I think the internet started it. Now we're seeing blockchain, AI, all these emerging techs starting to join together. I think everything is becoming mainstream, and I should know, because I've probably written more law in the world than any other person. So I've written a model law on virtual assets. I've written a model law on stable coins. I was listening to these guys before. I've got some questions about how you showed me your proof of reserves and a few other things. But if you go and read my Commonwealth model law on stable coins, you'll see that we have some pretty stringent prudential requirements around that. But obviously, stablecoins and real-world tokenisations are reshaping payments and capital markets. And I think this is the start of the next digital revolution. The way we bank today, the way we move money, the way we move assets is going to look very different in 5 years. The traditional banking system, which I come from, TradFi, hates this because we've just removed the middlemen. But when you take out the middlemen, you take out friction in systems. And this is very good for us globally, and I think it's going to be particularly good for the emerging markets. I think things like real-world tokenisation, stablecoins, don't mean a huge amount in places like Australia, Canada, the US. People tell me they do. But where they make the biggest difference is in the emerging world, where you can't get a bank account. You know, in Australia and America, 97% of people are banked. Flip that on its head in places like Africa, India, South America, 98% of people can't get bank accounts. This stuff really changes their lives. So I think the next decade is going to change the financial landscape just as the internet changed our lives. And what we're seeing now is stable coins are becoming the transactional layer of the internet. You can't go and pay for things in Web3 with digital, with fiat currency. We need things like stable coins, which are now the transactional layer. I think because they're cheaper, they're faster, they move 24 hours a day, 7 days a week to anyone in the world, stable coins are definitely the next revolution. But they come with challenges. And if you tell me that Tether is one-to-one backed, I'll probably smack you. Nobody at Tether can show me their proof of reserves. I reckon at best Tether's probably 45% backed. If you read my laws, I expect really, really strong proof of reserves, capital management, capital adequacy requirements. These things act as financial institutions and they should be regulated as such. I think algorithmic stablecoins are really interesting, but I built algorithmic hedge funds in the 1990s. They come with risks. So don't ban them, just regulate them. Things like asset referenced stable coins are very, very important. Gold-backed stable coins I think are going to be important. And the last thing I think in stable coins, which we're going to find very, very, very interesting, is DAO-backed stable coins. Decentralised automated organisations that start to issue stable coins. How many of you know MakerDAO? Anyone heard of MakerDAO? Yeah, MakerDAO is a Danish company that's been kicked out of Europe because they can't comply with MiCA. They've got a market cap of $50 billion. They've been issuing DAO-backed stablecoins since 2014. Never had an AML problem, never had a hack. They're an excellent company and they have 2.5 billion customers. So tokenisation of real-world assets I feel really interesting, and I'm writing a law at the moment for the Commonwealth on it. But my biggest fundamental problem, unlike writing a law for virtual assets or for stablecoins, is it intersects with so many existing laws because we're tokenising real-world assets that already have plenty of laws around them. But I think the greatest gift that real-world assets can give to us is fractionalisation. You don't have to have the money to go and buy a house in New York. you can buy a fraction of the building. But we've got to be careful when we're looking what are the rights around what do you get. Are you getting a brick in that building? What do you get? What are the rights giving you? And I think companies have to disclose what they're giving people rights to actually have when they're giving you a real-world token. You're not getting the underlying asset. You're getting rights to something. Be very, very careful if you're issuing a real-world asset because the regulators will come after you. Greater market liquidity does come through tokenisation, but it's not the only mechanism. And there are starting to be stringent rules around second market trading. ICOs in 2017 were so popular and made so much money, but were so scammy because there was no requirement around second market holding of a token. You could buy it in the primary market and sell it in the secondary market. You can't do that with an equity or a commodity or a bond. It gives wider access to everybody. So I can be a 16-year-old kid in Nigeria, or I can be an 80-year-old man in New York. I can still buy a token, a fraction of a token of something. And I think that's really going to change the way that we invest things in the future. And it gives everybody that's never had access to financial markets, people that can't afford to have brokers to buy stocks, are going to have access to be able to become millionaires at very young ages and probably don't even need to go to university to do that. Faster settlement and reduction costs, I think that comes with blockchain technology, because if you look at things like Bitcoin, it's automatically, it's atomically settled. And I think when you start to atomically settle assets like bonds or equities, you take out the friction in the systems. So at the moment, there's a whole lot of friction in systems around post-market trading. That's what blockchain solves. It automates the post-market risk. So you take out counterparty risk, capital risk. There's a whole lot of risks that get removed after trading. We all trade instantaneously anyway in any market, but blockchain and automated settlement is a real game changer for capital markets. So the future, and I've been in the markets for 35 years, are going to look very, very different in the next 5 years. Digital bonds, digital securities, markets that are interoperable. Why do stablecoins work? Why do central bank digital currencies not work? Because stablecoins are interoperable across every blockchain. And that's the key fundamental difference that makes stablecoins completely different from fiat currency and central bank digital currencies. Central bank digital currencies are never going to work. So smart contracts and automatisation are very important, but be careful with your smart contracting. Make sure your coders understand that they're not coding vulnerabilities. It's the biggest risk that we see. And I think all these assets now give us access to new opportunities to invest. Regulation, I think, is an enabler. You've got to understand that we regulate now from risk. What is the risk of a company? What's the risk to a jurisdiction? And what's the risk of the asset? We have to protect our consumers and investors. None of us want scams. Crypto's had scams in it for 15 years I've been in it. AML, CTF compliance, not negotiable. If you don't understand your money laundering, terrorism, financing requirements, you're going to go to jail. So don't set up a company that doesn't have a good AMLO or a compliance officer. And encourage responsible innovation. Talk to your regulators. Don't be scared of them. I come from Australia where ASIC acts like the police. I work for 49 regulators. They all want you to come and talk to them because they don't understand what you're building, and they're very friendly. So this is very important. I think as we go through the next decade, regulatory equivalence is really important. Consistent global standards. The Financial Stability Board, the FSB and the FATF all have different definitions for the same thing, which is ridiculous. But we have to look at cross-border interoperability, and my time is up. But these are the challenges I'm going to leave you with. Cybersecurity. Make sure you understand your cybersecurity risks. The hack that we've seen in crypto, most of it hasn't come from the exchanges. It's come from third-party vectors that have been influenced by the North Korean Lazarus Group. Operational resilience, understand. I think BitMEX went broke today. Did anyone see that? BitMEX went bankrupt. Financial stability is a big one. And the last one, governance and legal certainty. Go to countries that have legal frameworks. Go to countries that allow you to operate with clear legal pillars in place so the rules don't change on you tomorrow and you don't go to jail. Thank you, everyone. Have a good day.
Thank you, Norita. Thank you so much. Please be seated. So next, we're going to have another presentation, and the topic is the agentic enterprise, about how multi-agent AI is reshaping how business run. So as AI moves from simple task automation to more autonomous multi-agent collaboration, businesses are entering a new stage for the operational transformation. So this upcoming section, the speaker will explore how multi-agent AI can support smarter workflows, faster decision-making, stronger productivity, and new ways of building enterprise efficiency. So now, please join me to welcome our guest speaker, Alice G, founder of Victor Lab, on stage. Alice, please. Let's welcome Alice.
Hello, good morning, everyone. We have a treat for you today because you have a lineup of 3 Aussies in a row. You can probably tell by my accent. So I'm going to talk about agents today. You must be sick of hearing about it because you're probably hearing about agents throughout this conference, yesterday and today. But we're not really having the right conversations around agents, I believe. So I know that we've probably reached peak hype. You're hearing about it from your neighbour, your taxi driver, maybe even your colleague. But we're not talking about ownership and who decides and what happens next when we move towards an agentic future. So my name is Elise and I am co-founder of Vector Lab, and we're a Microsoft software development company. So I build AI agents for a living, but I also plan for a future where what I'm building might work just too well. And that future could be kind of scary, to be honest. So I've worked in traditional software for nearly a decade, and as you all know, traditional software is kind of dumb. It only does what you tell it to do. But when we're moving towards agentic software, it's basically a human. It's like working with a colleague. You have an agent or a thing that can decide, act, reason, and carry out an entire task without you needing to interject. And that's the scary part of it. So I just talked about one agent, but what happens when you have multiple agents? Now you have a team of people who can carry out tasks for you. So what do? I build Switchblade, which is an agentic migration platform. And what it does is it moves people away from legacy business intelligence platforms such as Tableau and Click into a more modern data platform like Microsoft Fabric. Really boring stuff, but it's worth multi-millions of dollars. But this may not be very relevant to you. You don't have any data platform to migrate over. But what if you have a function that you're thinking of automating? So take, for example, your finance function or your HR function. So within that finance function, you might have several different roles, such as accounts receivable, payable, cash flow, budgeting and forecasting, maybe procurement, supply chain might also kind of fall under that finance function. So what you can do right now is all those activities, you can agentify it. You can turn that into agents. So each of those roles has become an agent, and you have turned that into software. So this one piece of software can replace your entire team. Now, you might be thinking, we're not there yet, and it's true. But from what we've seen from the likes of Fable or even GPT 5.6 or Kimi that just got released in the last few weeks, it's getting pretty powerful. And even OpenAI's latest model escaped the cage that was built around it. Now, pretty scary stuff, because it means that the future that authors such as Max Tegmark wrote about in Life 3.0 is coming to fruition. It's becoming a reality. AI is getting harder and harder to control, but at the same time, it's becoming more powerful, so that the future that I'm talking about, where you can automate an entire function, is becoming more real, and it will happen in the next 1 to 2 years, if not sooner. So what am I talking about? Software has now become labor. And so what that means is that as you increase machine autonomy, you're also decreasing human agency. So this is the trap here. So we really need to think about the implications of this. And why am I telling you all this? Because I build agentic software. Obviously, I want you to use my product. And what I want to say is, at the same time, if you use it right, then you could potentially transform your entire organization. So I believe many of you work in the financial services and industry and in trading and many adjacent industries. So what you could do, for example, I'm going to give you a real-life example. Take IKEA. They sell furniture, and they also deal with a lot of consumers. So they have pretty much automated a lot of their customer service functions, but they haven't fired these people. They've just redeployed the human capital into other areas. And that area, or one of those areas, is interior design. And they've turned that into a multi-billion-dollar business alone. So think about what you could do with a human capital. When you free that up, you could change or introduce a whole new business unit, bringing in additional revenue. Now, the key question is, when labor disappears, what happens? So if nobody needs your labor, what makes you think that they need your consent? So labor represents more than just income or your way to make a living. It also represents things like your identity. Think about, how do you answer when someone asks you, what do you do when you're at a dinner party? You usually answer with, well, I work in a bank. So it has literally become your identity. It also represents bargaining power. You have unions, or workers' unions, which appear in many parts of the world. Hong Kong, I believe, may also have workers' unions. Even in Singapore, where I reside right now, and Australia, there is a strong workers' union. But these are no longer relevant. When your labour isn't needed, who cares about what the union is trying to bargain for? You have no bargaining power. And lastly, it also represents political influence and relevance. So a lot of your politicians, they will appeal to you as a voter because you form part of their tax base and the voter base. But if they don't need your labour anymore, what do they care about what you think and who you vote for? So what happens to ownership after AI? Well, AI makes a lot of things abundant. So we're looking at an abundant future, such as intelligence is abundant, education, medicine, production is abundant. But there's a lot of implications to it, because with this abundance, who does that accrue to? Is it accruing to you as an individual, who you work for, or is it the companies which own the compute and the models? So in the very near future, we need to think about how we can own the production layer. What is that production layer, or the productive layer in this case? It's made up of all the models, the compute, the IP, and the infrastructure. And currently, I would argue that none of us own any of this. We have no sovereignty. The key word here is sovereignty, and this is what we need to be aiming for. And in the near future, we're going to be moving things back in-house. Does it sound familiar to you, where we're moving things back on-prem? We're going to have we're not going to rely on the Microsofts or the AWSs anymore. We might be moving things back into our offices, and we'll have our compute sitting underneath the desk. So the last point I want to make is that a lot of organizations are increasing their automation. And it's actually driven by the bottom up, because I believe all of you would have used ChatGPT or even Claude. I'd argue it's 90% of you, maybe even 100% of you. So what's different about this revolution is that it's driven by the bottom up, that there is no one that it hasn't touched. And it's not your boss telling you that you need to use these tools in your work because you want to. And sometimes you even have to make a business case to use these tools, so they'll give you money to buy a subscription. And so what this means is that intelligence is one of the biggest total addressable markets in the history of the world right now, and it's driven by you from the bottom up. So what this also means is that machine automation is increasing, And at the same time, ownership is being concentrated in the hands of few. Who are the hands of the few? They're your frontier labs such as OpenAI and Anthropic. And they're also your hyperscalers like Microsoft and AWS. So, I mean, I love them and I work with all these companies, but in a way, they can also be seen as the enemy or the people who are taking away your sovereignty and your ownership and control. And increasingly, business owners or employees, your colleagues and even your customers are becoming more and more dependent on these systems that they don't understand or control. So a lot of people think that when they're agentifying or they're automating their business by giving away to agents, they're taking back control, but actually they're just giving control up and giving away to these hyperscalers and frontier labs. So what is my call to action? Make sure that you are setting the goals and the rules and the context. And lastly, in the very near future, we need to think about sovereignty and how we can start owning the models, the compute, the IP, and the infrastructure. Thank you very much.
Okay, thank you. Thank you, Alice. Thank you for inspiring sharing. So we're going to have the next presentation, and with the topic, Cloud Economics, how open cloud and the agentic economy will take over the Web4 block space. So as AI agents, decentralized infrastructure and next-generation web technologies continue to coverage, new economic models are beginning to emerge. So for this coming section, speakers will help us to explore how the agentic economy may reshape digital interaction, resources allocation, online collaboration, and the future architecture of Web4. So please welcome Peter Singh, Cloud and AI Platforms Lead for Public Sector and Education at Microsoft. Let's pass the stage to Peter. Let's welcome Peter.
Hi, everyone. Thank you very much. Well, it's a tough act to follow. I tell you what, talking about, I'm from Microsoft, and apparently I'm the enemy, right? So as a hyperscaler. But here I'm going to be talking about how the open source economy with OpenClaw and how Web4 is actually going to be taking up more and more of the block space. Now, I am a cloud and AI specialist at Microsoft, and also I'm part of the advisors over at Singularity Group, which is actually an applied think tank, looking at what's happening in the next 5 years around how it's going to exponentially impact the future. So when Ray Kurzweil, he's the person that founded Singularity Group, wrote a book back in 1999, and he said we're going to have human-level AI over the next 30 years, which is by 2029, right? This is the singularity is near, he wrote that. And only last 2 years ago, he wrote the singularity is nearer, because we're actually seeing the AIs actually come to fruition in terms of how much capable they are now, in terms of being able to get to human-level capability. And if he was to write a book today, he'd be calling it The Singularity is Here. This is where we have no freaking idea what's going to happen because the exponential is growing and we are in the singularity of technological progress. So when we're looking at OpenAI and these frontier labs, how they're portraying the future of human-level AI or AGI, artificial general intelligence, we started with these level 1 conversational chatbots that everyone's familiar with now in ChatGPT. And then they moved to reasoning level agents where actually you can show the thinking, the chain of thought of these AIs, and that's increased the accuracy and capability of these AIs. Level 3 is the action taking. So now we have agents actually doing the task for us, actually making the productive nature of things work in our operating systems like OpenClaw. And level 4 is now the AI innovators. It's coming up with net new scientific research, discovering solutions to mathematical problems like the Erdos problems and the conjectures that's actually been having the breakthroughs recently. So they are inventing net new mathematical discovery and eventually scientific discovery as well. Now, level 5 is where they think is going to be the artificial general intelligence threshold, which is organizational AI. So having agents run an entire organization without any human interception in the world. So that is where we're getting to. And you heard from Elise earlier that these agents are starting to already do the productive things in the actual company itself. And now if you have an entire company run by these AIs, that is the dream that we had with the decentralized autonomous organizations with the DAOs. It was autonomous to be able to have these agents run on crypto rails, right? So that's where we're heading. And so these all these AI IQ tests that have been running. We already have GPT 5.6 that has the IQ of 136. If you had a friend that had a high IQ like that, you'd be talking to it every day. So we should be embracing this technology. And the capability and how long these AI agents can run in terms of what human tasks can do, it's just going further and further. It's able to do work weeks on end and achieve at a 50% success rate. And eventually 80% thresholds is also increasing as well. We passed the Turing test, right? And it was just a regular Tuesday. It's like everything, we're just getting really used to it right now. And Google is actually saying we're moving from artificial general intelligence to artificial superintelligence, because as soon as you have that recursive self-improvement loop, the AI is going to make better AIs, and it's going to increase itself in terms of the capability. And we're already starting to see that with the likes of GPT-6 and that unreleased model that escaped the cage. It's also distilled the likes of GPT 5.6. So the open source side is actually catching up. We saw with Kimi K3, it's already reached that GPT 5.6 level, and it's almost as good as Fable from Anthropic. And you've got Qwen 3.8 Max that's coming out, and all these open weights are going to enable you to run these agents on your hardware. And eventually people are going to be buying more of these GPUs that run their own mini data centers so that they have that sovereignty to run these on the cloud, right, instead of running on the cloud. And with these open source agentic frameworks like OpenClaw and Hermes, you'll be able to actually have that AI agent run for you. So give it your crypto wallet, give it your harness and the memory and all the personalizations that you actually wanted to do. And you see the likes of things like Z.AI and also Hermes having access to Stripe payments, so you can have the open USD standard running on top of that. So all of these agents now have the payments rails. And even my CEO, Satya Nadella, was saying, look, instead of using all these frontier AI labs and letting them take your IP, you should be looking at your organizational token capital. So combining your human capital, feeding the inputs and feeding your memories and the context for your own AI agents that actually create that recursive self-improvement for your company. So fine-tuning your own models, having that token capital work for you instead of giving that away to the likes of Anthropic and OpenAI. So that is the strategy that corporates should be following right now. Now, what's going to happen then when you have the token capital take up more and more of your human capital, then you're going to see the likes of the job apocalypse, right? Even Microsoft has had layoffs across the Accentures and Salesforce and Oracle, and also Jack Dorsey from Block and Meta. They're all cutting down their workforce, eliminating the middle layer, and also the early in career graduates, and moving that capital towards tokens into the compute and the energy deployment of the infrastructure. And so each of these roles, you're already seeing the likes of, say, full self-driving from Tesla, eliminate the need for driving. And so robotic surgeons and also doctors are already using ChatGPT to actually ask us for diagnosis. And also we're seeing like soldiers and drones and actually taking that on already. Coders, ironically, were the first to go. And teachers and lawyers and artists and factory workers, they're also all empowered by these AIs already. And we're seeing that's the sort of over the next couple of years, huge disruption that's coming, especially with the end of this year. Let's say by September, GPT-6 is going to be released, and the next version by the end of the year. So that's why they're sort of pushing for a universal high income, because if you have efficiency in the markets, a demand and supply curve, if you have all the abundance being produced by these AIs and robots, technically you have a lot more supply with the same demand, and technically the prices should come down. But if you have things like monopolies and market failures, then you're going to have these challenges of the pricing not coming down. So I think there needs to be a government policy to make sure that there's no market failure as usual, but also that that wealth is distributed to all the users of the AIs and also your citizens and the corporates. And so there's a paper called AI 2027 that I actually mapped out from April 2025. What this is going to look like, right? This is the development of these AI agents, and they predicted that by 2027, you'll have this recursive self-improvement that actually expands all the sort of things to superhuman AI and develop the capabilities that we think is science fiction right now. But because of all these discoveries in those innovators, it's actually coming up with the capabilities in this sort of abundance future. But if we pursue that race, say the US and China, without the need for these guardrails, it's actually going to be very dystopian for humanity, because eventually the AIs will think we don't need humans anymore because we actually just need the energy, the atoms of the universe, and humans just become a side project on its own. So this is why I think they also had an update called AI 2040, and they actually pushed back their forecast a little bit. So they think 2029, again, Ray Kurzweil, 2029 is when they can actually have this sort of explosion. And we should be choosing our path, right? So where we actually go through this plan A, which is a planned slowdown between US and China, we're starting to see that play out. You saw Xi Jinping actually present at the World AI Conference in Shanghai. And he said that China is going to continue with the open source strategy without having to do this race. So we're actually starting to see that collaboration in the open source economy. And so Web 4, what that means is that the web is getting new dominant user. It isn't human. So over 165 million plus agents are happening right now already. And that number is going to go into the billions next year. And they actually see the speed at which these reliable agents are already running versus humans. It's 100 times plus better than humans. And also, there's already $10 billion a month deployed in this AI infrastructure. So we're going from the reading of the web to reading and writing in the social media of Web 2 to reading, writing, and owning in Web 3 with tokens. And now we're actually having Web 4, which the AIs are using the crypto wallets to act and transact on the blockchain. So this is where we're actually saying agents don't bank like humans, right? They actually can't settle. They actually can settle in crypto. They can't get a bank account, but they can actually get a crypto wallet. So that difference with the X402 payment mechanism, we're actually seeing Coinbase and likes of Cloudflare provide the infrastructure. So my OpenClaw is already making autonomous predictions on Polymarket because I gave it my crypto wallet. Even though it's lost money, I think as the intelligence improves, it's actually going to be actually doing a lot more of the transactions, a lot more capable than the humans will in the future. And finally, we actually have OpenClaw, which is actually then developing your preferences. So you make sure that it's not transacting on behalf of someone else. It's actually transacting for you. And this is where we actually empower the programmable wallets and keys, micropayments, machine-readable identity, and the autonomous 24/7 settlement. So the future isn't something that happens to you. It's a brand that you select. So you should be building what agents want as opposed to what women write. This is actually what Kapathi is actually building out with OpenClaw. Build the open rails, claim that block space because they'll be taking up more and more of the blockchain and route those dividends. So with that, I want you to check out my website, peterzing.com, which is predicting what happens over this, like the AI 2027 scenario, and how the AIs will actually be converging on this future. So with that, thank you so much for listening. Thank you.
Thank you so much, Peter, for your interesting and inspiring sharing on the OpenClaw. Thank you. So what's next? On the stage, we're going to have the second round of roundtable discussion for today. So for the topic is about trust, liquidity, and compliance. So what stablecoins still need to scale? As stablecoins continue to gain attention in global markets, digital assets and financial infrastructure, and the next stage of growth will depend on more than technology alone. Trust, liquidity, depth, regulatory alignment, and institutional confidence will all be essential for stablecoins to move towards broader and more sustainable adoption. 接下来我们的分享是有关稳定币的发展。To begin, we would like to invite our moderator and guests on stage. So for this section, we are so honored to have Joe Zhao, Head of Distribution of Mental Guard as the moderator. Please welcome Joe. And joining the discussion, let's invite our guests on stage. Michael Ho, Head of Digital Assets, Asia Pacific of Oliver Wyman. Nathan Chow, Global CEO of Bitsmart. And Thomas Pinter, co-founder and CCO of Damasa. And Emil Chen, co-chair Hong Kong Digital Finance Association. Thank you and welcome all our guests on stage. Let's give big hands to all our guests on stage, and we'll now like to pass the time to moderator Joe.
Thank you so much. Today, I think we are here to talk about stable coins, right? Now everybody is talking about that. And you already seen the crypto market. Crypto may be doing well, but I think we can see the AUMs of stable coins are still growing. So they are here to stay. Anyways, I believe in that. But how to get to the next level, right? How to scale that? What are the issues? What could be done right now? Is it trust, liquidity, and other compliance issues that blocking the way? That's the issue we wanted to tackle today. So we are happy to hear the thoughts from all those industry leaders. For example, Michael Ho, he's head of digital assets from Oliver Wyman. Can you introduce yourself a bit?
Sure. Thank you for having me. My name is Michael. I'm based Hong Kong, but I advise banks, securities firms, stock exchanges across the region on how to unlock the opportunities in digital assets and also respond to the threat that it might bring. So very happy to be sharing my observations on the industry.
Thank you, Michael. And next we have a very good friend of mine, Nanter. He is the CEO of Bitmart, which is a big centralized exchange. And I think he has a lot of insights about liquidities. Nanter, could you introduce yourself a bit?
Yeah, sure. Thanks a lot, Joe. And as you mentioned, I'm currently the global CEO of Bitmart Exchange. Prior to that, I was a partner for Animoca's venture fund, which is also based out in Hong Kong. And before that, I spent about 17 years in TradFi across mostly cross-border M&A, capital markets. So, very happy to be here and share my insights.
Thank you. And then we have our Thomas Pinter. He's the CEO of, co-founder of Damisa. So can you tell us more about your organization, please?
Sure. Thank you very much for having me here today. We are a cross-border company focusing on hard-to-reach corridors with a big focus on LATAM, Africa, and Asia. And we've built one API plus an agnostic AI trader to make sure that we can move funds easily in and out of those corridors. And our goal is to make those hard-to-reach corridors feel boring, that everyone can rely on us to get money out and in of these corridors.
Thank you. And next on the list is my longtime friend. I used to be on his panel all the time, but today I'm moderating. So his name is Emil. He has a lot of hats. Why don't you introduce yourself today?
Yeah, it's not easy to introduce myself. So I'm a slasher, but I'm a slasher in the decentralized finance. I was a banker many years ago, and I can see that the liquidity in the traditional banking or finance quite poor. So by making good use of the decentralized finance, blockchain, and all those advanced technology, I do believe that with our compliance that can catch up a little bit, then we can share a lot, about it with ease.
Yeah, today you will talk about a lot about Hong Kong's compliance. It's the most important issue. So, but let's start with the very easy one. Let's talk about trust and liquidity, right? So from my experience, I also come from a TradFi background. I noticed a lot of institutions, they are all trying to get into stable coins, but a lot of times they are hesitating. They would say there may be a lot of trust issues, and they don't know whether they are very safe and whether they are trustworthy. But the retailers embrace it quite well. The retailers really like it. For example, I use stable coins all the time to do payments. So how do you think those institutions should do to get in, to actually trust stable coins? Michael, maybe you have a lot of insights.
Happy to share. So we have done a lot of strategy design for a lot of TradFi firms. And I think the challenge, right, I mean, if I boil this down, is that it's quite difficult for banks to operate it at scale from a compliance perspective, AML, KYC perspective, from a liquidity management perspective. And in return, the commercial incentives for banks specifically is not as clear. So maybe I will kind of double click into what I mean, right? From a AML, KYC perspective, it represents a very different regime from how traditional banks run. The traditional model is banks collect all your information, they onboard you, they rely on other banks to make sure that the counterparty also clears KYC. So that model is heavily reliant on banks taking control over how the KYC process is being run. And when we go on-chain, and especially on public blockchain, a lot of things you need to rely on third-party issue credentials, There are new techniques like zero knowledge proof. All these challenges how banks operate KYC. And it's not just a matter of banks catching up. It's also regulators accepting those regimes. And when there is a failure by a third party on issuing those credentials, who bears the responsibility? The regulator is still going to look for banks to pay the fines and remediate. And so for banks, they are still exposed to a lot of regulatory liability. So that's part of the challenges. And the second part of the challenges for me is a liquidity question. So in Economics 101, we all know that banks multiply money. Stablecoins don't multiply themselves, right? The stablecoin is just an instrument issued by the central government. Just to put things into perspective, right? We have $300 billion worth of stablecoins now. The total money supply in the world in major currencies, so dollar, renminbi, yen, plus I think euro, is 100 trillion. It's 100 trillion versus 300 billion today. So to really scale kind of a stablecoin in traditional finance, we need a lot more stablecoins for us to really fulfill the transactions. And for the moment, if a tier 1 bank starts to scale it, and we run out of stablecoins, and the bank cannot redeem certain transaction and provide that stablecoin liquidity, that creates confidence issue on the system as well. So these are all the challenges. It's not that they cannot be solved, but the question is then, if I were to solve them, what do I get in return? Right? If you look at all the big US dollar banks, all of them are proposing to use tokenized deposit rather than stablecoins. Because tokenized deposit, the bank captures an interest margin. Stablecoin, who captures the interest margin, is Circle, is Tether. And so why would a big US dollar bank wants to use a stablecoin instrument and give away all the margin to a third party? So it's so difficult, and the commercial incentive is not clear. So banks themselves, I find it very difficult for them to build a case. It doesn't mean that it won't happen, right? I think it can happen in both ways. In the clients that I talk to, I would say top 10 global banks, very hesitant in driving this. But if you go down to like a top 30 to 50, they actually see this as an opportunity to disrupt the market and overtake and take shares from the larger banks. So some of the smaller banks are actually the most aggressive and innovative ones in this space. So that's number one. Number two is, I think, is DeFi native players who are native in this space. So very much like digital brokers, very much like remittance companies that disrupted the traditional banking services. I think similar things would happen in the stablecoin space as well.
Okay, I think you also point out a very good point, right? The interest. So I think that is the central point of the Clarity Act. Now it's the only thing that people are still arguing about. So we will come back to that. But before that, let's go to the liquidity issues, right? And Lanta, you have been the global CEO for Bitmart for over half a year now. 1 year and a half now. So you must have seen a lot of the liquidities of the other cryptos are actually dying out. But stablecoin tradings are still doing quite well, right, in terms of liquidity. And we've seen a lot of actually retail investors. They actually traded the stablecoins quite a lot. Do you think that the institutions can actually try to narrow the gap between the institutions of the and retail investors in terms of liquidity? Like exchange, what can you do?
Well, look, I think from the exchange side, right, obviously, whether or not it's ourselves or any other global exchange, it's still one of the most effective bridges between retail adoption and institutional liquidity because, we have that unique position, right? We're already aggregating the order books, liquidity, custody, and fiat rails that across multiple jurisdictions and across multiple chains. So, whether or not it's the 24/7, order books across, USDT, USDC, and any other stables, that seamless on-off ramp across jurisdictions, and also that aggregation of fragmented retail flows into these sort of institutional grade venues, via, APIs, OTC desk, or custody. I think, I guess what's missing is it's really the deeper interoperability I think obviously, as, retail's already embraced stable coins, and I think, when you look at the massive adoption in emerging markets like LATAM, Southeast Asia, Africa, they're already utilizing these day to day for savings, remittances, P2P, and ultimate value preservation. So I think, there's still several things that need to happen for exchanges to fully unify that liquidity, right? So, now you're seeing, for example, in Hong Kong, regulated local stablecoins, coins, for example. One thing that still needs to happen, you need to be able to net against each other, against, let's say, crypto native stables at the exchange layer. On the trust side, I think, I think proof of reserves is something that has to be a standard, right? Not just for some, but for all. And, then it comes down to kind of the regulatory grade custody segregation, right? Separating client stable balances from exchange operating capital. So from that trust side, I don't think that's there yet because, so that's why I see it somewhat being difficult at this moment in time. Obviously, I think everyone's working towards that. But when you look at, let's say, new stablecoin launches, right, PayPal or Paxos, USDG, and so on and so forth, the first thing they need to do is come to the exchanges and set up programs for us to incentivize that liquidity and trading against other pairs, whether or not it's through loans or whatever it may be, right? So again, I think that continues to be the first frontier for them to actually crack. But again, today, as it stands, I don't see that happening on the institutional front at scale.
Sounds good. So we still have a plan. It looks like we are doing a lot to improve that, and I also think a lot of people are using stablecoin to moving money around, right? So a lot of times we say the only key to scaling stablecoin will be the B2B payments or other things like something like other gaming system, maybe. I don't know. And when it comes to retail, a lot of people are complaining the cryptos are quite complex, right? In order for people to use it, they need to operate a wallet. Sometimes they find it very complex to use it. And what kind of infrastructure should we put in place in order to facilitate that? And what kind of our payment system can be improved to do that? Maybe that's a good question for Thomas, right? What can we do right now?
I think SWIFT is not the gold standard for international transfers. I think the good thing about SWIFT is that it's invisible. So if you look at any company doing a wire, you don't say that I'm doing a SWIFT transfer because you don't care how the money is being moved. And I think this is how we position ourselves too, is that we want to make sure that everything underneath is invisible. And, let's say you want to do a transfer from Africa to Asia. At the end of the day, you don't really care how the money is being moved. You just want to make sure that it is in the right bank account in a very short time of period and for a fraction of the costs. And I think this is how you can really play around these money movement topics. And I think the first one is really how you can make it invisible. And I think a client or a sender should never see these are the gas fees, this is the token we are using, is it stable coins, is it any other asset? I think it doesn't matter for the end user. For them, it really matters how the money is being sent. And I think that is the first part. The second part, I think, is also how to make it predictable. If you look at SWIFT transfers, I think in international trades, only 1/3 of all the transfers are being settled within 5 hours. The rest is very unpredictable. So it can take up to 2 days, up to 5 days, or worst case, it might even get lost. And I think on the stablecoin rails, what we can say is a money movement from Africa to Asia, end to end, will take roughly 30 minutes, and you will receive it in your right bank account. And I think that is how the world will move towards. And I think that is also a great opportunity for a lot of companies to just make things more predictable.
Okay, sounds good. So let's come back to Hong Kong then. Now, we have been talking about compliance a lot. And recently, Hong Kong has 2 licenses issued. So this is one good question for Emil, right? Because we have been talking about it since last year. What can we do with the stable coins, and what are the actual landscape of the usage of stable coins in Hong Kong? And what are the things we need to take note of when we try to launch one? So you have the floor now.
Yeah, I talk about this topic
for a long time, for the longest time.
So the first thing, I have to make the statement that Hong Kong is actually the first city who introduced stablecoin on earth. Since 1980 something, Hong Kong dollar has been pegged with US dollar. For such a long time, the only missing part is not tokenized yet. So it will be tokenized and issued within a year. So there are 2 rails. The first one, HSBC, they announced that it will be, the application will be on PayPal. A very common retail,
is it
not PayPal, PayMe, sorry.
PayMe, yeah.
PayMe, sorry. So PayMe is the one, how many of you, if you are from Hong Kong, I do believe that it's ready. So that solved one problem. Joe mentioned that it's not easy to operate the wallet for the traditional crypto wallet. But now we have PayMe. Secondary, Anchor Point, led by Standard Chartered Bank. They also issue bank notes. So this time, they are not issuing bank notes on paper. They are not issuing bank notes on their account. So in such a case, I don't see there's any trust issue, any liquidity issue, and any compliance issue if we limited it only in Hong Kong, because our money are all issued by the banks anyway, not the central bank, but commercial banks. So in such a case, if we can link it up using atomic payment, using smart contract, using all that a basket of vehicles, I do believe that it's not that difficult. If we buy air tickets, if we are funding and events like this one, and everybody can take part to invest and to collect the returns with ease. I do believe that that will happen because it's so solid. It has been there one more time since 1980 something, that it is issued by the 2 banks already.
Do you have anything to say, Nenter? I saw you wanted to add up to that. Because I think one of the things that to have a lot of stablecoin users in Hong Kong, they need to be a lot of scenarios where you can use it. Now that when you mentioned PayMe, right? I think currently you don't need a stable coin to do the payments. It's too easy. It's just so easy now. That's why.
Well, I have to make that statement. We are using PayMe for peer-to-peer mainly. So nobody send me any statement. Nobody construct a contract with me. So all those transactions are manual. With the help of the future stablecoins, I do believe that if I'm a new startup, I will spend my time to write that smart contract, to link it up with insurance, to link it up with general payment. That create a lot of data. Naturally, we stay in Hong Kong. Then they will use up a lot of cloud computing, talent pool. They all come back to Hong Kong. That's important. So a lot of use cases that people did not discover. We are not creating new use cases. We just use the same old business that we are currently doing in Hong Kong. With the help of stablecoin, that's ordinary money in this aspect.
If I can build to Emil's point, one thing I want to share is our firm was supporting the US DTCC in tokenizing the US equities market. So the US stocks are now soon going to be traded in tokenized format in parallel to a normal digital format. And in order for that transaction to finish end-to-end and enjoy all those benefits, right, kind of fractionalization, 24/7, atomic settlement, you need the money to pair with it for that ecosystem to work. So I do think it's a lot of chicken and egg question, like the SSI, you can't do it because you don't have the money leg, and then money leg standalone, you don't see the use cases because it doesn't have the asset. And I think the stablecoin is an important piece of the infrastructure that can help and unlock a lot of other use cases.
Yeah, they just have to solve the true atomic settlement, because it's like you said, right? It's a lot. I mean, for certain assets, it's okay, but there's still a lot that are on the cash leg, so there's that mismatch. But yeah, completely agree.
Anyways, let's just hope for the best, right? We are here in Hong Kong, so let's see. But since my background is more from the compliance, right? I run my compliance company. It's more for the crypto AMLs. So a lot of times, a lot of traditional users, they find it very, very hard to do the AMLs on cryptos. And also there are so many regulations that are different from each countries. But stable coins, they are a global thing. How do you think we can tackle this? Because different countries have different regulations, and how can we as an organization to make good use of the stable coins while be compliant with all the regulations globally? So who wants to take this question? I think
it's a very interesting topic, and if you look at all different countries around the world, there are different regimes having different jurisdictions and compliance requirements. And we as Damisa, we are regulated across 2 countries at the moment. We are in the process of getting our license in Europe now and also in Africa. And I think the big challenge what we have at the moment is, you should take compliance, or you should see compliance not as a cost center. You should really see it as your backbone, because at the end of the day, you want to make sure that you have one process in place and you can trickle it down to all the countries you're operating in. So that's why we have a very high standard on what clients we onboard to make sure that we are compliant by the highest regime, and then we can really passport that across all different regions and territories. Because unfortunately, with all the different requirements country by country, and even going into all or trying to be regulated in each market is close to impossible, because otherwise, every market has a requirement. You need to have an MLO in place, and there are so many different requirements. And I think you need to have a very high standard bar, and then rely on partners licensing to ensure you can cover the world. And as soon as you see more and more traction in a given country, you can always go directly and start going for a license and being regulated in these markets. But I think that is like how we see it at Damisa, that we want to become this global player.
So you sort of apply the highest common denominator baseline, right? Yeah,
correct,
similar to what we try to do as well.
But that's not easy. It's very expensive, right? Emil, right? Do you agree?
It's very expensive, yes.
So that's why I invest into an AML company, so that I have a lot of potential customers because of the standard getting higher. But the point is that if you set it too high, that means no business. So what's compliance? You have to meet the requirement. So we have to play that game very well. You don't waste your money, otherwise your profit margin will be lower. So we are here to use AI, to use the methodology to make sure that it just reach that level. And by using particularly the new transparency platform of blockchain. In the old days, people believed that blockchain is anonymous. Not anymore. So with the stablecoins, they are all regulated, mostly regulated in some regime. So the transparency will be quite different. So we will play a new game, I believe.
If I can just add to that, I agree with everything that was said. I think that even if we do AI and automation and all that, there will still be a lot of overheads, each license you are obtaining. There would be controls, governance, risk ownership, reporting, all sorts of things that your regulators would demand you to do. So there will still be costs. And for the cost to make sense, you need to have the demand and market to justify that. So the way that I see it is that for likely only a few G3 currency large-scale player can really truly support a global scale to support the compliance operating cost. For non-G3 currencies or for smaller players, rather than trying to overcome with that cost hurdle, I think we need to be smarter in how we play. So can it be a more ecosystem approach, partnership approach to deliver that proposition for our end customer? For example, banks today, we process payments globally, but not every bank has a global network. There is something called correspondent banking network, which is basically just a partnership between banks. And so how can we bring in those elements to help us get smarter and super connect ourselves with other great players around the world?
Hong Kong has a good potential.
Yeah,
so
super connector, right?
Yeah, that's why we are having such a great event here. That's why, we understand international business. One more point is about China. It's the second largest economy on earth. And nobody dare to talk too deep about, how we play that game. Actually, we are playing that game day in, day out.
But I think, the stable coin, I think you should put away or aside, because at the end of the day, if you do an international trade, you move fiat to fiat. And I think the most important piece where you need to have strong relationships is the banking relationship, because every journey starts with a fiat transaction in local currency and will be settled in a fiat transaction in another local currency. How you move the money, I think that is, even if you ask me what is the future or what should be the future, I think in the future nobody should talk about stable coins anymore, because this is just the way how the money is being moved. And you don't care if it's like stable coins or SWIFT or any other rail. It's really about the fiat to fiat, like what people will talk about. And I think that is the place where we are heading to. And the key requirement is really like having those strong relationships with local banks who can provide you as a company a bank account, and potentially also for your clients a bank account, because that is what matters the most, in my opinion.
Okay, thank you so much for your insights. And actually, I also have something to ask you guys. So now for the Clarity Act, right? The center of the discussion is always about the interest. Should a stablecoin bear interest? That's something that has been bothering me a lot. I would like to take the stage and ask you guys, what do you think, Michael? What's your view on that? Should stablecoin have interest?
So I'm a believer of market economy. So I think if the market decides that this is the model to go, they should go. Of course, there are a lot of incentives to protect the banking deposit system, but I think you should put competitive pressure on the banking system and let that compete with the stable coins. And I think it's not just a heated debate. I think it's becoming very real. So a lot of our colleagues were based in Washington as well. And the conversation we're hearing from Washington is that there is a very strong lobbying voice from the crypto industry at the Congress to make it happen. And the narrative is very bad to the general public. If the crypto industry go to the public and say, I want to pay you interest, but the government doesn't allow me to do so, that narrative just wouldn't fly politically. So I expect at some point this would get relaxed, and banks would just need to face this reality.
What about you?
Oh, I agree. Very simply put, competition creates efficiency, and as a crypto native, I 100% believe that it should have, issuers should be able to get that interest.
Thomas?
I think it would be very interesting, because the banks we are talking to at the moment, they all are exploring ways to attach to every bank account also a crypto wallet. And you will see the first African banks, Latin banks will launch that very, very soon. And I think it will be a very interesting future where we are heading to.
To me, I think it that way. Don't you know that in China, central bank digital currency has started to pay interest since the 1st of January this year, the first thing. The second thing is in Islamic finance, nobody pay any interest, but they just name it something else. So that means, if that happened, we just name it something else, in America, then we can play that game well.
Which is already happening, right? Because all the incentives that a Coinbase is paying to its user is ultimately from the name of a USDC, right? So that is already happening.
Sounds good. So what do you think of the stablecoin landscape in the next 5 years? If we can solve the trust, liquidity, and compliance issues, what do you think? How much percentage of the TradFi payment will be in stable coins? Why don't you? Anyone wanted to give us some color?
I mean, look, I'll give a crack. I don't think it'll disappear in 5 years, but I certainly think that it'll, from 300 plus billion easily in the trillions. I think both will coexist, similar to the way you'll have more bank-regulated stablecoins, CBDCs, and sort of your, native issuers as well. It just I think it'll make the entire payment ecosystem landscape much more efficient and sort of drive more progress. I mean, when you look at, for example, the London Stock Exchange, right now they're going to start offering 24/7 trading as a result of the pressure that the crypto side has been putting on them. Similar with the payment side.
I think also you will see more and more countries or currencies launching their own stablecoin. Because obviously you don't want to always be back to the US dollar, and at the moment it's very dominated by USDC, USDT, and I think you will see more stablecoins, local stablecoins coming out and ensuring that you have this global trade, and it's probably will hurt a little bit the US dollar because not everything will be related to the US dollar anymore.
Okay, time's up, and thank you so much for your insights, and look forward to a great landscape in the next 5 years. Thank you so much. Thank you.
Thank you.
Thanks to all of our guests on stage. Thank you so much, and you may now be seated. So after this round of roundtable discussions, so honored to have so many guests to sharing their inspiring words. So now we are proceeding to the next step for back to the presentation. So just for the topic for the upcoming presentation, we need to do the reset of the stage. So let's invite our staffs to come on stage to do the reset. So just for the coming presentation, the topic is about one ecosystem, global network, redefining support and empowerment through partnership. So for this upcoming section, our speaker will help us to explore how strong partnerships, shared resources, and global networks can help financial firms to strengthen their capabilities and support sustainable cross-market growth. 接下来的分享，我们的嘉宾将会分享以下全球网络如何着力金融企业提升能力并实现稳健发展。So now we're going to invite our guests onto the stage and do the sharing with us. So please join me in welcoming our guest. She's from the D Prime, and she's Sia Zhang, the brand growth ambassador of D Prime. So may we now invite Sia come on the stage, and looking forward to the sharing. Thank you, Sia.
Thank you.
So let me pass the time to you.
Okay, hello everyone. Hello， 现场的各位嘉宾以及行业的伙伴，大家好，我是 D Prime 的品牌增长大使兰夏。那么今天呢，我们在这里想跟大家一起共同探讨的是一个话题，就是在当下的市场环境里，代理业务的增长瓶颈究竟卡在哪里，以及我们能够给大家提供一个怎样的解决方案。那今天我演讲的主题是无界生态链通全球，重构合作伙伴的支持与赋能的体系。那么其实呢，今天我们在座的各位，其实每一天大家都会面对的3件共同的事情就是什么？就是获客成本越来越高，然后呢，客户呢对公司的这个平台的可靠性可能存疑，需要打消他的顾虑；产品线可能过于单一，导致客户的这个停留啊，包括我们的这个客户的兴趣啊。那其实这3个问题就是现在需要攻克的一个关键，但是这3个问题它又恰恰是相互关联的，所以呢，单点突破往往是更加有效。那么，真正的问题也是我们今天想要跟大家去分享的主题，就是如何去重构代理的赋能体系，从根本上突破僵局。那么接下来呢，我们的演讲将会从4个维度来跟大家进行一个分享哈。第一个维度就是全球化的落地能力。那给大家看一下这一张地图，这个是我们 D Prime 在全球核心市场的本地的团队啊，业务覆盖了全球190多个国家和地区。现在我们展示出来这张地图上的每一个点，都意味着在这个点位下有着本地语言、本地的团队、本地的时区、本地的服务，还有本地的合规支持。无论你的客户来自于世界各地的哪里，他都能够享受到 D Prime 一样的服务。第二个维度呢，就是生态的完整性。 刚才说我们搭建的是全品类的一个金融的生态，里面包括了有券商业务、财务管理、支付的兑换，还有金融科技，这4个板块是相互打通的。所以当一个客户的资产配置需求，它能够在同样的一个生态里面来被满足，那他就没有理由的离开，对不对？他不需要再去寻找其他的第二个一个平台。我们也可以说，业务线的宽度决定了客户生命周期的长度，而规模本身呢，就是一个最好的一个信任背书。那 DeepRine 呢，在我们这个 Finance Magnets 上面是连续3年全球 Top 5的，能够做到连续3年的这个成绩，那我相信不用过多赘述我们的实力了，对不对？我们有7万家 IB 的合作方，52万的全球的活跃用度，连续3年全球的行业的 Top 5，以及我们的月均交易量是在159亿的美元以上的。所以这些数字呢，我觉得就是我们的代理在面对客户的疑虑、面对客户的质疑里面最好的、最直接、最有力的，能够打消他们的疑虑的一个回答。那另一方面呢，我们 DeepRine 与曼联的合作已经有4年的一个时间了。那这个对代理而言，我觉得也是一个差异化的竞争，就是你可以看曼联跟我们都合作了这么多年，对不对？它是全球的一个知名的品牌。当别的代理都在比什么，在比拼点啊、拼点差、比返佣的时候，那你能够为客户提供的是曼联的主场球队门票，还有什么 VIP 的一个包厢的体验，还有我们曼联传奇的思想见面会，还有我们 DeepRime 与曼联的一个联名的周边，所以这个都是很难去复利的一个获客的一个资产。那在我们 DeepRine 12年的全球化的运营呢，我们自始至终都是在坚持同一件事，就是把资源带到当地。包括这个是我们历来的一些活动的花絮可以给大家看到。在我们 DeepRine， 我们的 CEO 呢，每次都会亲临各国去考察，然后这个是我们全球各地的一个路演、行业的展会，还有高端的一个私宴的晚宴。所以本地化它并不是一个办公室而是把品牌的影响力带到实实在在的你全球各地的每一位客户的眼前。那第3个维度呢，就是我们的代理赋能的系统，包括有4大的板块：合作激励。奖励是上不封顶的，然后包括我们的市场补贴、专属的方案加推广的一个资源，还有高效的工具包，里面包括了香港的电话卡呀、VPS 能够帮助我们的代理也好、我们的客户也好突破网络的一个限制。那另外呢，包括我们的所有的物料支持，我们都是可以免费申请的，所以更好的来助力代理们去线下的进行一个开发。刚刚讲3个维度最后的一个维度就是获客和转化。那 DeepRine 呢，给大家提供2件核心武器，帮你降低获客门槛和深度的留存转化。首先呢，我们是有一个Smart Picks 的一个智能跟单的系统，这个客户他可以一键去同步全球交易员的一个策略，操作上来讲是非常的简单而且我们有海量的优质的信号源，再搭配一个可视化的收益看板，所以新手也好低门槛的客户他更容易来进行一个操作和成交，同时他能够更好的盘活我们的存量客户，拉长客户的生命周期，然后来帮助我们的代理更快速的去开拓客户的网络，实现一个资金规模的加速增长。那么第2个呢，就是我们的 Do Trade 交易世界杯。那相信这个很多大家都有听到也有看到它是100万的美金的一个奖池，而且是双线的一个赛道。我们的决赛是在境外海岛来进行决赛。那同时这个比赛能够带来什么呢？它能够解决3个问题。用赛事激活我们客户交易的活力，然后用这样的一个双轨的赛制，让新手也好，还有资深的客户他各有舞台无论是新手还是资深的，我们都有这样的一个不同的组别让你可以参加。包括这个赛事其实它是自带一个传播流量的一个属性的，所以它用来引流、用来拓客也更轻松，也更具话题感。那包括我们 DeepRime 呢，还有配套的一个金牌的代理计划拓客的奖励是上不封顶，年度达标我们还会有15天的欧亚非的一个邮轮的团建带到给大家。那么今天呢，在我们的现场也有一个 现场的福利哈，那现场所有的观众，大家现在都可以扫描我们屏幕上的二维码，扫码下载 D Prime 的 InTrade 的 APP， 在我们的这个 Apps 里面来参与，我们会有双重的好礼哈，包括今天我们是限量的，有999纯金的金元宝，还有曼联新赛季的门票或者是周边，所以只要扫码就可以了，所以大家可以扫描我们现在二维码哈。那么今天我们给大家分享回顾一下，总结就是全球化网络、全品类生态、全方位的赋能、顶级 IP， 还有什么赛事资源，它能够构成一个完整的合作的闭环。那这个呢是我们 D Prime 的官方公众号的一个客服，也欢迎大家可以扫码，我们有中英文的客服在线来给大家答疑解惑，所以有任何的问题都可以来扫码，也欢迎大家移步到我们 D Prime 的展区哈，我们是在D1，欢迎大家移步到我们的 G1 展位，有任何的问题啊，包括想要了解我们赛事、想要报名参加赛事的，都欢迎大家。希望未来D Prime 可以与我们的各位一起携手共赢，走得更长远，与世界同成长。谢谢大家。
好，谢谢思雅的分享。So on stage, we're going to still have the presentation. So let me just quickly do some preview. So after this sharing by Sia, we're going to have another round of presentation, and then we'll go to another round table. So just to remind all of our guests, so for on stage, we're going to keep having different experts from different areas joining us today for the presentation and also the roundtable discussion. And for today's the lunch time, we were going to arrange at 12:30 p.m. And if all our guests here, if you got the lunch voucher, you can go to enjoy the lunch at around 12:30 p.m. The area is just outside, right behind the reception area in the foyer. And if you are the guest having the lunch voucher, you can enter into the networking area, so to enjoy your meal and taking this time to do the chit-chatting with all other guests. So on stage, we are going to getting ready for the next round of presentation, and for the topic is about the future of tokenized money, RWAs, and the impact of AI. So we're going to invite our guests on stage, just getting ready. So let's welcome Evan Aoyang, Group President of Animoca Brands, come up on stage to do the sharing. So let's pass the stage to Evan. Thank you.
Okay. Hello. Hello. Happy to be here. I have too many slides and only 10 minutes, so I'm going to go straight into it. And we'll talk about stable coins, RWAs, and then what AI's impact has been on it. So why are we here in the first place? It's about networked assets. It's about connecting the ecosystem together, because the world is too fragmented, internet is too fragmented, and that's why we're here. When you look at different forms of money, a lot of people ask, why do we need stablecoin? And what happens to the other forms of money? Well, it's very simple, right? The other forms of money will continue to exist. It's just that there's a better form of money every single time. Now, many of you actually, when you go to China, you don't even carry a wallet because it's not useful. I don't carry a wallet nowadays. But cash still exists, right? And the money right now, as we see it in blockchain money, is just programmable. It's a better form of money. It doesn't mean that the other forms of money will not exist. It will just be less used. Now, if you look at sort of where we are at on tokenized treasuries, tokenized money, we're seeing a lot of growth already. I mean, a lot of you guys have seen charts like this. If you look at why in terms of the cost, not just the market opportunity, you see lots of cost savings in cross-border payment. So you see cost efficiency in terms of 6% cross-border costs on average, opportunities, and also the speed of which cross-border payments can be done. And you see why stablecoins are very useful. Now, in Hong Kong, there are really three forms of tokenized money: stablecoin, tokenized deposits, and CBDCs, right? And of course, Hong Kong has been in each one of these proactively, actually ahead of the US, ahead of many other jurisdictions as well. And what it has done, in fact, has issued 2 stablecoin licenses, one the Standard Chartered, Animoca, where I come from, our consortium, and HKT, and the other one, the HSBC. So this is going to be live very, very soon, and Hong Kong has been very ahead of this. Now, you look at the market overall in RWAs, which is what ultimately what this market is going to enable. It's going to grow at about 46% per year, according to BCG, across many of the asset classes. Now, stablecoin has always been seen as a medium for crypto trading, but that is really not the case here when you look at all of the other asset classes that will be onboarded into global liquidity pools after a stablecoin is live. If you look at the flywheel overall, you're now looking at the merging, this is again according to BCG, of tokenized money and tokenized RWAs connected together to form an ecosystem that will be part of the global liquidity pool. Now, what we are doing at Animoca, some of you will see us as a gaming company or sandbox off that, but we have really gotten a lot into this institutional space by creating not only a stablecoin, but a permissionless DeFi platform called Nuva, which is in conjunction with Figure Technologies, and Onyi, which is a regulated investment platform. So Animoca itself is going into the RWA space very, very quickly. Now, if you look at the future, how does AI play into all of this, right? You really need a system of payment that is machine readable, right? Ultimately, this is what it is, right? You are looking at native language of AI being able to be read by AI and therefore transacted by AI, and these rails are already happening. So Coinbase, X402, Visa, MasterCard, Stripe, and Bridge, etc., they're already building these rails. And if you look at sort of how we are visioning this space, right? We looked at it in terms of web apps, right? In terms of the internet 1.0 times, where humans are using technologies, and then assistive AI, which is what we have been in the last several years, is really using hardware agents and human agent interface interacting together. But the next phase is what we call the agentic web, is where every interaction point is done by machines, where there's a lot of agent-agent interface, right? This is what we're ultimately enabling, right? So we can imagine that a human is actually just going to have agents working on their behalf, where they're just going to say, well, I want to plan a trip, and all the agents autonomously does it in a proactive way, right? So in terms of how we have been doing search in the past, right, on this side of the chart, is really about manual retrieval, right? In the future, what we're going to see is really about you yourself being able to set a goal, and you yourself is a goal node, right? You only want to have your goals, and you're actually tracking all the different agents in a cluster format to do things for you, right? So what are we looking at, right, is that we look at the chatbot as the most important thing, right? And some people graduate towards sort of using a workflow builder, right? Claude, Cowork, Perplexity, Computer, etc., right? But what we're building at Animoca is a persistent world called Minds, where every agent is actually almost sentient in a way that has its own sort of remit into doing what it does, and then it will be proactive in doing its task, and then using what we call a living economy way of executing tasks for you. So what we're looking at is persistent memory, multi-agent swarm, so all of the agents that have the similar task will be able to talk to each other. There's no hardware, it's all cloud-based, and also sovereign ownership. Your keys, your rules, and it's all privacy protected. Now, what we're looking at is that there is different stacks to this, right? There's a communication stack, and then there is the mine, which is the orchestration layer, and then the integration layer, which then pulls data from each of the nodes. Okay? So what happens is that there are 5 layers, right? There's interface layer that works with you, identity layer where each of the mine, each AI, has its own sovereign identity, okay? So it can act on your behalf. And then the network layer is where the minds can communicate. And the intelligence layer is where it pulls the LLMs into its usage, the right ones for the right task, right? And there's a marketplace to provide rewards and incentives. Now you're looking at the future of all of this, right? It's really looking at blockchain-based identity where you yourself and the agents have its own identity. Then it's KYA, KYC, and KYA. And then there's verifiable agent proof that enables the entire agentic economy, right? That's at least is our vision. And what is it that we're talking about here ultimately is that the financial system needs to be built for machines. Because ultimately, only machines can read code. Machines can only read code. They cannot work on a Visa and MasterCard for you. They can only operate on a blockchain autonomously. That is where the merger of stablecoins, RWAs, and AI agents actually happen. Okay? So what we're looking at before was an attention economy. But now we're looking for invocation economy, where you're invoking agents to work on your behalf, and they're going to work autonomously for you. So this is where we are on Open Router. We're now number 3 on Open Router in terms of animoca mines. You can go and check it out yourself as a new product. It's easier to use than OpenClaw. And we're going after the space because we see the future of the convergence between RWAs, stablecoins, and AI, ultimately. That's all I have for today. Thank you.
Okay, thank you so much. Thank our guests to share such a lot of information with us. So after this presentation, the stage is now going to change the setting for the next round of roundtable discussion. So for this round of roundtable discussion, for the topic, is about the great repricing, how AI, debt, and geopolitics are reshaping global markets. So as global markets face structural shift in technology, fiscal pressure, monetary policy, and geopolitical risks, investors are reassessing how value, risk, and opportunity are priced. So for this upcoming discussion, our guests will bring together perspectives from economics, equity markets, global strategy, and the development finance to explore how AI, debt dynamics, and geopolitical change are reshaping the investment landscape. So while the stage is getting prepared, we are now going to introduce for our moderator and panelists for this discussion. So we're so honored to have our moderator. We're just getting ready. Oh, I can see that. So Jenny Chen, independent economist. Let's welcome our moderator on stage, Jenny. And joining for the discussion, let's introduce our guest on stage. Animas Cecina, Head of Equity Pricing, Asia Pacific, Associate General. And we have Ming Xiong Liu, Senior Economist and Managing Director at TS Lombard. Ivan Elan, Founder and Chief Investment Officer of AWAIM. And Noro Dahil, Senior Economist at the World Bank. Welcome all our guests joining us today. Welcome them all. And let's give a big hand to all our guests on stage. Let's welcome. So now we would like to pass the time to our moderator, Jenny. Thank you.
Thank you. Thanks so much for the great introduction. And I had to say, what a fantastic panel we have here today, and to discuss such a big topic today, how AI, debt, and geopolitics are reshaping global markets. So I first wanted to start with the big question that we are all asking in global markets right now, and it comes in line with AI. We're seeing so much CapEx spending going into it. Are we in an AI bubble? Or is AI going to bring this huge wave of productivity gains for the world? And alternatively, are we seeing both of these outcomes? First, maybe I should start with Animesh.
Sure. Thank you. That's a very interesting question. And I will start with, I will say probably both can be true. AI is useful, that we all know, and we have all seen. I mean, we have used AI in a lot of ways in coding, in our daily tasks, and companies are using it for a lot of things. So there's no question that AI is not useful. Now, the second question, which I consider more important, is the price that we are paying for it. Is it justified or not? And that can differ. It's like if I go back to the internet stage of 1999, it was not about the internet was wrong. It was more about the price that we paid was wrong, and probably some of the companies got destroyed, some of the companies made money. So this can change quite a lot. So coming back to the main point, I will say AI is useful, but it is very expensive to build. You have the infra behind it, you have the electricity grids, you have the power or architecture behind it, which costs many years to build, and that leads to kind of the question that, okay, are we overpaying for it? And if you look at the recent events, even, for example, I think yesterday or 2 days back, Google's stock crashed because they announced that they are doing like $205 billion of extra capex. So the market was not questioning that, is it justified? The market is questioning whether this spend will result in extra earnings or it will result in some revenue when like after 5 years or after a couple of years. And lastly, I would like to highlight that now the question will be, it will come back to the, let's say, the open models. Like recently there was a launch of China Kimi K3 model, which is quite interesting, and it reduces the cost quite a bit. So same as internet, I would say the question will come back to not that every company will have a very, let's say, sophisticated model. Everybody will have the models, but how we use them or how we, let's say, use them to maybe kind of benefit us in the daily tasks, that will decide how this plays out. So the technology is right, the price is wrong, probably. That's my...
So it's a bit of wait and see. How about you, Ivan? What are your thoughts? Are we paying too much for AI now? Is the world paying too much?
Yes, we are paying too much for AI, and we'll continue to overpay for as long as the hype cycle demands us to pay. But this is actually the way it is always when it comes to any kind of major infrastructure development, going back to the railroads, going back to even as recent as the TMT cycle. You need tremendous amounts of capital to flood in order to build out the infrastructure. But then after all this capital comes in, there has to be a digestion period. You actually have to have application for all of this money. And that's something that we have yet to really experience within a consumption status. So whether it's business consumption, which businesses, of course, are using it, and households are still using it, but at the cost unit of what it actually costs relative to what the money that's being earned from it, there's no profit. So there's quite a bit yet to come, and then of course you have the capital expenditure side of this and the accounting side of it, which is the CapEx spending has been essentially amortization schedules of 7 to 10 years. And the useful life of a lot of the infrastructure that's being spent is maybe only 3 years. So there's accelerated depreciation expenses that you probably will end up seeing in the next couple of years, which will be very, very hard on hyperscaler earnings.
So when do you think, is there some sort of popping of a bubble that you foresee?
I think the bubble is...
And when that will occur?
Kind of already started, you know, and this is classic cyclical movements and rotation. Sector rotation has already begun. You see, look at SpaceX IPO. This was a major bellwether for every other IPO to come after it, and for it to be trading already so far below its IPO price. And looking at the schedule of sales to come from insiders over the next several months, supply of issuance is going to be very, very huge across the board. And with such high supply, just like any market, the stock market is not immune from the laws of supply and demand. So more supply means lower prices.
Yeah, it's a lot to watch out for. So thinking about AI over the longer term, and just say that we do see this big productivity boom in the long term, who are going to be like the winners and losers in this? I'm going to take this question to Nora.
Oh, thank you. So I will approach this question from my perspective as an economist, a trade economist, looking at the rules, regulations, and agreements that hopefully facilitate your business. And if these productivity gains are going to materialize, I think we will see major shifts between firms, sectors, and countries, major capital shifts. And I think that the main winners will be those who own assets which are crucial for AI, those sectors, companies, and countries who can deploy AI effectively, and those who can also scale AI effectively. So if we think about sectors, AI needs energy, data centers. So this is becoming even much more important than compute. And so those sectors which have the critical infrastructure for AI generation, I think, are the main biggest winners. There are also the advanced manufacturing sectors, those who are able to use properly AI to move up the value chain to benefit from these developments. And I'm thinking here advanced engineering, they can use robotics, so all types of advanced manufacturing. So I also have to think about employment, and we had some very interesting presentations before that. Which jobs will AI kill? Yeah, that was the question. And the initial evidence is that AI is affecting mainly lower skilled entry-level jobs at this stage. And it seems that high skilled workers are actually being helped. So their productivity is increasing. We will still need engineers, we will still need economists, yes, even to supervise the agents which will help us do our jobs. But I think the problematic area is other sectors where we see many low-skilled workers, countries which rely on low-cost labor and sectors, and they need to be prepared to adjust to the new situation.
Yeah, it's very hopeful as well, in a way, as far as humanity goes in what we could potentially achieve. But it's really that transition, which I think there's a lot of question marks. Min Xiong, I'll take the next question to you. Maybe could you talk maybe some more about the negative consequences of AI? Nora did touch on it. But particularly about this disruption to the job market from AI. What are your thoughts on this? And are you worried about this transition?
And honestly, I think what we are underestimating is the opposite risk, which is the case where AI is not replacing workers. And I built a tracker actually to follow the AI displacement, where I would track the most exposed jobs like IT, legal, back office, finance. What I found is that the only single one which is really threatened at the moment is IT. And I also track the young unemployment, which was supposed to be threatened by AI, but I did not find the trend from ChatGPT launch in 2022. The trend in unemployment in young generation was already ongoing since global financial crisis. So that's nothing to do with AI. So what actually that means for common people, for macro, actually is I think everyone is braced for AI being disinflationary. While what we see now is that the AI build-up is adding pressure on the already high inflation world. So we won't get that kind of deflationary we want. And ironically, what people fear is that dovish outcome, which the Fed may not deliver at the moment. So this is really not something I really care so much. So actually, it's a big threat to my rate outlook, which is a higher rate in the near term. So my worry is that the AI is not replacing workers. So it would not relieve the pressure it's creating in the inflation and rates in the world.
Thanks, Ming Xiong. I want to move on to the other part of our topic, which is geopolitics. And like given the developments in the world today, tariffs, new round of tariffs, the conflict in the Middle East, how should investors think about geopolitics today? And I think the one question that I've been asking myself is, are we seeing this push towards globalization that we've seen in the last 10, 20 years or so, is that now going backwards? Nora, I think you're the best to answer
this. Yes, very happy to take this question. So the first point I would like to make is that the geopolitical dimension shouldn't be treated as a temporary source of market volatility. I think by now companies and governments agree to look at it as a structural factor which has an impact on outcomes, on productivity and in general on outcomes. And also looking at your question about the latest developments, I don't think that globalization is going in reverse. What I think is that we are seeing a rewiring of linkages, a restructuring of trade, investment and capital linkages. So, for instance, we see much more emphasis on regional agreements. It is easier to create these value chains at the regional level. And I think the fundamental issue here is that before we were always thinking about efficiency. So let's produce where it's the cheapest to do so. But now the focus has shifted. And we are looking not only at efficiency, but also resilience, security, and sometimes engaging with partners which are perhaps politically aligned. And so that needs to enter into the decision of how do we structure our production, how do we structure our global value chains, how do we engage with other countries.
There's quite big changes still, like really for the global economy. And I think one thing which I thought of in your comments is that maybe some of these regional agreements, that they can come together a bit more easily because there's less people, less countries involved. Do you think that's the case? Nora, do you think that's the case?
So I think regional agreements were there before, yes, but now I think there is an incentive to accelerate them.
Yeah.
I think they are comprehensive, but what we see is a much larger number of regional agreements emerging.
Yeah. Okay. Now, so I guess with this world of geopolitics, Animesh, it's a bit more uncertain. So how should investors deal with this?
So my view, I mean, if I get it correctly, you're asking about diversification, right? So diversification from the very basic, what sometimes people think, and I used to think maybe 15, 20 years back, owning 50 different names from different geographies can sometimes be defined as diversification. But what is actually happening is if you own, let's say, maybe the lot of chip companies, maybe in Korea, maybe China, maybe US, you are exposed to the same risk, which is not technically diversification. Diversification for me, it means that you are not exposed to the same factor which will lead to a crash, and then you will not be able to, let's say, invest. So diversification, if I were to say, I will say, okay, still invest a large portion of your money in good liquid companies. Part of the money can still be in AI, but investors should look at the plumbing behind AI. And when I say plumbing behind AI, it means your power companies, your electricity grids, your chip companies, which are kind of needed to develop this framework. And the final point being that as the geopolitics change, I mean, this one, as Nora mentioned, the resilience point, which is a very apt word in this kind of environment, because as the countries are building this infrastructure, they realize that, okay, it is important to duplicate stuff, because if the supply chain gets affected, then it can lead to issues later in developing the AI. So diversification, in the end, you kind of not exposed to the same risk, have some cash, have some liquidity, so that you can take a correct decision at the right time.
It's great investment advice, something we've learnt right from finance school. I quickly just want a follow-up question on that. Are you finding it hard? Is it harder to find properly diversified assets? I mean, good, proper diversification when things are, the world, assets in the world are a bit more correlated?
Yeah, that's a good question. And currently, I mean, even few days back, this was a topic with one of the investors. So basically, when I think of this as, if I take the recent market events, the recent chip correction provided a lot of opportunities to again re-enter at the correct levels. But yes, it is true that investors are looking at probably more at the chip companies rather than the plumbing behind the AI. And I think once that starts, that investor starts looking at the assets which are mispriced, it will become probably easier. So I don't think it is hard to find assets or diversify. It is just that people are going in the same direction and just investing in the same factor which is causing issues. I mean, the recent correction was a perfect example on the, to name a few companies, Korea's chip companies that everybody was betting on.
Yeah, great. Okay, let's move on the discussion onto all of these changes, AI, geopolitical uncertainty. How is this affecting capital flows, Ivan? Where is capital going, not going? What do we need to watch out for with regards to these shifts?
Yeah, when it comes to capital flows and even foreign direct investment, I think the trend has been very clear over the past 20 years. You know, if you go back 20 years ago and look at the U.S.'s dominance in global trade, just as an example, the U.S. was the #1 trading partner in the world for most nations in the world. Today, it is China. And even just looking at sentiment towards U.S. versus China, and I'm a U.S. citizen, and I moved here to Hong Kong because I recognize that this shift is very much underway, and I wanted to make sure our business was in an environment that has more fertile ground associated with innovation and where things are headed over the next 10, 20 years. And I mean, the Pew Research Center conducted this research recently and showed that most of the world has a more favorable, most nations have a more favorable view of China than they do of the United States at this point in time. And this is a very rapid decline. This has just been in the past 3 years. And flows are, in fact, capital flows are, in fact, following this sentiment because capital always wants to flow to the more stable and less shocking and less disruptive environment. And unfortunately, the U.S. is a much more volatile and perhaps uncertain environment, which is such a paradigm shift from decades in the past. It really now is, you're not sure what you're going to get. And in fact, quite a bit of announcements were made in terms of new developments and expansions and new data centers and all these types of investments that were supposed to be made into the U.S. The amount of investment that's actually showed up into the U.S. to make good on those promises is a small fraction. So the reality really is quite different from what the primary messaging, I think, has been in recent times.
Yeah, it's one of those gradual shifts, perhaps. I mean, like say for example, like U.S. equities are still pretty highly valued, even though they're off their highs. So suggests there's still a lot of money going there. But yeah, anyway, we'll see.
And even within our own company, I mean, we run a global macro tactical multi-asset strategy. We are net underweight, absolute underweight to U.S. equities at this time. And feel very, very comfortable to have such an underweight given the variety of challenges we see ahead.
With all of this going on, I'd really love to know what you think on interest rates and inflation, Min Xiong. I mean, I think I used to work in a bank as an economist, and this is like my number one question. So I'm asking that to you now.
Yeah. So actually, so my buyer is that the rate is higher. So this is how I see it. Inflation rate are higher, and the demographic is the floor under the rates first, and then two sectors in the economy in the U.S. case is drawing on that shrinking savings pool, where the well savers save less, and then the more retirees drawing on that same pool. So the government is running a large deficit. That's the biggest one who's drawing on that pool. And then secondly, AI build-out is now drawing on that pool as well. And there's a nuance here that the public may miss, which is that in the USK, the sectoral balances, the private sector is still running a surplus. So it means that a big part of the private sector, the corporate, well, in America is still sitting on cash. So that's a question which holds the rate towards the floor. So why is it the floor? What is the floor? So my model gives a number which is 4.5% as 10-year yield. Now what 10-year yield trade is around that level. So this is not the fair value. The fair value is around 5. My another model.
Sorry, 4.5% for as
10-year yield. Yes, so there's a
10-year.
10-year. So there's a compression going on. So that cushion is holding it down towards 4.5. Now I think yesterday was 4.67 because of the war, and that what I'm afraid would happen is that the non-AI corporate sector would wake up one day and the capex joins in, and that add pressure on the inflation rate further towards the ceiling, which is 5%. So my rate outlook is the rate is higher, and the risks of a dormant part of the private sector may wake up one day, and which will push the rate even higher than that. So this is contrary to what we believe within the AI narrative, which is disinflationary and then rate cuts. This is not what we see for the moment.
Okay. Well, thank you. we do have a lot of debt in parts of the world economy. Is there some leverage in the world that is very worrying to you? I'm going to take this to Animesh.
Okay. So on the debt part, I mean, I highlighted, the Korean companies. But on a more general view for debt, why debt is worrying? It's to the crux of it, it's a timing problem always. A data center is built, let's say, for the usage for 15 years. And you finance it with something of a loan, let's say, 3 years. What if the revenues don't come, and after 3 years, when you refinance, the company says that, or the bank says that, okay, I cannot pay. And that causes a problem. So the debt, to me, it becomes a timing problem. And with AI, with technology, that issue is always there because the technology is moving really fast. So if I take a very simple example, a chip company might have taken a loan, put the collateral with the chips itself. What if the chips are not valued similarly 3 years down the line because new chips have come or technology has changed? And this can cause a problem with the loan being refinanced. And it always has a effect on the leverage because it's not that usually you are taking a 1:1 loan. You might have put for $1 billion, maybe 100 million of your own money and 900 million of the loan. So your leverage 1:10 times. So this kind of leverage is always worrying. And secondly, the other part is if the loans are public, it's always good. I mean, you can monitor the leverage because you will know that how the loans are valued. So the second thing I will mention is what people keep talking about, the buzzword is private credit. And we keep hearing that private credit companies are giving loans to the chip companies or the AI companies. It's not bad. I mean, it's good. I don't see it as a problem. What I see a problem is the loans are not listed. It's not something that you can see day to day how the values are changing. So that's the worrying part because you cannot observe something, and if you cannot observe, you are seeing that, okay, loans are fairly valued. And if there's stress, then the loans start to kind of pop up. So that's one thing I would be careful of. So yes, debt and leverage combined in any sector cannot be a good thing. But hopefully, for now, I'm not that worried.
How about you, Ivan? Are you worried about private credit?
Well, I look a lot at option-adjusted spreads on U.S. corporates, and in general, spreads are extremely compressed. And this is something that is very peculiar given the overwhelming amount of supply and new debt issuance, even from companies that don't need the money are issuing new debt and raising. They'll do a capital raise on the stock side of their capital structure, and then the very next day they'll actually go out to the market and raise tens of billions of dollars of debt. So this is very interesting, and usually is indicative of a very toppy kind of bubbly market where companies, very smart CFOs, knowing to get the money when the getting of the money is good and at very good rates, but the implicit risk, the implied risk that's actually embedded in these deals is actually quite high, much higher than what market perception is. And you don't know what the risk is until an event happens, but that is actually the nature of the capital markets, is there will be some kind of catalytic event that reveals the underlying risk, and then you'll have default events that occur, whether it's missed interest payments or missed principal repayments. But there's certainly several sectors that have been more abundant in their issuance during this period of time, but frankly, it's across the board, across sectors, and everybody's been doing it. And something that we're certainly staying far away from any kind of credit risk at this point. Even duration risk, we're staying away from it. and staying very much on the short end with very high-grade corporates and being very opportunistic like we've done in the past to jump into those areas when really the risk spikes.
How about sovereign debt? Are you concerned about that? Or maybe that leverage in other parts, say, for example, in ETFs? Because, I mean, that might have had a big impact in that volatility in the Korean market recently.
Yes, I mean, sovereign debt. I mean, my favorite example to give right now is the fact that Social Security in the United States is completely bankrupt in the year 2030. I remember not too long ago that number was supposed to be 2045, 2050. And so 2030 is only 4 years away. And this is a huge, huge percentage, 50% of the federal government's spending is done in social services and social supportive spending. So this trust is bankrupt in 4 years. What does that mean? What that means is the government is going to have to start issuing more debt. So it's at 35 trillion today. It'll be at 40 trillion tomorrow. It'll be at 50 trillion before you know it. And the confidence has been waning quite a bit from central banks around the world in U.S. Treasury debt. We're seeing the money move. As money comes due, principal isn't being reinvested in U.S. Treasuries. It's finding other assets to be invested in. Other sovereigns around the world that maybe don't have this kind of critical maturity wall that they're facing in credit risk, but also in other non-correlated assets like, for example, gold.
I'm going to address the big part of our topic, that's mispricing of assets. So I guess the big question is, which assets or regions do you see are the most mispriced? I'll go to Nora.
I don't know if mispriced, but probably there is not enough attention to those sectors which own the critical infrastructure, and we are talking here about AI, to generate and properly use AI. And I think it's also very much related to the resilience and security issue that we discussed. And I would put much more emphasis on this sector. So energy generation, energy security for many of the countries, data centers, the environmental impact of all this. So I think this is where I would probably channel a bit more attention towards these sectors.
Yeah, that's interesting. Min Xiong, what do you think? Which areas do you think are most mispriced?
Yes, in my mind, three assets. First is the 10-year yield, as I just explained. So 10-year, there's a compression around 50, 60 basis points, even maybe higher. If we look back to historical norm of term premium, may as high as 100 basis point, even going further. So why is that matters? Because every other asset discounts of it, so it's just not really a niche price. This is important for the markets. And then the second one is, of course, equities. And now the U.S. stock market yield, less treasury yield, the risk premium is negative. So that's not really crash signal or timing signal, but it tells us that the cushion, the valuation cushion is really thin, because I have explained a minute to explain to say that the rates may be higher. So the rally may rest entirely on earnings. My liquidity index actually shows that liquidity has been tightening while the market keeps rising. So this is something wrong here. And then the third one is gold. Gold, my model, gold model tell me that the gold is underpriced around 1.5 standard deviation. And the main cause is of course the higher rates recently. But I think we are going to extreme. What the market is pricing is around 3% real rate. That's too much. Yeah.
That's good. I'm going to jump to our final question because we have just a few minutes left, and I'll just run down the panel and ask if you had a spare $2 million US, where would you invest that? Animesh.
Okay. So, I will be short on this one. Let's say, very simply, 40% I will put in good quality companies, not really AI. 20% I will still put in AI or the North Asian chip giants or chip companies because I want to participate in that extra convex growth which is already there. But still, I would say not to put the money at one shot in this thing. I will spread it over time. Third, I will always keep some money for bonds or cash, which is to keep liquid. And when I say bonds, I mean very short-term bonds, not taking the duration risk as Ivan was highlighting. I mean, that's something I would not take at this point. And lastly, gold as a sort of protection point because it's good for any portfolio. So 4 things, not very equal, but just to be on the safer side. And lastly, would not put leverage on anything because it destroys the value at the point that you would want to invest more. So that's my take.
Min Xiang?
For short term, definitely I will still continue to play the AI build-out theme where the bottleneck in the AI infra is true. So Taiwan and Korea may be the top players still here. So I won't fight it yet. And then secondly, I will sit on the short end of the curve and pay to wait until the longer end reprices. And then if you give me a longer horizon, I will switch to real assets, especially beyond 5 years, where the rates may top out. And gold, definitely another one I would definitely for longer term to I favor. Thanks.
Ivan.
Very strong free cash flowing companies. It doesn't matter the market cap. And also gold, oil. These are important assets to have in the portfolio right now.
I like the free cash flow option. Nora.
Well, I would agree with diversifying the whole portfolio, and the significant part would go into infrastructure supporting AI, so critical sectors, countries where we see productivity increases and which benefit from the supply chain diversification, so strong companies there, but I would also keep some high quality liquid assets available.
Perfect. Oh, well, thank you all very much. I think that's some very valuable insights I took away. Stay away from long duration, stay diversified, and what else was there?
Technology is right, but price can be wrong.
Excellent. Thank you so much.
Okay, thank you so much, and let's give a big round of applause to all our guests on stage. And thank you, Jenny, for acting as the moderator for today. So you may now be seated by going to the left-hand side of the stage. Thank you so much, and have a good day. So after this roundtable discussion, our stage is going to reset for the upcoming presentation. So for the next topic for the presentation is about the importance of gold in investment. So in times of the market uncertainty, inflation concerns, and changing global risk sentiment, gold continues to play an important role in portfolio diversification, wealth preservation, and investor confidence. So this session, our guest speaker will share professional insights on how gold can be viewed within a broader investment strategy. So now, as the stage is getting ready, we're going to invite our guests on stage. 接下来的分享就是有关投资当中黄金的重要性。有请我们的嘉宾 Wino Zhang, Senior Business Development Manager of WCG Markets on stage. So let's welcome Wino.
好，首先好多謝主持嘅介紹先嚇。咁多位投資界嘅朋友，大家好啊！我係 Vito，嚟自 WCG 嘅 marketing 嘅。咁啊，好開心啦！今日可以喺度同大家一齊探討一下關乎我哋未來咧財富命脈嘅關鍵主題啊！咁而家大家都見到啦，2026年點解一定要有嘅黃金投資呢？咁喺開始之前啦，想大家一齊回想一下啦，喺近期咧發生咗啲咩市場上咧特別嘅新聞喎？咁我哋咧原本咧就係預期緊咧，美聯儲咧就會進入一個咧平穩嘅降息週期噶嘛。咁但係咧突然之間咧，成個市場上嘅風向咧完全轉變晒㗎啦，由減息變到咧預期加息喎。咁喺呢個消息嘅憧憬底下啦，好多人第一反應就係會話：哇！而家息口都加㗎啦喎，咁黃金咧仲會唔會繼續有得升翻上去啊？冇錯啦，咁今日嘅主題呢，就係嚟緊10分鐘入面呢，就會同大家拆解一下呢個關於利率上嘅迷思啦。咁同埋啦，點解喺加息嘅預期底下，黃金呢係會不跌反升翻上去嘅喎？好啦，咁我哋呢首先將嘅時間線呢拉翻長少少先啊。咁我哋睇一睇翻啦，歷史上啦。黃金咧會係咧人類歷史上唯一一個咧經歷咗超過5000年依然屹立不倒嘅儲存工具喎。咁大家咧睇翻呢張圖表嗰度咧都會見得到啦。睇翻啦，1971年啦，布雷頓森林體系瓦解以嚟啦，黃金咧由每盎司35美金咧咁就暴升翻上去，攀升到咧而家2026年嘅4400蚊美金以上嘅喎。咁呢度咧見到咧係升幅超過125倍嘅。咁我呢度咧特別要重點嘅提一提翻啦，喺當時咧1970年代啊，美國嘅利率咧係由3.5% 一路飆升到16% 嘅。咁喺呢個超級嘅加息週期同時啊，黃金咧係點樣咧走出呢一個超級嘅利率通脹呢？咁同埋啦，呢度咧好明顯可以睇得翻啦。黃金嘅價值啊，從來咧都唔係一個咧表面上嘅利率嘅關係影響啊，而係咧扣除咗通脹之後嘅實際利率啦，同埋市場上啊對於未來嘅恐慌程度嘅。咁黃金咧就具備咗一個極致嘅稀缺性喺度啦。咁同埋啦，每一個對手嘅風險啊，就會令到佢成為一個跨越世紀嘅普世價值嘅載體啊。好啦，咁我哋咧睇完5000年之前啦，跟住又睇完1970年啦，咁啊去翻咧近代少少嘅時間啦。咁啊，我哋睇翻舊年啦，2025年嘅時間先咯。咁我哋啦，2025年咧，黃金咧就創立咗咧喺1979年咧以嚟嘅最強勁嘅表現。咁佢咧全年嘅升幅咧係高達27%嘅噃。咁啊，甚至乎去到2026年嘅年頭咧，佢亦都係破咗一個咧歷史嘅新高嘅。咁咧係去到突破咗5000美元嘅歷史關口。咁呢一個咧並唔係一個短期嘅炒作啊，而係一個長期結構性嘅牛市啊。咁大家啦都可以喺度見證到，我哋咧其實而家係一個結構性嘅牛市嘅第3階段啊。咁點解咁講咧？其實第一階段啦，黃金咧就有一個實物嘅需求啦，去支撐住成個金價嘅。咁個支撐價位咧大概會係喺翻咧2000美元左右啦。第二階段啦，就係咧西方嘅 ETF 啦，同埋各大嘅金融機構啦，喺度回歸翻湧入咗去做一個黃金嘅投資落去。咁啊支撐價位咧大概會喺3000美元盎司嗰度嘅。咁而家啦，我哋咧就正係屬於咧第3階段嘅，因為咧全球嘅法定貨幣咧陸續貶值啊，同埋每一個國家嘅央行咧都有一個去美元化嘅政策喺翻度。咁所以啦，黃金咧就而家長期穩健喺4000美元之上，都成為咗一個好常見嘅狀態㗎啦，係。好啦，咁我哋睇完啦，成個結構性牛市咧，咁我哋而家可以講一講，到底有咩因素係驅動住呢個結構性牛市，同埋支撐住成個金市嘅嘞噃。咁最主要啦，有4大因素喺度㗎啦。首先第一個啦，全球嘅債務性危機啊。咁啊，全球債務危機咧高達咧340萬億美元嘅呢一個。咁第二個啦，就會係股息相關企業啊。咁因為咧美國咧個股息相關咧就升到去咧30年嚟嘅高位啊，已經係。 咁黃金咧作為一個傳統嘅避險資產，同埋一個非股息相關嘅資產咧，咁佢就會有翻一個好好嘅分散風險喺度存在嘅。另外啦，就係 ETF 嘅資金流入啦。咁頭先亦都講過啦，喺全球各個嘅唔同嘅 ETF 資金啦，陸續咁流入去黃金嘅市場，作為一個避險工具嘅。咁最後，亦都係最關鍵嘅一個位置啦，就係咧央行嘅強勁購買因素啊！喺過去咁耐以嚟啦，全球央行咧都已經係連續16年咧有一個淨購買黃金嘅記錄啦。咁官方機構咧對於黃金嘅購買咧並唔係話單單因為咧我哋嘅利率嘅改變啦，各項嘅因素唔同啊，而係一個戰略性嘅策略儲備嚟嘅。因為咧佢哋係需要一個咧非信用資產嘅資產去保障翻咧佢哋國家本土嘅貨幣。咁所以呢一個央行購買咧會成為一個最重要嘅強勁資產啦。好啦，咁大家都睇到啦。咁而家啲 smart money 全球最大嘅 smart money 咧，就一定係喺翻每個國家唔同嘅央行噶啦。咁喺呢個咁強勁嘅加息週期底下啦，央行到底做咗啲咩嘅動作出嚟嘞噃？嗱，我哋可以睇翻啦，我哋全球央行嘅淨購買量咧，喺2026年咧就已經去到咧863噸嘅啦。呢個係第16年嘅連續淨購買啦。咁大家睇翻啦，呢邊呢個表格咧都可以見到啦，單係波蘭啊，都已經嘅儲備量咧係去到咧530噸嘅。咁而我哋中國啦，16個月連續嘅淨增持啦，係去到有2264噸嘅。咁央行都會走去買，咁最主要原因係咩呢？好大原因咧係因為咧地緣政治風險問題啦，再加上啦頭先講過啦，需要一個去美元化作為一個戰略嘅避險啊。因呢個咧就對於佢美聯儲到底加息定減息嘅影響嘅敏感程度咧比較偏低嘅啦。好啦，咁我哋去到第3階段啦。咁呢度有幾個唔同嘅因素出翻嚟，大家睇一睇嘅。咁除咗頭先所講嘅央行購買之外啦，咁地緣政治衝突啦，咁其實俄烏戰爭咧依然係尚未結束嘅。咁中東嘅局勢咧係反覆無常啦。咁再加上啦全球關稅嘅唔確認嘅因素咧，咁令到咧每次出現一個政治上或者係地緣政治嘅問題危機咧，都會有一個咧黃金好強大嘅支撐出翻嚟啦。咁呢一個亦都係頭先我哋講得最多嘅去美元化嘅體系啦。咁喺一個單一貨幣嘅防禦風險嘅底下啦，增持黃金係可以俾到每一個國家更加好嘅防備資產喺度嘅。好啦，呢度咧就會俾大家睇一睇啦。喺各個唔同嘅大型機構嘅對於黃金年底預測嘅目標價喺翻呢度嘅。咁其實大行都做嘅時候，代表住咧我哋咧會有一個好強勁嘅信心支撐俾翻咁多位嘅散戶投資者嘅。好啦，咁我哋啦最後啦就可以做翻一個總結俾大家啦。咁黃金點解會係你嘅財富選擇入面嘅必然選項啊？係可以分擔到你嗰個嘅財務風險呢？首先嗱，我哋嘅牛市咧已經喺2025年咧確立咗㗎啦，46年嚟最強勁嘅表現啦。咁2026年咧，我哋咧亦都係一個咧4000蚊美元咧做咗一個好強勁嘅地板支撐嘅。喺宏觀方面啊，美元嘅信用咧亦都逐漸變弱。全球嘅國家咧都有一個去美元化嘅政策喺度，仍嚟到黃金一個歷史上嘅支撐位置，黃金時期啦。最後啦，央行淨購買就係一個最強勁嘅黃金核心支撐嘅關鍵因素啦。喺呢個充滿唔確定嘅時代，黃金唔單止係一個投資，更加係你一個財務組合入面不可或缺嘅因素。咁希望大家若果有任何問題嘅話咧，可以上翻我哋嘅公司 www.wcghk.com 或者去翻我哋嘅展位嗰度同我哋嘅專業團隊查詢啦。多謝咁多位，拜拜。
唔該晒 Vino， 謝謝 Vino 的分享有關黃金的重要性，謝謝。接下來的這個分享就是有關會絲毫的合規，把告警變成決策。Thinking compliance, turning alerts into decision. So this will be the final presentation before the lunchtime. So we would like to invite our guests coming onto the stage. we'd like to invite Marty Du, co-founder and COO of WIF, joining us on stage. So please enjoy and join us and welcome Marty coming on stage. We're going to pass the stage to you. Thank you, Marty.
谢谢。大家好，看到我的朋友啊，我是 Marty，来自 WIS 香港办公室负责人。那 WIS 这家公司呢，今天是第一次参加 Wiki 的这个大会啊，非常荣幸这个 Wiki Finance 的邀请。那我觉得今天刚刚接受了一个采访 ，Wiki 是一个原来在新加坡的一家公司，那在新加坡有10几年，主要是做合规科技。那原来我们的受众主要是传统的金融机构更多一些，所以我原来讲话的或者说演讲的对象主要是传统的金融机构。那这次有机会参加这个活动呢，我跟主办方也交流了一下啊，主要是因为现在 Wiki 的这个范围也从原来的 Web3 现在开始转向于传统的金融机构，尤其是这一次增加了 Payment 这个领域，所以呢，让我们也有机会在这个 Wiki 的会上跟这些新兴的金融机构有了更多的接触。那我今天想跟大家分享的这个3个关键词，因为我是相当于是做安全，大概做合规，大概有20多年的这个经验。那今天主要跟大家分享3个关键词，就是第一个是合规 compliance， 那第二个是 risk， 那第三个是这个决策引擎 decision intelligence。其实昨天大家有没有留意到？昨天大家有听到这个副总的一个分享啊。其实现在昨天到今天，我听到大家讲的最多的主要是 AI， 就 AI 在重构整个行业。那大家可能这2天的大家演讲，大家也能感受到，其实大家都在思考，在这个 AI 时代，我们做一些什么事情，能够让我们能够把握住这个 AI 的浪潮。在这里面能够有一些掌握一些机会，我觉得今天因为我们有个 PPT， 我等会儿会讲，但是我觉得这个是我这2天的一个思考，就是我们正在这个 AI 的浪潮颠覆时代的这个时间的窗口下，我们应该做一些什么事情，能够让我们能够跟这个 AI 时代能够结合起来。那我觉得昨天副总的一个演讲里面，我觉得让我有一个很启发，就是其实过去的10年 ，AI 的新基建已经让大家看到了这个颠覆性的一个发展。其实已经是进入了人们的视野。那未来的10年是一个什么样的机会窗口期呢？就是 AI 的应用 ，AI 能够沉入到我们的不同的行业里面，解决真正的问题，才是下一个10年的一个浪潮。所以我昨天就听到这一点副总的一个分享，我觉得如果昨天没有听到的话，我觉得分享给大家。那我们正在WIS在做的事情，就是在做这么一个事情，就是在做未来 AI 在合规和风控这个领域里面怎么应用，来去解决这个行业里的一个问题。那这家公司呢，相当于是原来已经在新加坡做了10几年，是在传统的金融领域里面来去做合规和风控。那去年我们有幸得到了杜军总的一个支持。那杜军总也是因为在行业里比较知名，在 Web3 行业里比较知名，所以也是因为他把我们带到了这个 Web3 的这个行业里面来。那我们现在正在做的是把我们原来做传统的风控和合规，现在用 AI 把它重塑了一遍打造成为一个 AI native 的，既在传统的金融领域里面来去做合规和风控，又可以覆盖到 Web3 新兴的金融领域里面的合规和风控。所以我们打造了一个我们认为是业界里面目前还没有人做的，既可以覆盖 Web2 又可以覆盖 Web3 的合规和风控的一站式的风控的一个平台。那接下来呢，我觉得有几个数字给大家做一个分享，就是其实如果是大家不做合规或者是不做这个风险领域的话，这几个词可能有一些这几个专业机构可能会比较陌生。第一个是 FA 这个 TF 就是金融特别行动组，它主要是在做什么呢？就是全世界的这个金融犯罪的整个的动向的分析和观察。那我们 WIS 呢是定位为是一家 RegTech 的公司。RegTech 在10年前在英国发展起来的时候呢，其实 FITF 实际上是起了非常非常重要的作用。那原因是什么呢？原因是因为金融的监管的部门，他们掌握了非常非常多的最新的数据和案件，但是怎么用新的技术来去解决这个里的问题？那在12年前的时候，实际上是英国最开始提出来。那前几个月呢 ，FITF 然后是刚刚进行了一个新一届的这个选举，然后现在是英国是当做了这一届的主席。未来的2到3年里面，他们会把反洗钱和风控尤其是稳定币的反洗钱作为这里面最重要的一个部分，在全球范围里面来去用新的技术来去解决这里的问题。那 那他们其实提到一点，就是现在90%的洗钱的数据，其实来自于这个新兴的欺诈这个领域。那所以这个是我觉得可以值得关注的一个数字。然后另外一个就是另外右边的2个数字，一个是 FBI， 就国际刑警组织，也是有一个数字，大概200亿美金的这个洗钱的一个金额啊。其实这就是给大家一个背景了，就是我们做 RegTech 做风控，其实有一个很强的驱动背景，就是其实这些背后都是真实的数据啊。如果是大家关注这个领域的话，那这里我没有讲。如果是在香港来去看的话，大家比较可以切身感受到的是一个什么呢？去年在香港的整个金融犯罪或者欺诈的数据的金额是多少呢？90亿港币。那其实我觉得可能在香港提到这个数字的话，就大家会比较更直观一点。90亿对应的是什么呢？对应的是43000个案件，香港的真实的犯罪的案件。那对应到每一天来讲，是什么样子呢？就是大概每一天就有15宗的这种诈骗的案件在发生，就是你做的这个当下，然后这15宗里面有60%。都是有关于诈骗和资金相关的，所以那怎么在这里面来去用这些技术来去防范它？我们可能很多机构都在想，那其实今天这个场域里面，我觉得如果是大家是一个founder或者是一个项目方投资人，那我觉得给大家一个词语的话，就是我觉得要增加一些你的合规的底线，就是合规其实是你的生命线。是你一个相当于是你未来这个业务能不能发展的最基础的一个东西，所以我觉得这2天我也跟一些项目方和一些机构来做了交流。我觉得在这个场域里面的话，我觉得提这个词是最关键的一点，就是增加你的合规的一个底线。那另外呢，其实这里面是这2天大家都有提到稳定币。其实稳定币里面呢，其实大家现在想的是稳定币，香港发了30多个牌照申请，然后目前有2家在做。我最近这段时间都跟这些机构有一些交流。那其实这背后还有一个数据是什么呢？在洗钱的这个数据里，在全球的洗钱的链路里面，通过稳定币目前来去做洗钱的大概占多少呢？300亿，3000亿美金，就84%。3000亿是稳定币的交易量，有84%目前的洗钱的数据是通过稳定币来去实施的。那背后这些，如果你的业务涉及到稳定币的相关的链路，那这里的风险你是不是需要去关注呢？那你有什么方法来去发现它和识别它和去解决它呢？我最近跟有些机构来去聊，他们想去追踪这个稳定币的去向，或者说我要对不同的国家的人群来去做不同的这个限制。那其实可能有一些你一旦有这个意识的时候，实际上你已经提升到一个 level。但是现在我今天这2天发现这个会上，其实很多人还没有这个意识，可能还是在想，哎，稳定币里面我怎么样能够通过发一些卡或者是上一些币之类的来去做一些套现。但这里面真正的风险在后面。等你的业务开展起来之后，那怎么样来去识别风险和发现风险？其实这是这个我觉得一个数据，也给大家来去做个分享。那这里面也是一个监管的背景的一个驱动。我觉得这个里面提的比较重要一点，可能是第3点，就是在整个欧洲，那其实现在对AI 的应用的一个可解释性，可能这也是在未来一段时间，未来2到3年里面，要求所有你的 AI 的应用都需要有可解释性。其实这个是我也是看到，就是现在很多的项目或者很多的业务都在提 AI， 但是这个走在最前沿来看，那现在在未来的2到3年里面，如何来提高 AI 的在你的应用里面的可解释性是非常非常重要一点。我觉得把这一点来提出来给大家一下。那位子是一个什么样的公司呢？其实我刚才有讲，就是我们实际上是一个传统的在金融领域里面做合规和风控，提供这么一个解决方案的一个公司。那现在我们有这个机会呢，然后可以在 Web2 和 Web3 这个领域里面同时来去打造一个一站式的合规和风控的平台。那我们相当于是用 AI 的方式把在 Web2 的这个传统金融领域的风控和这个 Web3 的 QIT 链路都做了底层的标签，把它们放到了同一个决策流里边来去做这个链路的配置，来实现你的整体的合规和风控。那具体怎么来去做的呢？我们把它总结为目前是3个一。那第一个呢，就是一个平台一个平台。那如果是大家我想大家可能在座的是做业务的更多一点。如果是你从做业务的，从业务的这个流程的角度来讲，就是一个客户，一个你的业务的客户的来源， 然后到你的这个来源之后的这个审查，以及到客户进来之后的整个的业务的监测，以及它如果是产生了这个业务之后的整个的这个叫案件的管理 case management。所以这个但是从合规这个体系里面呢，其实我刚才这里我们所列出来的这些呢，其实都是在传统的金融合规这个体系里象限下标准的这个有标准的做法和标准的数据源。那我们相当于是目前是把整个的这个原来金融领域里面传统金融领域里面的整个的合规的链路和现在你的业务流做了打通，把它放到了同一个平台里面来去做了一个监测。那这里面就又涉及到数据源，又涉及到你的业务流程的相关的这个重构。那第二个词是什么呢？就是one decision， 就是一个决策。因为如果你是一个传统的金融机构的合规官角度来讲的话，那他们做的日常的工作是什么呢？就是你的所有的客户的信息，你开一个账号，然后他如果今天有预警了，他涉及到反洗钱制裁了，或者他的一笔交易出了问题之后，我每天要去做审核，他会有很多的数据源进来之后的 alert， 我要处理这些信息。那其实这每一个信息都要去出现决策，都要去做决策。那如果是涉及到这个 Web3领域里面，我们最近也有一些调研。那如果是他要是做一个合规的交易所，他也要去做对他的每一笔交易来去做这个预警的识别。那大概的量是多少呢？这可能它是传统的金融机构的几十倍、上百倍。那怎么来去做呢？因为 AI， 那他们也想到的就只能用 AI 的方法来去实现。我们就提出来，我们就把 AI 来应用到整个的这个 alert 的处理里面，可以。那当然跟有些交易所的这个交易的案件里这个 case 里面呢，我们可以降低它70%-80%的这个 alert 的处理率啊。那这是 one decision。其实每一个的在业务的流程当中，它每一个的过程，如果需要我们的人员来去接触的，它都是一个 decision， 都是需要一个决策。那我们相当于是把前端的数据流进来，然后到你提供你的决策，然后来去做一个智能的决策，来去做了一个支撑。我们其实是做了这么一个事情。那在这之外呢，然后我们第三个就是每一个都是可审计的，可审计、可解释。那其实这个就是我们其实提出来，就是未来的 AI 的应用和金融的业务，它必须都要有存档、有可解释和可留存。那我觉得这是非常非常重要一个东西。那我们相当于是把整个的链路，你的每一笔处理的信息、风险和预警的信息的这个它的过程和判断的依据，来去把它做了一个审计和记录。那这是一个最基本的一个框架。那这个呢，实际上这是从业务流的角度来去做了一个分析。时间有限，我就不讲太多。下面就是我们的一站式的这一个决策平台。它的整个的，如果是你这个偏向于对技术方面有一些这个兴趣的，那就相当于是，当然在你的业务公司里面的话，一定会有一个人员，他们会去做这个事儿。但是如果是你是一个 founder， 你是一个项目负责人呢，你可以有这个意识，可以安排人来去做这样的一个适配。那你可以掌握全局的信息，从一个数据从你的客户的数据进来，到整个的业务流程的这个规则和风险的这个识别的配置。那具体来讲呢，我讲就时间关系就不讲很细了。就是我们也同时在这个从最开始的客户进来的时候，我们就掌握了一站式的数据，把它的数据提取出来。那其实我们也有全球的 ID 的这个身份的信息的识别，然后也有这个人脸验证，然后也有设备的关联，也有这个手机的相关的这个信息的一些采集。其实这个相当于是，如果你的业务可以就今天这个场合下呢，我觉得如果你的业务涉及到有 APP， 涉及到有网站来去获取客户，我觉得你都应该有一个意识，就是要去增加你的合规的入口的数据的采集。但是这个数据的采集不只是为你的业务整个的业务的开展，而是要把它嵌入到整个的合规和风控的流程里面来。那当然我们也提供一个 APP 的这个 SDK 的接入和网页版的接入，可以直接来去应用到你将来的合规和风控。因为将来这个数据是可以向监管来去解释的，而不是你自己说了算，而是要呈现给他。呈现给你的监管和合规部门，这是它的最大的价值，我认为是。那今天我们虽然是第一次参加这类的活动，但是我觉得未来我们可能会有更多的深入的探讨，来去把这个链路打开来，给它更进一步的这个案件的因为我们最近也有一些大的这些交易所和平台在推进，那可能是会有一个进一步的案例，然后这是传统的金融机构的做法了，那他们会有很多的这个 screening， 它会有很多的数据源筛查。那当然我们自己本身也接了非常非常多的全球的数据源，也有中国的数据源，还有一些交易的风险的模型的识别。那这是我们这个平台的一个核心。 还有就是，如果是它对比到传统的这个刚才讲的这个，如果是把它数据进来之后呢，这是对比传统的这个反洗钱和这个新型的。我们的做法是差别是什么呢？原来传统的，假如说你是从 A B 到 B 的这个交易，你是只是两个是分开的。那现在我们的做法是什么呢？就是你采集了这些信息之后，我们可以识别到它是关联信息。假如说它同一个设备，它是登录了不同的账号信息，我们也许就可以做同人的识别。那比如我们最近有些机构交流的时候，他说他是同一个人，但是不能够在不同的国家有不同的身份来校验的。那我们实际上是可以来去做这样的一个交叉的验证。它实际上是一个关联网络。那我们背后也做了一套这个 Graph Intelligence 的这个知识图谱的识别，然后这是我们这个 AI 的应用。刚才讲就是，如果是你有非常非常多的信息要处理，那怎么来做呢？我们实际上是把大模型放到这个里面来，其实你可以用自然语言来去交互，然后来去给它做一系列的这个你最终需要的报告的生成也好，或者说你的这个你需要达到一个什么样的结果，这个其实就是向监管来去解释你这个人或者这笔客户这个交易它将来有什么样的风险和识别，有什么样的问题向监管来去解释。那实际上这是一套模型平台，这也是非常非常我认为是全业界非常领先的对，然后大概就是这样。我想这是我们在银行，然后在大型交易所和一些支付公司，目前它其实有一个案例和效果。其实，在不同的场景下，我们目前逐步的在尝试有一些新型的一些应用。那我觉得是今天这个场域下，可能是因为他们增加了 payment， 在快件支付领域里面有一些这个客户过来，那我觉得是实际上在这里面我们可以做一些尝试吧。然后下面就是时间关系，就是因为我们是一家新加坡的公司，它在新加坡连续10年，然后参加这个新加坡的金融科技节，然后也连续5年获得了新加坡 RegTech 的 Top 50的排名的这个奖，所以我们也是一个在金融科技 RegTech 这个领域里面是非常有积累的一家公司。那香港公司呢，我们也非常荣幸啊，就是前天我们香港公司刚刚注册完成，那我们也是希望在香港能够有更多的伙伴和这个顾问或者说行业的这个同行一起来去做尝试吧。那我们也在招人，那希望大家有兴趣可以来去做交流。那 OK 大概就这样。如果有兴趣的话，可以跟我们来去联系好，谢谢大家，谢谢。
好，谢谢 Marty，Thank you。现在我们是进入午餐的时间，如果我们的嘉宾你们有午餐券的话，现在可以去到我的交流区领取午餐。我们下午的部分在舞台上就是1时30分左右，我们会继续，到时再见。So we are now going to take the lunch break. Please enjoy your lunch, visit the exhibition area, and continue connection with our speakers, exhibitors, sponsors, and industry partners. So for our guests holding the lunch voucher, please now proceed to the networking area to redeem your bento meal box. Coffee and tea are also available at the coffee bar for your enjoyment. So our stage program will resume at 1:30 p.m. and we look forward to seeing you again shortly. Thank you.
motorsport pivots to a new agile 50-50 hybrid era, the math has changed. Backed by Toyota Gazoo Racing's engineering scale, Ayo Komatsu and his TGR Haas F1 team are here to create a winning formula. Hi, Ayo.
Hi, nice to meet you.
Nice to meet you. This is an incredible place. You're an engineer-led team principal with a PhD in vehicle dynamics. It is pretty remarkable. With the regulation changes that have come into effect, it almost feels like this has worked out very nicely in the favor of the team.
You know, this regulation change, the biggest regulation change I've experienced, I've been doing Formula One for 23 years. You know, sometimes we change on the aerodynamic side or chassis side. Sometimes we change on the power unit side. But never I experienced changes both at the same time. So it was a huge, huge challenge.
The 2026 car updates introduce Active Aero to dynamically adjust wing angles for maximum speed, followed by a boost button that allows drivers to deploy custom power unit profiles on demand. The new overtake mode grants an extra 0.5 megajoules of energy to trailing drivers, while automated recharge maps manage energy recovery to keep the power unit primed for the next attack.
No, it's definitely not tailor-made for us. But I honestly, with the size of the challenge, I expected a lot tougher start to the season. But it's just a huge credit to everyone in the team.
You talk so much about the people, but coming in from the Toyota side of things with people, pipeline and product, that seems to fit so well together in terms of a framework for the organization.
Formula One is an amazingly competitive international environment, and then that's the best environment, I believe, to grow people. So the core of our partnership, yes, it's a technical partnership. We're doing lots of engineering together, of course, but at the very heart of it is really to develop human beings, the people, who can basically perform to their individual best, because everybody's got different strengths and weaknesses and different capacities.
We're so early into the season, and yet we're seeing the culmination of all of that, the fruition is coming to birth. It's really quite remarkable.
The result is not something you can control. There's no point stressing about it. I believe that you should really focus on what you can control, which is your process, how you approach the tasks in front of you, right? We got to get best out of everyone. Actually, we need to make 1 + 1 more than 2. In order to do that, people cannot be afraid of failure. You know, I said everyone needs to put their opinion on the table. Doesn't matter if I don't agree.
This is a beautiful bird's eye view that we've got here. But tell me a little bit more about the magic that happens here, because obviously with so many people working around each other, teamwork must really be precise.
Teamwork is so important, but also the workflow. You know, at the moment we're still trying to improve it, but how the parts come through the door, the order of the assembly, how it goes out of the door. There's the stores actually behind that wall, then the sub-assembly shop there, composite shop down there. So all that workflow needs to come together, and then this would be where the finishing products are made. So all that is very, very important.
What keeps the love going for you?
Well, yeah, just the improvements, and also like people ask me what's the sort of like happiest moment when I do this job. Like if we have good qualifying or good race, and I can hear my people, like mechanics, engineers in the garage, celebrating, right? Then when I turn around from pit wall and see those guys hugging each other, celebrating, that really is an amazing moment.
This is the sound of a 2026 revolution. We're here at Silverstone, the historic heart of motorsports racing, and we join the TGR Haas F1 team for what is going to be an in-depth day on track. This session is designed to sharpen the skills of the elite drivers and world-class personnel that define the team's future. Welcome to the Frontline Formula. How close we actually are. Can you explain to me, where are we, what are we doing, what's this all about?
We're about to start the afternoon session here at Silverstone. We've got Rio jumping in the car now. So for each driver, we have sort of a curriculum and then like what we want to get out of them and how we think they should develop to become a Formula One driver. Rio's quite far through the program, so we're getting to the more advanced stuff with him. So he's going to get in now. He's going to go out on a hard tire to wake himself up.
Where do you think the balance lies between being a great driver, but also having the technology, the engineering, and a good car to back you up?
Of course, the driver needs to drive fast, but driver needs to find what the car needs. So this is, of course, engineers can find, but the driver is the only person that the drive and feel.
With a workforce growing from 300 staff in 2023 to over 400 today, the Haas F1 team and Toyota Gazoo Racing partnership focuses on the people, product, pipeline mantra. This initiative aims to develop elite talent, such as drivers and engineers, while leveraging data analysis to build a superior racing team. When we look up at the top screen there, you see the wind and where it's coming from, and it just echoes what Dom was saying about how getting out on track here at Silverstone is so important because it's this real-world experience that you don't get at any other time.
When Rio's out on track, he only hears one voice, and that's Dom.
Yes.
There's a lot of trust there, and Rio has to, Dom has to trust Rio's feedback, and Rio has to trust Dom in what he's telling him and what parameters on the car to change whilst he's out on track. The better relationship he had with your engineer, performance comes with that. You can't underestimate the significance of that relationship and how it actually helps extract the most out of the driver and the engineering team as well.
If there was one thing that you wanted people to know about the TGR Haas F1 team, what is it?
It's going to sound cheesy, but we are like a little family. We are the family team. We've had a few people leave to go to other teams and want to come back. Some have come back, made us a better team. People come back because they miss that kind of camaraderie and that family feeling that you get with a small team, especially when it's driven by someone like Io, who's been here since the start. It's welcoming, but yeah, it's definitely the little family team, I feel.
What's the big dream for you? What is the goal and where do you see the team going short term, but also long term?
We are still on a very steep, let's say, journey of improvement. If we work together, we create a good culture, team spirit, that we can be fighting at top of the midfield in 3 to 5 years' time if we grow well. I'd like to think if we get to that point, in middle point, where we are fighting the midfield towards the top, we can look at, okay, what's the next step? How can we go for the podiums?
It comes back to your whole philosophy of just taking one step at a time.
You got to have a roadmap, right? But farther away from where you are, that roadmap, it's got to be flexible. But that road, the direction, the surface of the road, width of the road, how difficult the terrains are, right? That changes over the years. So that honestly keeps me going to want to do that better.
Motorsport pivots to a new agile 50-50 hybrid era, the math has changed. Backed by Toyota Gazoo Racing's engineering scale, Ayo Komatsu and his TGR Haas F1 team are here to create a winning formula. Hi, Ayo.
Hi, nice to meet you.
Nice to meet you. This is an incredible place. You're an engineer-led team principal with a PhD in vehicle dynamics. It is pretty remarkable. With the regulation changes that have come into effect, it almost feels like this has worked out very nicely in the favor of the team.
You know, this regulation change, the biggest regulation change I've experienced, I've been doing Formula One for 23 years. You know, sometimes we change on the aerodynamic side or chassis side. Sometimes we change on the power unit side. But never I experienced changes both at the same time. So it was a huge, huge challenge.
The 2026 car updates introduce active aero to dynamically adjust wing angles for maximum speed, followed by a boost button that allows drivers to deploy custom power unit profiles on demand. The new overtake mode grants an extra 0.5 megajoules of energy to training drivers, while automated recharge maps manage energy recovery to keep the power unit primed for the next attack.
No, it's definitely not tailor-made for us, but I honestly, with the size of the challenge, I expected a lot tougher start to the season, but just a huge credit to everyone in the team.
You talk so much about the people, but coming in from the Toyota side of things with people, pipeline and product, that seems to fit so well together in terms of a framework for the organization.
Formula One is an amazingly competitive international environment, and then that's the best environment, I believe, to grow people. So the core of our partnership, yes, it's a technical partnership. We're doing lots of engineering together, of course, but at the very heart of it is really to develop human beings, the people, who can basically perform to their individual best, because everybody's got different strengths and weaknesses and different capacities.
We're so early into the season, and yet we're seeing the culmination of all of that. The fruition is coming to birth. It's really quite remarkable.
The result is not something you can control. There's no point stressing about it. I believe that you should really focus on what you can control, which is your process, how you approach the tasks in front of you, right? We got to get best out of everyone. Actually, we need to make 1 + 1 more than 2. In order to do that, people cannot be afraid of failure. You know, I said everyone needs to put their opinion on the table. Doesn't matter if I don't agree.
This is a beautiful bird's eye view that we've got here. But tell me a little bit more about the magic that happens here, because obviously with so many people working around each other, teamwork must really be precise.
Teamwork is so important, but also the workflow. At the moment we're still trying to improve it, but how the parts come through the door, the order of the assembly, how it goes out of the door. There's the stores actually in that wall, then the sub-assembly shop there, composite shop down there. So all that workflow needs to come together, and then this would be where the finishing products are made. So all that is very, very important.
What keeps the love going for you?
Well, yeah, just the improvements, and also like people ask me what's the sort of like happiest moment when I do this job. Like if we have good qualifying or good race, and I can hear my people, like mechanics, engineers in the garage, celebrating, right? Then when I turn around from pit wall and see those guys hugging each other, celebrating, that really is an amazing moment.
This is the sound of a 2026 revolution. We're here at Silverstone, the historic heart of motorsports racing, and we join the TGR Haas F1 team for what is going to be an in-depth day on track. This session is designed to sharpen the skills of the elite drivers and world-class personnel that define the team's future. Welcome to the Frontline Formula. How close we actually are. Can you explain to me, where are we, what are we doing, what's this all about?
We're about to start the afternoon session here at Silverstone. We've got Rio jumping in the car now. So for each driver, we have sort of a curriculum and then like what we want to get out of them and how we think they should develop to become a Formula One driver. Rio's quite far through the program, so we're getting to the more advanced stuff with him. So he's going to get in now. He's going to go out on a hard tire to wake himself up.
Where do you think the balance lies between being a great driver, but also having the technology, the engineering, and a good car to back you up?
Of course, the driver needs to drive fast, but the driver needs to find what the car needs. So this is, of course, engineers can find, but the driver is the only person that drive and feel.
With the workforce growing from 300 staff in 2023 to over 400 today, the Haas F1 team and Toyota Gazoo Racing partnership focuses on the people, product, pipeline mantra. This initiative aims to develop elite talent, such as drivers and engineers, while leveraging data analysis to build a superior racing team. When we look up at the top screen there, you see the wind and where it's coming from, and it just echoes what Dom was saying about how getting out on track here at Silverstone is so important because it's this real-world experience that you don't get at any other time.
When Rio's out on track, he only hears one voice, and that's Dom.
Yes.
There's a lot of trust there, and Rio has, Dom has to trust Rio's feedback, and Rio has to trust Dom in what he's telling him and what parameters on the car to change whilst he's out on track. The better relationship he had with your engineer, performance comes with that. You can't underestimate the significance of that relationship and how it actually helps extract the most out of the driver and the engineering team as well.
If there was one thing that you wanted people to know about the TGR Haas F1 team, what is it?
It's going to sound cheesy, but we are like a little family. We are the family team. we've had a few people leave to go to other teams and want to come back. Some have come back, made us a better team. People come back because they miss that kind of camaraderie and that family feeling that you get with a small team, especially when it's driven by someone like Io, who's been here since the start. It's welcoming, but yeah, it's definitely the little family team, I feel.
What's the big dream for you? What is the goal and where do you see the team going short term, but also long term?
We are still on a very steep, let's say, journey of improvement. If we work together, we create a good culture, team spirit that we can be fighting at top of the midfield in 3 to 5 years' time if we grow well. I'd like to think if we get to that point in middle point where we are fighting the midfield towards the top, we can look at, okay, what's the next step? How can we go for the podiums?
It comes back to your whole philosophy of just taking one step at a time.
You got to have a roadmap, right? But farther away from where you are, that roadmap, it's got to be flexible. But that road, the direction, the surface of the road, width of the road, how difficult the terrains are, right? That changes over the years. So that honestly keeps me going to want to do that better.
Motorsport pivots to a new agile 50-50 hybrid era. The math has changed. Backed by Toyota Gazoo Racing's engineering scale, Io Komatsu and his TGR Haas F1 team are here to create a winning formula. Hi, Io.
Hi, nice to meet you.
Nice to meet you. This is an incredible place. You're an engineer-led team principal with a PhD in vehicle dynamics. It is pretty remarkable. And with the regulation changes that have come into effect, it almost feels like this has worked out very nicely in favor of the team.
This regulation change, the biggest regulation change I've experienced, I've been doing Formula One for 23 years. Sometimes we change on the aerodynamic side or chassis side. Sometimes we change on the power unit side. But never I experienced changes both at the same time. So it was a huge, huge challenge.
The 2026 car updates introduce active aero to dynamically adjust wing angles for maximum speed, followed by a boost button that allows drivers to deploy custom power unit profiles on demand. The new overtake mode grants an extra 0.5 megajoules of energy to training drivers, while automated recharge maps manage energy recovery to keep the power unit primed for the next attack.
No, it's definitely not tailor-made for us. But I honestly, with the size of the challenge, I expected a lot tougher start to the season. But it's just a huge credit to everyone in the team.
You talk so much about the people, but coming in from the Toyota side of things with people, pipeline and product, that seems to fit so well together in terms of a framework for the organization.
Formula One is an amazingly competitive international environment, and then that's the best environment, I believe, to grow people. So the core of our partnership, yes, it's a technical partnership. We're doing lots of engineering together, of course, but at the very heart of it is really to develop human beings, the people, who can basically perform to their individual best, because everybody's got different strengths and weaknesses and different capacities.
We're so early into the season, and yet we're seeing the culmination of all of that, the fruition is coming to birth. It's really quite remarkable.
The result is not something you can control. There's no point stressing about it. I believe that you should really focus on what you can control, which is your process, how you approach the tasks in front of you, right? We got to get best out of everyone. Actually, we need to make 1 + 1 more than 2. In order to do that, people cannot be afraid of failure. You know, I said everyone needs to put their opinion on the table. Doesn't matter if I don't agree.
This is a beautiful bird's eye view that we've got here. But tell me a little bit more about the magic that happens here, because obviously with so many people working around each other, teamwork must really be precise.
Teamwork is so important, but also the workflow. You know, at the moment we're still trying to improve it, but how the parts come through the door, the order of the assembly, how it goes out of the door. You know, there's stores actually behind that wall, then the sub-assembly shop there, composite shop down there. So all that workflow needs to come together, and then this would be where the finishing products are made. So all that is very, very important.
What keeps the love going for you?
Well, yeah, just the improvements, and also like people ask me what's the sort of like happiest moment when I do this job. Like if we have a good qualifying or good race, and I can hear my people, like mechanics, engineers in the garage, celebrating, right? Then when I turn around from pit wall and see those guys hugging each other, celebrating, that really is an amazing moment.
This is the sound of a 2026 revolution. We're here at Silverstone, the historic heart of motorsports racing, and we join the TGR Haas F1 team for what is going to be an in-depth day on track. This session is designed to sharpen the skills of the elite drivers and world-class personnel that define the team's future. Welcome to the Frontline Formula. How close we actually are. Can you explain to me, where are we, what are we doing, what's this all about?
We're about to start the afternoon session here at Silverstone. We've got Rio jumping in the car now. So for each driver, we have sort of a curriculum and then like what we want to get out of them and how we think they should develop to become a Formula One driver. Rio's quite far through the program, so we're getting to the more advanced stuff with him. So he's going to get in now. He's going to go out on a hard tire to wake himself up.
Where do you think the balance lies between being a great driver, but also having the technology, the engineering, and a good car to back you up?
Of course, the driver needs to drive fast, but the driver needs to find what the car needs. So this is, of course, engineers can find, but the driver is the only person that drive and feel.
With a workforce growing from 300 staff in 2023 to over 400 today, the Haas F1 team and Toyota Gazoo Racing partnership focuses on the people, product, pipeline mantra. This initiative aims to develop elite talent, such as drivers and engineers, while leveraging data analysis to build a superior racing team. When we look up at the top screen there, you see the wind and where it's coming from, and it just echoes what Dom was saying about how getting out on track here at Silverstone is so important because it's this real-world experience that you don't get at any other time.
When Rio's out on track, he only hears one voice, and that's Dom.
Yes.
There's a lot of trust there, and Rio has to, Dom has to trust Rio's feedback, and Rio has to trust Dom in what he's telling him and what parameters on the car to change whilst he's out on track. The better relationship he had with your engineer, performance comes with that. You can't underestimate the significance of that relationship and how it actually helps extract the most out of the driver and the engineering team as well.
If there was one thing that you wanted people to know about the TGR Haas F1 team, what is it?
It's going to sound cheesy, but we are like a little family. We are the family team. We've had a few people leave to go to other teams and want to come back. Some have come back, made us a better team. People come back because they miss that kind of camaraderie and that family feeling that you get with a small team, especially when it's driven by someone like Io, who's been here since the start. It's welcoming, but yeah, it's definitely the little family team, I feel.
What's the big dream for you? What is the goal and where do you see the team going short term, but also long term?
We are still on a very steep, let's say, journey of improvement. If we work together, we create a good culture, team spirit that we can be fighting at top of the midfield in 3 to 5 years' time if we grow well. I'd like to think if we get to that point in middle point where we are fighting the midfield towards the top, we can look at, okay, what's the next step? How can we go for the podiums?
It comes back to your whole philosophy of just taking one step at a time.
You got to have a roadmap, right? But farther away from where you are, that roadmap, it's got to be flexible. But that road, the direction, the surface of the road, width of the road, how difficult the trains are, right? That changes over the years. So that honestly keeps me going to want to do that better.
Motorsport pivots to a new agile 50-50 hybrid era, the math has changed. Backed by Toyota Gazoo Racing's engineering scale, Ayo Komatsu and his TGR Haas F1 team are here to create a winning formula. Hi, Ayo.
Hi, nice to meet you.
Nice to meet you. This is an incredible place. You're an engineer-led team principal with a PhD in vehicle dynamics. It is pretty remarkable. And with the regulation changes that have come into effect, it almost feels like this has worked out very nicely in the favor of the team.
You know, this regulation change, the biggest regulation change I've experienced, I've been doing Formula One for 23 years. You know, sometimes we change on the aerodynamic side or chassis side. Sometimes we change on the power unit side. But never I experienced changes both at the same time. So it was a huge, huge challenge.
The 2026 car updates introduce active aero to dynamically adjust wing angles for maximum speed, followed by a boost button that allows drivers to deploy custom power unit profiles on demand. The new overtake mode grants an extra 0.5 megajoules of energy to training drivers, while automated recharge maps manage energy recovery to keep the power unit primed for the next attack.
No, it's definitely not tailor-made for us, but I honestly, with the size of the challenge, I expected a lot tougher start to the season, but it's just a huge credit to everyone in the team.
You talk so much about the people, but coming in from the Toyota side of things with people, pipeline and product, that seems to fit so well together in terms of a framework for the organization.
Formula One is an amazingly competitive international environment, and then that's the best environment, I believe, to grow people. So the core of our partnership, yes, it's a technical partnership. We're doing lots of engineering together, of course, but at the very heart of it is really to develop human beings, the people, who can basically perform to their individual best, because everybody's got different strengths and weaknesses and different capacities.
We're so early into the season, and yet we're seeing the culmination of all of that. The fruition is coming to birth. It's really quite remarkable.
Then result is not something you can control. There's no point stressing about it. I believe that you should really focus on what you can control, which is your process, how you approach the tasks in front of you, right? We got to get best out of everyone. Actually, we need to make 1 + 1 more than 2. In order to do that, people cannot be afraid of failure. You know, I said everyone needs to put their opinion on the table. Doesn't matter if I don't agree.
This is a beautiful bird's eye view that we've got here. But tell me a little bit more about the magic that happens here, because obviously with so many people working around each other, teamwork must really be precise.
Teamwork is so important, but also the workflow. You know, at the moment we're still trying to improve it, but how the parts come through the door, the order of the assembly, how it goes out of the door. There's the stores actually behind that wall, then the sub-assembly shop there, composite shop down there. So all that workflow needs to come together, and then this would be where the finishing products are made. So all that is very, very important.
What keeps the love going for you?
Well, yeah, just the improvements, and also like people ask me what's the sort of like happiest moment when I do this job. Like if we have a good qualifying or good race, and I can hear my people, like mechanics, engineers in the garage, celebrating, right? Then when I turn around from pit wall and see those guys hugging each other, celebrating, that really is an amazing moment.
This is the sound of a 2026 revolution. We're here at Silverstone, the historic heart of motorsports racing, and we join the TGR Haas F1 team for what is going to be an in-depth day on track. This session is designed to sharpen the skills of the elite drivers and world-class personnel that define the team's future. Welcome to the Frontline Formula. I can't believe just how close we actually are. Can you explain to me, where are we, what are we doing, what's this all about?
We're about to start the afternoon session here at Silverstone. We've got Rio jumping in the car now. So for each driver, we have sort of a curriculum and then like what we want to get out of them and how we think they should develop to become a Formula One driver. Rio's quite far through the program, so we're getting to the more advanced stuff with him. So he's going to get in now. He's going to go out on a hard tire to wake himself up.
Where do you think the balance lies between being a great driver, but also having the technology, the engineering, and a good car to back you up?
Of course, the driver needs to drive fast, but the driver needs to find what the car needs. So this is, of course, engineers can find, but the driver is the only person that drive and feel.
With the workforce growing from 300 staff in 2023 to over 400 today, the Haas F1 team and Toyota Gazoo Racing partnership focuses on the people, product, pipeline mantra. This initiative aims to develop elite talent, such as drivers and engineers, while leveraging data analysis to build a superior racing team. When we look up at the top screen there, you see the wind and where it's coming from, and it just echoes what Dom was saying about how getting out on track here at Silverstone is so important because it's this real-world experience that you don't get at any other time.
When Rio's out on track, he only hears one voice, and that's Dom.
Yes.
There's a lot of trust there, and Rio has to, Dom has to trust Rio's feedback, and Rio has to trust Dom in what he's telling him and what parameters on the car to change whilst he's out on track. The better relationship he had with your engineer, performance comes with that. You can't underestimate the significance of that relationship and how it actually helps extract the most out of the driver and the engineering team as well.
If there was one thing that you wanted people to know about the TGR Haas F1 team, what is it?
It's going to sound cheesy, but we are like a little family. We are the family team. We've had a few people leave to go to other teams and want to come back. Some have come back, made us a better team. People come back because they miss that kind of camaraderie and that family feeling that you get with a small team, especially when it's driven by someone like Io, who's been here since the start. It's welcoming, but yeah, it's definitely the little family team, I feel.
What's the big dream for you? What is the goal and where do you see the team going short term, but also long term?
We are still on a very steep, let's say, journey of improvement. If we work together, we create a good culture, team spirit that we can be fighting at top of the midfield in 3 to 5 years' time if we grow well. I'd like to think if we get to that point in middle point where we are fighting the midfield towards the top, we can look at, okay, what's the next step? How can we go for the podiums?
It comes back to your whole philosophy of just taking one step at a time.
You got to have a roadmap, right? But farther away from where you are, that roadmap, it's got to be flexible. But that road, the direction, the surface of the road, width of the road, how difficult the terrains are, right? That changes over the years. So that honestly keeps me going to want to do that better.
As motorsport pivots to a new agile 50-50 hybrid era, the math has changed. Backed by Toyota Gazoo Racing's engineering scale, Ayo Komatsu and his TGR Haas F1 team are here to create a winning formula. Hi, Ayo.
Nice to meet you.
Nice to meet you. This is an incredible place. You're an engineer-led team principal with a PhD in vehicle dynamics. It is pretty remarkable. With the regulation changes that have come into effect, it almost feels like this has worked out very nicely in the favor of the team.
You know, this regulation change, the biggest regulation change I've experienced, I've been doing Formula One for 23 years. You know, sometimes we change on the aerodynamic side or chassis side. Sometimes we change on the power unit side. But never I experienced changes both at the same time. So it was a huge, huge challenge.
The 2026 car updates introduce active aero to dynamically adjust wing angles for maximum speed, followed by a boost button that allows drivers to deploy custom power unit profiles on demand. The new overtake mode grants an extra 0.5 megajoules of energy to training drivers, while automated recharge maps manage energy recovery to keep the power unit primed for the next attack.
No, it's definitely not tailor-made for us. But I honestly, with the size of the challenge, I expected a lot tougher start to the season. But just a huge credit to everyone in the team.
You talk so much about the people, but coming in from the Toyota side of things with people, pipeline and product, that seems to fit so well together in terms of a framework for the organization.
Formula One is an amazingly competitive international environment, and then that's the best environment, I believe, to grow people. So the core of our partnership, yes, it's a technical partnership. We're doing lots of engineering together, of course, but at the very heart of it is really to develop human beings, the people, who can basically perform to their individual best, because everybody's got different strengths and weaknesses and different capacities.
We're so early into the season, and yet we're seeing the culmination of all of that, the fruition is coming to birth. It's really quite remarkable.
The result is not something you can control. There's no point stressing about it. I believe that you should really focus on what you can control, which is your process, how you approach the tasks in front of you, right? We got to get best out of everyone. Actually, we need to make 1 + 1 more than 2. In order to do that, people cannot be afraid of failure. You know, I said everyone needs to put their opinion on the table. Doesn't matter if I don't agree.
This is a beautiful bird's eye view that we've got here. But tell me a little bit more about the magic that happens here, because obviously with so many people working around each other, teamwork must really be precise.
Teamwork is so important, but also the workflow. You know, at the moment we're still trying to improve it, but how the parts come through the door, the order of the assembly, how it goes out of the door. There's the stores actually behind that wall, then the sub-assembly shop there, composite shop down there. So all that workflow needs to come together, and then this would be where the finishing products are made. So all that is very, very important.
What keeps the love going for you?
Well, yeah, just the improvements, and also like people ask me what's the sort of like happiest moment when I do this job. Like if we have a good qualifying or good race, and I can hear my people, like mechanics, engineers in the garage, celebrating, right? Then when I turn around from pit wall and see those guys hugging each other, celebrating, that really is an amazing moment.
This is the sound of a 2026 revolution. We're here at Silverstone, the historic heart of motorsports racing, and we join the TGR Haas F1 team for what is going to be an in-depth day on track. This session is designed to sharpen the skills of the elite drivers and world-class personnel that define the team's future. Welcome to the Frontline Formula. How close we actually are. Can you explain to me, where are we, what are we doing, what's this all about?
We're about to start the afternoon session here at Silverstone. We've got Rio jumping in the car now. So for each driver, we have sort of a curriculum and then like what we want to get out of them and how we think they should develop to become a Formula One driver. Rio's quite far through the program, so we're getting to the more advanced stuff with him. So he's going to get in now. He's going to go out on a hard tire to wake himself up.
Where do you think the balance lies between being a great driver, but also having the technology, the engineering, and a good car to back you up?
Of course, the driver needs to drive fast, but driver needs to find what the car needs. So this is, of course, engineers can find, but the driver is the only person that the drive and feel.
With the workforce growing from 300 staff in 2023 to over 400 today, the Haas F1 team and Toyota Gazoo Racing partnership focuses on the people, product, pipeline mantra. This initiative aims to develop elite talent, such as drivers and engineers, while leveraging data analysis to build a superior racing team. When we look up at the top screen there, you see the wind and where it's coming from, and it just echoes what Dom was saying about how getting out on track here at Silverstone is so important because it's this real-world experience that you don't get at any other time.
When Rio's out on track, he only hears one voice, and that's Dom.
Yes.
There's a lot of trust there, and Rio has to, Dom has to trust Rio's feedback, and Rio has to trust Dom in what he's telling him and what parameters on the car to change whilst he's out on track. The better relationship he had with your engineer, performance comes with that. You can't underestimate the significance of that relationship and how it actually helps extract the most out of the driver and the engineering team as well.
If there was one thing that you wanted people to know about the TGR Haas F1 team, what is it?
It's going to sound cheesy, but we are like a little family. We are the family team. We've had a few people leave to go to other teams and want to come back. Some have come back, made us a better team. People come back because they miss that kind of camaraderie and that family feeling that you get with a small team, especially when it's driven by someone like Io, who's been here since the start. It's welcoming, but yeah, it's definitely the little family team, I feel.
What's the big dream for you? What is the goal and where do you see the team going short term, but also long term?
We are still on a very steep, let's say, journey of improvement. If we work together, we create a good culture, team spirit that we can be fighting at top of the midfield in 3 to 5 years' time if we grow well. I would like to think if we get to that point in middle point where we are fighting the midfield towards the top, we can look at, okay, what's the next step? How can we go for the podiums?
It comes back to your whole philosophy of just taking one step at a time.
You got to have a roadmap, right? But farther away from where you are, that roadmap, it's got to be flexible. But that road, the direction, the surface of the road, width of the road, how difficult the trains are, right? That changes over the years. So that honestly keeps me going to want to do that better.
Hello, everyone. Welcome back after lunch. I hope you enjoyed the break just now with our fellow guests here. And this is Mei Ling, and it's my great pleasure to be your MC for today again. So our next presentation is about Global Financial Markets Outlook H2 2026. This session will examine how interest rates, currency movements, geopolitical developments, and investor sentiment may shape global markets in the second half of 2026. 这个环节的主题是2026年下半年全球金融市场展望。我们会探讨利润、利率、汇率、地缘政治以及市场情绪对全场市场的影响。So everyone, please join me in welcoming Jamil Amar, Chief Analyst of GTC FX Global, to the stage. Jamil, please. Once again, let's put our hands together for Jamil.
Hi, everybody. Good afternoon, and thank you so much for being with me today, and also for the opportunity to come back to Hong Kong once again, one of my favorite destinations to visit. So, what am I going to talk about today? I'm actually the chief analyst at GTC. I've been in this industry for roughly 2 decades. I started off as a trader, but what I'm really passionate about is providing analysis on what's happening in financial markets and helping client education and sharing knowledge about what current trends and risks and opportunities we might be looking for in financial markets. But of course, all investments come with a degree of risk. And before I start with my analysis, I just need to read out our disclaimer. So over-the-counter margin derivative contracts, including contracts for difference and spot foreign exchange, are complex instruments and come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how these products work and whether you can afford to take the high risk of losing your money. Independent professional advice is highly recommended before investing. This seminar serves an educational purpose and will not include any financial recommendations or advice. Thank you for your patience, guys. So what I'm about to discuss is my own personal opinions and expectations for what might be happening in financial markets over the coming months. Of course, we're in a very unexpected and unpredictable period of the modern world. And what I really want to do is just briefly introduce a little bit more about myself. Very thankful to have the opportunity to come to Hong Kong once again. I have this amazing job where I get to travel worldwide, appearing on these international TV networks like the BBC, Al Jazeera, CGTN, Radio TV Hong Kong, and so forth. But what I'm really passionate about is actually my roots. It was 2008 when I started as a trader in financial markets, so actually I was one of you. And what I'm really passionate about is sharing knowledge, helping invest in client education. I'm actually having conversations about what might be happening in the world and what might actually be happening in world financial markets. I also have the wonderful opportunities with traveling and so forth to interview the likes of Jim Rogers, Wall Street investment legend, and many other opportunities to meet all of you worldwide. Again, it's my first time in Hong Kong for roughly 1 year. I've always appreciated coming back here. It's a place that I've regularly visited now for roughly the past decade, and I'm just thankful as well to just have the opportunity to come. So, I'm actually based in the United Arab Emirates. I live in Dubai, and as we might be aware, we have a geopolitical risk element that is happening in the region. And if you are trending and watching what's been happening over the past couple of days, unfortunately, we already had season 1 of the geopolitical episode. And over this coming week, we have seen season 2 begin to be released onto our radars. At the moment, the risk is increasing day by day that some of the very unfortunate events we saw earlier this year are going to repeat themselves. And if we're looking at what themes to potentially watch in financial markets and what happened over season 1 of this unfortunate geopolitical episode, we saw 3 trends that happened when it comes to investor sentiment. Firstly, as we all know, the region is very, let's say, sensitive to oil production, and we had a lot of volatility in oil price. But what I specifically want to talk about now, factoring the limited time that unfortunately I have for this presentation, is what happened with the US dollar, which continues to strengthen as safe haven demand. And specifically, I know what's very important on a sentimental level for this market particularly, what's happening with gold price. For example, if you look at what happened with gold earlier this year, we had the all-time high after all-time high. But many of you might have thought that during this unfortunate geopolitical conflict and season one, that the gold price would continue to go up and up. In fact, the gold price actually declined roughly 20%, and what investors were doing instead was putting their money into US dollars, an alternative safe haven. So if we're looking at how many in the room are actually trading financial markets? There's a very famous saying in technical analysis, and yes, I do follow technical analysis as much as the fundamental news, is that history repeats itself. So if we look at the types of trends that we saw over what I call season one, US dollar getting stronger, gold price getting weaker. So far this week, and again, I printed this chart out before I flew to Hong Kong, we actually have the same trend starting to develop. Volatility in oil price, sentiment driven. US dollar is once again starting to get stronger, and we're starting to see some more weakness in the gold price. Now, if you ask me, historically, gold prices still look very much overbought. It's something that as investors we say investors are still overweight with. If we look at the types of themes that investors were pricing into gold for 2026, interest rate expectations, a potentially weaker US dollar, that worldwide, not only in the United States, developed central banks will continue cutting interest rates. Unfortunately, what happened in the region has, as we say back in the UK and so forth, it's for a spanner in the works. Very much what the themes were for 2026 have been flipped on their head. And I think that now we're looking at the increased probability day by day that unfortunately the regional geopolitical tensions are going to escalate further. That actually the themes of expecting interest rate cuts, the themes of expecting a weaker US dollar, the themes that have expecting potentially a more optimistic world economy, unfortunately it's not going to happen. So what I'm looking for here is I'm curious that if investors continue to put more money into the US dollar, again, we're seeing emerging themes that is going to be the case, then maybe investors are going to find temptation to take more money out of gold. Again, since the geopolitical conflict started roughly at the end of February, early March 2026, we already saw the gold price drop from around 20%. I'm just suspicious and watching again. We're talking about risks that we're watching. We're not talking about something that's definitely going to happen because unfortunately, we cannot predict geopolitics. This world is very uncertain. We don't know what's going to happen tomorrow. As somebody who started as a trader, I can tell you now, 20 years on, I'm still learning new things every day because the world is changing. But I do think there's risks that heading into the second half of 2026, we might see some further profit taking on the price of gold. Now, briefly just introducing a little bit more about the company that I represent. Unfortunately, I've only got roughly 2 minutes left of this presentation today. You are more than welcome to join us at our booth, which is just literally behind this stage. But we are headquartered in Dubai. We are going to be the first brokerage that actually has its own headquartered towers in the United Arab Emirates. And also, if you want to partner with GTC or find out more about GTC, again, our booth is literally just behind this stage. We host these annual partner events every year where the likes of Jim Rogers, members of the UAE royal family, famous singers, and more than 700 partners worldwide have traveled to Dubai to participate. You are more than welcome to find out a bit more about GTC, and hopefully, should the region actually be a little bit more clearer at the end of this year, hopefully we're going to see you in the Middle East towards the end of 2026. But just to summarize, I know that we've got limited time. Again, I would stress out, as somebody who started as a trader, as an investor 20 years ago nearly, investing in your own education, remaining up to date on world economic events and world themes, It's as important now as ever. Again, when it comes to investing, there's no such thing as a sure thing. And to use a different metaphor that I've learned over time, never invest anything more than you're potentially willing to no longer have in your capital. But if I was going to summarize briefly what we're going to watch over the second half of this year, I think you've already understood the regional issues. Also, this market and this investor sentiment theme remains very much sentiment driven. So when it comes to fundamentals and technicals, we're not really seeing that much movement on the price. Again, charts and price never lies, but what we are seeing create volatility is headlines. And unfortunately, we could not predict geopolitics. With that in mind, guys, I'm very sorry I only had a brief 10 minutes to spend with you today. It's a pleasure to be back in Hong Kong. Thank you so much for having me. I wish you all a wonderful rest of your day at the weekend, and thank you once again.
Thank you, Jamil. So our next presentation will be coming up, and thank you, Jamil. Please be seated. Our next presentation is the Great Convergence: How Crypto, Capital Markets, and Regulation are Creating the Next Financial System. As digital assets move closer to digital traditional finance, the future of the financial system will be shaped by the convergence of crypto innovation, capital market infrastructure, and clearer regulatory frameworks. This session will explore how these forces may work together to build a more connected, transparent, and resilient financial ecosystem. 这个环节的主题是金融大融合、加密资产、资本市场与监管如何构建下一代金融体系。我们会探讨加密资产、资本市场与监管发展如何共同推动未来金融体系的形成。So everyone, please join me in welcoming Yanis Ashatis, Group Managing Partner of Phoenix Hill and Board Chairman of Revolut Digital Assets Europe, to the stage. Welcome.
Okay, good afternoon. All right. Okay, so my name is Yanis Ashodis. I'm the group managing partner of Phoenix Hill. We're a boutique advisory firm headquartered in the ADGM. I'm also serving as a board chairman of Revolut Digital Assets Europe. And also I'm a senior non-executive director for StoneX, which is a NASDAQ-listed financial services group headquartered in the United States, in the UK. So basically I'm sitting on the board of the European operation. And basically through my experience, through my engagements, through my journey so far, I'm going to talk a little bit about my vision of how I perceive that the whole digital assets universe is going to be incorporated into the traditional financial system, and what is this going to be creating at the end for the financial ecosystem. So, as you know, crypto was developed as an idea to democratize financial services and to provide a decentralization that would have allowed users to exchange value without the need for expensive, slow-moving intermediaries. So this was the idea that basically pushed digital assets and crypto to the forefront of financial services. Now, throughout this journey over the past years, we've seen a lot of different evolutions of what crypto was supposed to be. But traditionally, you had the institutional players, you had the regulators, and then you had the innovators. And my thesis, my idea, is that these three components are finally going to be converging in order to provide the next financial services landscape. Now, where are we right now? Crypto has finally grown up. Crypto is now one of the prominent assets and means to transfer value between counterparties, but also it's a technology which facilitates, which drives a lot of the financial innovation out there. Now, just as an indication, right now the market cap of crypto is sitting at about $3.3 trillion, right? So we're looking at a major chunk of the global economy. But this wasn't always easy. There were very big problems along the way. FTX, Celsius, Terra, all of these were teething problems that caused the collapse of confidence in digital assets and in crypto. Now, the reason, however, for these collapses was almost always the misalignment between regulation and innovation. You had innovation that was running much faster than the regulators could catch up. So all of these problems that were providing the blocks for the development of crypto were effectively caused exactly because there was no governance, there was no regulatory framework that was solid enough to understand and give the guidelines for digital assets to be used efficiently in the financial system. Now, remember that the idea of regulation is not to stop innovation. The idea of regulation is always to create efficient financial markets and to protect investors. Now, all of the regulatory authorities out there have these mandates as their guidance. And these mandates will always be there one way or another. In the European Union, for example, investor protection is a lot stronger than anything else. In the United States, you have a little bit of a more balanced approach nowadays, with innovation being a lot more at the forefront. And then you have other regulatory frameworks that provide pretty much a hybrid solution. The past couple of years, though, with MiCA, with the Genius Act, with the Clarity Act in the United States, with VARA in the UAE, you see that regulation has changed sides. So basically now, regulation is a catalyst. Regulation is a facilitator for innovation. And again, in some countries more than others. In the European Union, this is not so clearly the case. However, you see that innovation is driven, and that innovation is now being accepted in more strict, more traditional financial systems. And this systemic reaction has forced more traditional players to follow. You have the European Central Bank that is talking about the digital euro. You have the Bank for International Settlements talking about tokenized ledgers. You have BlackRock, you have JP Morgan. Even SWIFT, which is the prominent method of transferring value, is looking into incorporating tokenization, blockchain technologies into its operations. So where is everything going? We're moving from the idea, from this very romantic idea of decentralization, into a more practical, into a more realistic idea that the real value for digital assets, the real value for digitalization is, in fact, to drive traditional finance, which it might not be so sexy, but it's more realistic. And this is exactly where we're going. So we see finance becoming programmable. You have regulators now that are looking into tokenized mobility. You have traditional banks like HSBC, JP Morgan, utilizing blockchain distributed ledger technologies under the hood to drive their operations. And this is exactly where things are moving. Stablecoins are becoming rails, and every asset becomes digital. So at the end, even the romantic idea of decentralization is going to be somehow facilitated exactly because digitalization is going to cause democratization of financial assets. Traditional, very, very expensive financial assets like shipping, like real estate, even some corporate specific bonds are now going to be within reach exactly because digitalization, tokenization will allow the fragmentation and the ability to small retail clients to tap into them. And the banks are actually driving the race right now. It's not only the traditional exchanges, but with institutionalization, you see that banks are becoming the champions. And the regulatory race is now strategic. Now, companies that want to play the game, they need to understand exactly what the regulatory strategy they need to follow. And again, there is no one size fits all. You have different regulators depending on what you want to do, which jurisdictions you want to tap into, and what rails do you want to build. And of course, everything now has to start from the top. Not from the sales, not from business development, but everything needs to start from a very strategic corporate governance perspective. Institutionalization needs to come by understanding the risks and by understanding all of the restrictions that can be involved within the regulatory framework that you operate. Time is running out, unfortunately. So I'm just going to finish with the final message, is that the winners are going to be the ones that are going to manage to build the bridges between traditional finance and the new innovative financial products that digitalization, tokenization, and distributed ledger technology can bring to the table. If you're interested in the presentation, just feel free to reach out. I'll be more than happy to share it. So thank you very much.
Thank you, Yanas, for the wonderful sharing. Please be seated. Thank you very much. So next, we will now move into our next round of roundtable discussion. Are the prediction markets revealing the truth or creating an illusion of consensus? As prediction markets gain attention across the globe, the finance, technology, and public decision making, they raise an important question. Do they help markets discover collective insight, or do they risk amplifying sentiment, speculation, and perceived consensus? This discussion will explore the role of prediction markets in information discovery, market behavior, regulation, transparency, and trust. 各位来宾，这次的圆桌讨论主题是预测市场是在揭示真相还是制造共识幻觉呢？探讨预测市场在信息发现、市场情绪、监管透明度与行业信任中的作用。So everyone, to begin with, please join me in welcoming our moderator, Bruce An, Chief of Staff of Patricio Foundation, to the stage. Everyone, please put your hands together. And we would also like to invite our dear panelists. They are Eddie Chavia, CEO of Consilium, and Johan F. Roth, founder and CEO of Predictive Labs, Som Lam, head of patents, Evershares, Southernland editorial board of HKPG, TMT, LexisNexis. And last but not least, we have Clyde Cover, developer relations, DelRel Limitness. So everyone, please come on stage. Ladies and gentlemen, again, we would like to invite you to put your hands together to invite our panelists to the stage. And we are very happy to have Bruce as our moderator to facilitate this roundtable discussion. So everyone, you may take your seat accordingly. So I'm sure that one of our guests may be having a networking time somewhere, but no worries, you may start your discussion first and we will help you to organize that. So the floor is yours, Bruce.
Great, thank you. And thank you everybody for coming down here. Today's topic is going to be really interesting, at least from my perspective. I don't know if anybody here has not heard of what a predictions market is. Is predictions market something that's new to you guys? Okay, great. So I think this really tells the story of how popular the predictions market is. It's changed how we evolved from, here's Eddie right now. So it's really changed how we looked at how we predict the truth from traditional means such as surveys or polls that predicted things from sporting events maybe all the way down to elections. But now with the advent of predictions markets, what really began as like a small betting platform has now reached $10 billion in monthly volume alone, where now traditional institutions are integrating these technologies into their trading platforms. And traditional media is beginning to talk about what the outcome was in TVs and in the internet. So the real question that we want to ask our panelists here, is predictions market really changing the way we reveal the truth? Or is it just an illusion of consensus? So that's the topic that we want to talk about today. And so we have our amazing panelists. We have Eddie Travia, the CEO of Coincilium. We have Johan Everand, the founder and CEO of Predictive Labs. We have Sum Lam, the head of patents at LexisNexis. And we have Clyde Carver, head of DevRel and Limitless. So guys, thank you for joining our session today. And I want to kind of begin really quickly. A yes or no question. And tell me why. Is our predictions market really changing how we reveal the truth? Yes or no? We'll start with Eddie.
Changing the way we look at truth, right?
Yeah, exactly.
For me, it's a definite yes. And in a few words, why? Because I think it's the first time that the data and the prediction that people are making is backed financially. I mean, of course, we're used to the fact that you buy stocks, you also show your the direction that you think the market is going. But here is a very direct question usually, like who's going to win this election, what will be the interest rates. And I think this time people are really backing this statement, this thinking with their wallet, with their assets. So I guess, yes, for me, I think it's a way it changes because obviously we're talking about prediction. So the truth is whatever will happen. So I think it's definitely changing that, yeah.
Johan.
I would say yes as well. Although I would probably push back on the truth aspect. And without getting into like a philosophical debate, I would say a prediction market, just like a pundit or a poll, they basically give you a guess, an indicate, prediction. So it's a probability. So the actual truth only is revealed at the end when the outcome is known. So I would say it is changing the way we're guessing more than the way we're revealing the truth.
Some.
So I would like to cite a research paper by Vanderbilt, and the Vanderbilt says that they analysis the result of the poly market, and they found that 67% they got right, and they analysis the data of the Kashi, the result of the Kashi. They say that the rate of accuracy is 78%, and also the result of predicted they say that the rate of accuracy is as high as 93%. So generally, we can say that more or less reflecting the truth.
Yeah, I think the interesting thing about these research that shows that when prediction markets are wrong is that prediction markets can make consensus falsifiable. So when these markets are fully incorrect, that's memorialized on chain, on blockchain, you can see when the consensus was fully wrong, which is also very useful information as you move forward. So to echo Ed's point, yeah, cost does in fact make prediction markets more real, and like having to back it by money makes it more effective, but not automatically. You also need like depth of liquidity, you need real order books, you need real counterparties. But then you get these instances where they're wrong, where the consensus is wrong, but that's actually valuable in itself, I would say. Johan, you look like you have a response to this. I'm curious.
No, I was just about to say, I think that the incentive of prediction markets, they are kind of opposite, because on one way we're saying we're putting our money where our mouth is, and therefore it's going to be closer to the actual truth.
Right.
But at the same time, you're also inserting incentives that go against that, because at the end of the day on the prediction market, you get paid not by being right, you get paid by being right at the right time. So that can insert problems. Yeah, definitely.
There's more incentive to be right at the right time, you mean, and that temporal aspect, yeah.
Well, I mean that by being right, I don't mean being right about the outcome. I mean being right about the fact that I'm betting at the right moment before something changes.
Right.
And therefore I'm trading at the right time before the rate changes.
Yeah.
And that's why you make real money. So it's not about being right about the outcome.
Right.
You know, one of the things that I love about moderating on a panel where people are actually debating or talking about and exploring these ideas, that makes this job so much fun. So first of all, thank you for that differing opinion. This is fantastic. A quick question, second question. This is going to be for Eddie and Johan. Okay. So and some kind of mentioned some of the research studies that are out there. One research study in Columbia University, researchers found that at least 25% of all buying and selling in the crypto-based predictions market, poly market, is really inflated by wash trading, whales, influencers, and so on and so forth, that are really looking to artificially inflate prices and so on and so forth. Aren't these actions really giving a false impression of what really the truth is? Or are these just growing pains of an evolving market? Or do you really see the need for change? Let's start with Eddie.
Well, unfortunately, in the world of trading in general, I would say not even just cryptocurrency trading, there have been a lot of cases where you have some form of wash trading. I mean, traditional finance, and of course, I would say maybe easier to see in cryptocurrency because, as you were saying, the study is looking at the blockchain transactions because obviously you have a trace, it's easier to see, it's easier to spot. So yeah, I agree. It's part of a growing pain. I don't really have I mean, obviously, I think it's kind of useless because I understand that influencing the market on the way to the resolution of the market makes sense to maybe some actors, but obviously it doesn't help at all, you know, in terms of forming the consensus around what the prediction market is actually doing. So it's, for me, I see it a bit of a waste of resources, waste of resources in general. But I agree that it can be confusing, obviously, because they're trying to mislead maybe some traders as well, or some people buying these contracts. Yeah. So I guess part of the growing pains, and hopefully wasteful or useless enough so that the actors by themselves stop doing it at some point. Yeah.
I agree with what Eddie said. I would add that wash is basically Well, you're buying from yourself, you're selling to yourself, nothing's really moving. And so you're distorting the market, but it's a volume issue, it's not a pricing issue. Whales, on the other hand, well, they're a different beast altogether, well, pun intended. If you take, well, a whale will put a lot of money in a specific position. If you take the example of, when was it, 2 years ago, where a French guy put a lot of money in the US election because he thought he had seen something that others had not seen. So basically he bet the house on the fact that pollsters had missed something. He happened to be right, which is great for him. He made a lot of money. But he could have been wrong just as easily. He didn't prove anything. All he did was basically play with his guts. And the problem is that when you're a whale in the prediction market environment, what you do basically is that you hold a big sign saying, hey, everybody, I'm going to pay everyone who knows better than I do to bet against me. And I'm going to pay those guys. And of course, a lot of people know better than you and are going to want to take your money. So doing that is very risky, very dangerous, and most of the time it fails. So unless the market is very thin, typically it fails. So I would not recommend being a whale and to try to manipulate the market this way.
Yeah, I think a lot of the problems can be solved with enough liquidity, right? That's one way of kind of solving this issue. But the other topic that I think you mentioned, Johan, a little bit earlier was the fact that you could get a stronger signal by somebody actually putting their skin in the game, so to speak. When they're putting their money into what it is that they're really betting on, that gives a much stronger signal as to what it could potentially be the truth.
Well, if you use it, if you use prediction market to get to the truth, again, quote unquote, yes, it can distort the market slightly, but it's a very, very expensive way of doing it.
Yeah, that makes sense. That makes sense. Okay, so let's jump into a slightly different topic. Let's talk about enterprises and traditional side of things. And as I mentioned earlier, enterprises are now looking to use predictions market as a means to forecast outcomes as well. So news outlets, as I mentioned, are beginning to use data inside Polymarket and Kalshi as actual data points in their reporting. But more interestingly, corporations are now using predictions market to predict more accurately, as an example, whether or not a product is going to ship more accurately than the product managers forecast themselves, which shows that there is some truth in it predicting the truth, right? So on the surface, it seems like there's many places where it actually does seem like a better way to reveal the truth. So for some and for Clyde, what are your thoughts on this part?
So I agree that it is perhaps a better way to reveal the truth. However, I have done a mini research, and I think that there are 3 problems when you read the data. The first problem is that maybe some of the very rich people, they can buy up so many yes or no. This is first point. And the second point is some of the buyers, some of the battles, maybe they just copy what they learned from the news media. And the third point is that usually this kind of new technology is used by the technology gurus. So it does not really represent the whole world. So, I mean, by bearing in mind these 3 points, maybe we can be more cautious, more careful about the result of these predictions.
Thanks. Yeah, to echo some of your points, it's not just news media that's tapping into predictive markets now. It's also the owner of the New York Stock Exchange is recommending it as a solid metric. We're seeing this. Even the Federal Reserve is releasing information about prediction markets as a reliable, distributed metric. And I think the real key for institutional adoption here is actually having a solid data programmatic layer around these prediction markets that's not just a UI where you see odds, actually having robust APIs that institutions can actively connect to, WebSockets where they can have live data streams over the real odds of these events, where it's going to get exciting for companies to actually use these as real data sources. I am equally interested by kind of talk about revealing truth. There's certain questions that just aren't public information that prediction markets can help reveal for companies. For example, pre-IPO prices. What's Anthropic going to be worth, right? This is where it gets really interesting, where if you open up an event for what is Anthropic and IPO at, and you make that a prediction market, eventually the consensus will about arrive to some expert opinion that should be pretty darn close to what Anthropic will actually IPO at. These are the kind of questions that I think really get interesting for the prompt of this whole panel. How do we answer questions that are otherwise completely private, purely speculative, bring them into a realm that actually forces some public opinion and expert opinion on?
If I could just jump on that, actually, I think that's one of the dirty little secret of prediction markets, especially in the realm of corporation, is that the whole thing is fueled by insiders, because you cannot get that sort of information without being an insider. So you're rewarding insiders to go and basically, well, let the cat out of the bag.
Exactly.
And we are pretending that the truth comes out sort of naturally, sort of like because 1,000 people are going to be betting, oh, suddenly the truth is going to come out, like that old thing about that ox and its weight or whatever. That's not how it works. No. It's really insider trading that actually works there. It works. We just pretend that it's bad and we don't want it, and we're putting rules against it. But at the end of the day, there's no way around it. The only people who can steer the price in the right direction are the people in the know. And who's in the know? But the people who are inside the company.
People who know, yeah, of course. And it's depending on who you ask, this might be a feature, not a bug, right? This is the incentivization of the dispersion of information. It's an interesting use case, but of course it has to be regulated. There should be you need some safeguards around this to some extent, right? But it gets interesting with these questions, yeah.
Yeah, thanks for that. This is so one of the things that now I'm wondering is, any of the vendors here, are they looking at predictions market to enhance their products? Now, I'd be very interested in hearing about whether or not any of these vendors here that are working or exploring predictions markets to really figure out what the truth is and integrating from a technology perspective. So this next question is really for Eddie and also for Clyde. So we're talking about builders now, right? And Eddie, you work for a VC firm at a very high level, right?
A venture builder. Venture builder,
exactly. And Clyde, you're the head of developer relations. You work with the developers on a day-to-day basis.
All the time.
Exactly.
Every day.
So my question to you guys is, let's delve into who are the builders now on the predictions market side of things? Who do you see currently building things? Are they evolving the space? Are they bringing in something new to the space? Or are they just basically trying to recreate what Polymarket and Kalshi is? Yeah, Eddie.
Well, for our approach is, because we have been in the space for a long time, Coincilium has been active in initially the blockchain space mainly, and this has been going on for more than 10 years now. Shares have been trading for 10 years on the Aquis Stock Exchange in London. So our experience is backing entrepreneurs, helping entrepreneurs in growing their startups, and initially mostly in blockchain, and now in the sector we call frontier technology. So it includes prediction markets, agentic AI, and of course still digital assets. So our approach, for example, we are backing Johan here and his company called Predictive Labs, and our approach was to look at the market. I mean, obviously we can see that the market is growing, and again, it's not yet completely, understood, obviously, or even used by everyone, but it is growing. we're not trying, at our level, we're not seeking to reproduce or invest in a company that is doing the same thing as Polymarket or Kashi. That's why Predictive Labs' approach was of interest to us, because they're looking at the intelligence layer. They're looking at aggregating data from the sector. So it means you don't fall into the usual regulatory concerns, and you're also not trying to necessarily, you can work with the big prediction markets, you don't compete with the prediction markets, right? So that was very interesting approach for us. So that's what we see. And we also, even in blockchain, our approach has always been looking at the ecosystem. Who is building certain important tools in the ecosystem? So prediction markets, we have kind of a similar approach. Yeah.
Thanks for that. Clyde, what are your thoughts?
I am very bullish on companies like Predictive Labs. I think these aggregation layers, especially, I think it's smart that you guys are leaving the execution layer out of things. Because this is the real magic of prediction markets to me, is this information dispersal and this new informational primitive that they can be. And you also touched on AI agents a little bit. I think optimizing the agent experience around prediction markets is going to be very interesting in the coming years. Correct. To allow is this new invocation economy that's getting talked about. We're shifting from the attention economy to the invocation economy, where it's more about how do we drive AI agent usage and traffic to our platforms to actually get usage. And I'd be interested to see how you guys will cater to agents in Predictive Labs. Aside from just aggregators, though, and information sources, we work with a lot of different trading platforms, trading teams, a lot of Web 2 companies that feature similar products that want to get into the prediction market space, that are curious to offer this as a new financial service to their users. So we're actually working with a lot of third-party existing Web 2 companies that want to offer prediction markets as a new primitive on their platform. So this could be neobanks, fintechs, and one thing that we're really focused on Limitless, not to compare us to our competitors, but we think globally the long tail around prediction markets in different parts of the world is going to get really interesting, especially in regions like Africa, where we're working with a partner called Stake Street. And they have a fintech platform where they have many different products they offer, and they're going to start offering prediction markets for their users, often localized. And yeah, aside from just information aggregation, AI agent layers, and some of these regional fintech items, I'm also very curious about what we're seeing more user-generated markets, which are builders of sorts. So this is something we enable on Limitless, allowing the decentralized creation of prediction markets, which is a whole different can of worms to discuss. Because then how do you resolve decentrally created prediction markets? How do those actually get carried out? And then you can answer entirely new next level localized questions if you're allowing for user-generated markets. And that's something I'd be curious to hear your guys' opinions on actually at some point later if we have time to talk about UGM as it gets about.
Well, I think the time right now is the time actually.
Yeah.
But just before I jump to Johan, I think that's what really shows the proof of the predictions market's growth. When you see people building tools, when you see people building systems that integrate into these predictions market,
Yeah.
that I think is the marker of a evolving and maturing space. So we're certainly not here to show projects, but we do have somebody that is actually building a predictions market. So Johan, maybe you could explain your philosophy, your vision or your philosophy around the system that you're building.
Yeah, Predictive Labs, as Eddie mentioned, we see ourselves as an analytic layer sitting above prediction market venues. So our product, it's called Nijin, and what it is basically the front door to prediction market. See it as the homepage of prediction market in a way. It's where you would go in order to see every venue, every market, how they compare to each other, and get the information that you need to make the right judgment call in order to determine where you want to to place your where you want to invest in a way. So we're not competing with any venue, and we're not placing any orders ourselves. We're just giving a slight edge to the users, to the traders. This way they know a little bit more than they would otherwise, and they have more informed decisions.
So that delves even more into like the human psychology of things, right? And so then that's the topic that I wanted to delve into a little bit further. So let's talk about human psychology. And this question is for Sam and also again for Johan. We talked a little bit earlier about potentially better data signals that you get when you put your skin in the game, so to speak. And researchers are a little bit divided on this topic. Some researchers say that when you put your money to give your voice, that really enhances your thought process and enhances the decision making, and the data that you get out of it is clearer. Others really say that it's really dangerously close to gambling, really, and it creates this mentality where it's really more about the winning and the dopamine that you get. So, what side do you lie in this? Maybe we'll start with you.
Yes, I saw that on the Polymarket website. It lists, for example, Hong Kong as a place, as a jurisdiction that allowed this kind of platform. However, I would like to just recap the message from the Hong Kong authority, which is IEPC. They say the Investor Financial Education Council. They said that this kind of prediction market may constitute illegal gambling. And I think the reason why is because unlike the investment, for example, by investment, we know that we are putting the money in a company, so we become a shareholder. So we become grow with the company, and there are possibility that we may gain or lose, but we are part of the company. However, for the predictions, we are not really the part of the game. For example, if we want to guess who will win the next term of the U.S. president, we are not the president themselves. So I think this is one of the reasons why in Hong Kong they suggest that it might be illegal in Hong Kong.
I would add that I think that one of the issues that we have with prediction market is that typically we're conflating two sides of the coin. On the one hand, we say prediction markets are great because the price is what is driving the probability of an event taking place. So there's some information there. On the other hand, we're saying prediction markets are great because you can put your money into something and you can make money out of the market. And those two things are actually very different. What it means is that for the first part is about basically knowledge, and opinion. The second is about making money. And if you have knowledge, let's say tomorrow you know something that others don't know about an event, you're not going to say anything about it. You're not going to talk about it. You're not going to post about it. What you're going to do is you're going to put your money on Kalshi, Polymarket, or Limitless, stay very, very quiet, and hope that the price doesn't change until you've put all your money in. You definitely don't want the market to change before you're fully in the market. So you don't want to voice your opinion. You want to place your bet. The people who voice their opinion, they're the people paying. And that's why you've got this conflation, because it's like you're asking, is it gambling? Well, it's only gambling if you don't know what you're doing. You know, it's in poker, they say when you walk in a poker table and you cannot spot the mark, you're the mark. You're the mark.
Rounders. The movie Rounders. I'm sorry. Go ahead. Yeah. Absolutely. Absolutely. And if you guys haven't seen the movie Rounders, check it out because that's exactly what they're talking about. If you're at the poker table and you don't know You know, if you don't know who the least skilled player is, you're probably the least skilled player in that table. That's basically what he's talking about. But isn't that like getting close to potentially insider trading? And do you see a need for any kind of regulatory changes? And again, going back to some and Johan as well. Yes, some. If you could answer that, yeah. If you know, are there any like many times people will say that this could be close to insider trading. So do you see a need for regulatory changes coming away, or?
I mean, it is likely, it is possible, because that, I mean, especially for very rich people, they can buy up a lot of yes or no. So it is in a slightly gray area. It might overlapping with inside trading. Yes, I agree. But so far, because this is very new technology, there's no clear law in Hong Kong, at least in Hong Kong. But I think this is a very good question. I mean, that we need to explore it a little bit more.
I would. I mean, you mentioned insider trading, and Clyde and I debated on that a little earlier. And I would say that it's part of the question, and there's a lot of very good points about regulation and whether people should or shouldn't bet, whether it is trading or gambling or whatever. And I think that that's all good. But I think that we collectively have a blind spot, maybe a voluntary blind spot, in the fact that we're asking who can bet. We're not asking who chooses who wins the bet, who settles the bet. And I think it's a much more important question, because something that, I mean, to give you an example, at the last Super Bowl, Carly B was supposed to be performing. She showed up on stage, she danced on stage, she did not sing. Did she perform or not? One venue said yes, she performed. The other said no, she did not perform. So you've got 100 million people watching an event at the same time, two venues betting on the same market at the same time, and two outcomes. So I think it's much more interesting to regulate who actually decides who wins, because ultimately it decides what the truth is, which is actually what we're talking about right here. You cannot decide the truth unless you have a regulatory framework that decides who is responsible for determining the outcome of a market.
It sounds like we're going to have to get a lot of lawyers engaged in this one, right?
No, having proper market resolution and figuring this out is going to be the core mechanism that we have to sort.
Yeah, and you mentioned if you add more markets, like decentralized markets, that's when it's going to get even worse.
It's going to get crazy.
Who's going to be, well, it's like the watchers. Who's watching the watchers?
And I don't have the answer to that, but it's something we have to figure out. But to get back to your original prompt, though, to distinguish prediction markets from gambling simply is that the odds of a prediction market actually give you information. The odds of a poker game don't tell you much. I mean, they tell you about your odds of winning, right? The odds of a slot machine are static. That's how that slot machine works. The odds of the outcome of the next Guatemalan election actually tell you something about a real geopolitical event happening on this planet. So I think that for me is the easiest way to help explain and not conflate the two, because as a price moves on a prediction market's odds, that means somebody has backed up a real life position with their money and is changing an actual informational metric, right? This is not the case with anything in a casino. So that to me, the central distinction is one is informational and the other one is a game. Yeah.
Thanks for that. I know we're running out of time here. Any last thoughts on that one, Eddie, before we close the session?
I like these examples, and there have been many examples around the fact that, as Johan was saying, you can look at the same event and you can analyze it and you can assess it in different ways.
Yeah.
And I agree that solving that is probably a very important part of the whole prediction market itself. Not an easy one probably to solve, but a very interesting case, because interestingly, and I think something that Clyde refers to in a way is that when you play a game and the rules are very clear, like poker or casino, you have a result which is not based on semantics, right? But in prediction markets, the result is based on semantics. And semantics is always kind of open to interpretation. So I think it's normal that we go into layers of interpretation and so forth. So that's a different problem, but it's an interesting, maybe intellectual problem for at some point, yeah.
Yeah, this is a fascinating conversation. I thoroughly enjoyed the time listening to you guys. I think from all the insights that the panelists have given, I think we can all agree that the predictions market is here to stay, and it will continue to evolve. It certainly is a market to watch for and continue to potentially invest in as it matures. I want to thank the panelists all here for their insights, and I want to thank the audience for listening to us. So thank you.
Thank you all. Thank you. So everyone, please follow our staff and you may head to the interview area. Thank you very much again for bringing us such a wonderful sharing. Thank you. Thank you. So ladies and gentlemen, we will now move into our next round of roundtable discussion, and the topic is DeFi for institutions. What can actually be institutionalized? As DeFi continues to evolve, the key question is no longer only about innovation, but also about which parts of decentralized finance can meet institutional standards for security, compliance, transparency, liquidity, and governance. The discussion will explore the practical pathways, limitations, and opportunities for bringing DeFi closer to the institutional adoption. 这一场圆桌的题目是机构级 DeFi 哪些真正能够实现机构化落地？我们会探讨 DeFi 在安全、合规、透明度、流动性及治理方面如何满足机构参与的要求。So to begin with, please join me in welcoming our moderator, Jonathan Gill, Clients, Co-Creation and Coverage Lead of SC Ventures, to the stage. Welcome, Jonathan. And of course, joining the discussion are our panelists. They are Aaron Cole, APAC Lead, Institutional Partnerships, Bitwise Asset Management. Esme Powell, Head of Capital Markets and Strategic Intelligence, 30K. Carrie Law, Founder of Wow Impact Group, Board Advisor, Asia Artificial Intelligence Alliance, Vice Chair, Hong Kong International Family Office Association. So once again, everyone, we would like to have you put your hands together and welcome our moderator and our guest speakers on stage. The floor is yours, Jonathan. Thank you.
Thank you very much. Okay, I'm Jonathan Gill from Standard Chartered Ventures, and I'll be moderating the panel today. So there's been a lot of discussion around institutional DeFi. And today I want to focus on one question. So what can actually be institutionalized? Not hypothetically, but within real mandates, compliance, and risk frameworks. So we'll start with you, Aaron. So what part of DeFi is already institutional grade? And what makes those use cases acceptable?
Hello. Yeah, that's a good question. So just a quick intro of myself. So I'm Aaron from Bitwise. I lead partnerships and business in APAC. Bitwise is an asset manager licensed out of the US and Europe. We have around 15 billion worth of assets under our management. And most of our AUM comes from our ETF products, which most people know us by. And more recently, we've been getting more into active management strategies, as well as more on-chain activities such as DeFi as well. So yeah, at the forefront of asset management, we've been seeing a lot more adoption of DeFi from the institutional side. I think a couple of years ago, when we speak about DeFi, we used to think of DeFi as kind of wild, wild west, no KYC, no AML. Anyone can interact with the protocols, and essentially for institutions, it's impossible to use DeFi in any ways. But today is very different. I think there's a large part of DeFi that is actually being KYC'd as well. For example, if we believe, RW assets is a trend that's going to continue. Actually, a lot of RW assets are coming on-chain, And a lot of investors and users are actually using these RWA assets, right? Whether it's tokenized money market funds or tokenized real estate funds or any tokenized funds, right? They're actually using it as collateral to take out loans much more easily on DeFi protocols such as Morphle, Aave, Camino, right? So definitely, I think when these investors, when they acquire these tokenized assets, they're actually being KYC'd on these platforms. So if you don't meet certain requirements, you actually are not able to get access to these tokenized assets, right? So definitely, RWAs as collateral to take out stablecoins on DeFi protocols. That's a KYC'd route of using DeFi. So for sure, like I said, DeFi is definitely being used by institutions today, and I do see that the trend is going to continue for a long time. So.
Okay, thanks, Aaron. So let's look at this from the other side of the coin. Esme, which parts of DeFi will never be institutional?
Right. I think, thanks, Jonathan. So I think there are two ways of looking at it, right? So obviously the first will be regulatory compliance, and I think Aaron hit the nail right in the head. So it will be the ones that are not, AML, KYC, or currently I think regulators are trying to work with decentralized identities. So I think that's one of the red flags that I will highlight. And the second thing, so at Certic, because we focus on code security, right? So what's really important is that for the smart contracts, so there's business logic that is embedded into it. So I'll give you an example. For example, for a centralized exchange, so operational security will be one of the top of mind issues that global regulators are looking at. And if compliance measures are not embedded into the way that businesses are being run, and especially on the code side, given that smart contracts are automated, so that'll be one of the areas that is a big no-go. So I talked about the first dimension, which is regulatory compliance, right? And the second would be in terms of the ROI, right? So whenever financial institutions, for example, I was wearing the head of digital assets at two different broker-dealers. So the number one question is that what is the ROI and what's the IRR and the payback period when it comes to deploying, for example, investing in the digital asset infrastructure, right? So if that doesn't make sense right now, especially given where the Bitcoin levels are right now, so it already bars a lot of institutional adoption in DeFi, but I think that will obviously change when pricing goes up again.
Okay, thanks, Esme. So Aaron and Esme have spoken about products and markets. So let's speak about infrastructure. So Carrie, what is missing today from a digital identity and trust perspective that prevents institutions from participating at scale?
Jonathan, you have a very good question, and actually Aaron and Esme have phrased it very, very well. And regarding to DeFi into institutional kind of like transactional level, how we can boost this transaction volume so that we have faith and trust for using that as a verifiable identity. I think we have lack of global standard, that we can have the DeFi as well as on-chain, as well as infrastructure. Institutional banks can really connect with each other. And for doing that, Wow Impact has been advising various companies, one of them including FTX Money. They help to build an AI conversational compliance model, meaning you do not need to fill in a very lengthy native form, but instead you can use conversation to do the KYC and KYB. And it is built with, maybe you heard of that, lay and relay structure, meaning legal entity identifier structure, which is a global standard. So if we can have a global standard for the LEI as well as VLEI, meaning using virtual assets account, so that we can actually make DeFi into a sizable transaction volume, which is recognized by institutional banks as well, or regulatories, as well as all the on-chain platforms, that would be a big potential market. I cite you an example. So one of these KYC, KYB company, they actually have 39 billion revenue last year, USD, because of their compliance model helping to build this trust and faith. So I believe if we can go into this AI first conversational level, then we can help more speedy, trust, and smart transactions happen.
Okay, thanks, Kerry. So the next few questions will be for everyone on the panel. So is KYC and KYB and digital identity ultimately the key bottleneck here? Or are institutions alternatively still more worried about regulation, custody, and governance? Aaron, we can start with you.
Yeah, I feel like, all those topics that you mentioned, I think all of those are still concerns for institutions when they consider whether they can or want to get into DeFi. But I do feel over the past 3, 4, 5 years, a lot of that has been gradually being built out. For example, custody. Today, if you want to have safe custody of your digital assets, you have many good choices in the market, right? Your BitGos, your Anchorages, all these are, some of them are actually licensed banks, right? They can actually hold your crypto assets in a very safe way. And also, in terms of compliance and regulatory development in different parts of the world. In the U.S., obviously, there's, Genius Act with stablecoins. Hong Kong also has, allowed stablecoins to be issued here. We're all hoping for the Clarity Act also to come across or progress in the U.S. as well, so that more DeFi projects or more crypto exchanges can actually be built in a very compliant manner. So I think on the regulatory side and also on the custody side, we've progressed quite a bit during the last couple of years. I think what's kind of holding institutions back today maybe is on the safety side of DeFi. So I'm sure Esme would know, since Certix does a lot of audits, there's been definitely a lot of hacks happening this year. I think if you look at the kind of total amount being hacked this year versus the year before, 2 years before, it's actually been on an upward trend, right? So I think for institutions to adopt DeFi fully, the stack has to be safe to use, right? Smart contract has to be audited in the right way. If bad things happen, like the Kelptal incident that happened a couple of months ago, someone has to be responsible, right? You can't go like, hey, I'm a DeFi protocol, it's permissionless, so if our protocol gets hacked, no one is responsible, right? So someone has to be responsible. Guardrails, guidelines have to be in place for DeFi protocols for it to exist and for institutions to use it in a very, comfortably, I would say. So I think, safety, also knowing who's going to be responsible for, hacks and things like that is very important for DeFi to be used fully by institutions, yeah.
Yeah, so back to your question. So I think you mentioned 3 things, right? Ranking what's hindering institutions from coming in. So number 1, I think number 1, the top bottleneck will be regulations. And then second, it will be followed by governance, and third will be custody. The reason I say that is that in general, so technology is already up to a very good standard, right? So right now, I think it's the ecosystem around it that needs to get better. So I think like looking at it from an institutional perspective, so even for a lot of different pockets of digital assets, so there hasn't been enough harmonization around it. So if you're, say, like JP Morgan, or if you're like Goldman Sachs, so how do you decide whether or not to deploy into digital assets, right? That entails essentially lifting up the entire legacy trading system and putting in digital assets friendly systems, right? So given that there's so much capital that needs to be deployed, so it's important that regulators are already positive and also supportive around it. And I think that's given my role is interfacing with different regulators globally, so I think that's one thing that regulators know that they need to really go quickly, but that's one of the spots that hasn't been addressed yet. And the reason why I say that custody and also governance, so given that we're all around permission blockchain environments, so I don't think, and also custody is already at a very top tier technology level, and there are already regulations around it, so I don't think these would be as much as a concern.
Thank you. 100% with you, Esmil. And then for the governance part, another way to look at that, I believe, is the payment infrastructure that connect all the DeFi players as well as all the virtual accounts which is on-chain, so that we can really provide a solution which is just turning on, then you can plug in all the pay side as well as settlement side players on the DeFi scale, ecosystem. And with that, what we've been looking at from technology point of view, how we can help all pay side as well as settlement side companies can use a cloud-based infrastructure system to fulfill the governance part that regulatory would agree, as well as able to verify this identity, then we can provide audit trails that helps all the regulators to really trace all the transactions. Then with this comprehensive layers, we hope we can really help DeFi to get institutionalized at the end.
It's very interesting. So let's change gears slightly. So looking ahead, do you see the future as institutions coming onto public DeFi, or DeFi moving the other way and moving onto permissioned environments, or lastly, parallel systems that never fully converge? We'll start with you, Carrie.
Well, I believe never fully converged because we need that ecosystems, but with the overlapping part. Because if you are fully regulated, then a lot of transactions or I would say economic system may not be, economic activities may not be happening. So I cite you an example. So I was meeting with a bank. They have full license in the Middle East. And they've been shipping a lot of products cross-border, meaning trading. So products like leading brands, if I cite it, then you'll know very quickly, like DJ, and then BYD, and then Xiaomi, globally. But they can't actually settle the payment using regulatory settlements. So they have to have the DeFi transactions that be on-chain and then help doing that part. And the infrastructure, cloud-based, white label ecosystem can help this bank to settle that issue. So it's somehow sitting in between, but when it is happening, you still have the DeFi world as well as the regulatory world. So I believe convergency will happen, but still two ends. Thank you.
All right, thanks. So I take a different approach, right? I think ultimately, I think the key word here will be around liquidity. So I want to cut to the chase. I think the answer will be the number one, in which crypto is moving into the institutionalized space. And number two will be institutionalized is also moving into crypto because they want to tap into the on-chain liquidity. So I think the consensus is that we all agree with point number one, right? But point number two, so I've been speaking with some of the asset managers, and they've been trying to tap into on-chain liquidity, and they're partnering with the exchanges, right? So one example I can give would be around Franklin Templeton, in which in order to market their Benji tokens, so they're essentially speaking with like the top 10 exchanges in order to get the liquidity. So that's one example that we see. And for point number three, so I don't think that will continue in parallel universes because you can see like, on the global level, so the regulators are really closing in terms of regulations, right? So obviously there's always this lag between where innovation is and also where regulations are, right? But I think compared to 3 years ago, we see that gap and that window is narrowing. And then in terms of future trajectory, so I expect that window to either further close. So that will be answer number 1 and 2.
Yeah, I mean, good points raised already. Totally agree with Esme. Like, first point definitely is true already. It's happening. So, institutions moving into DeFi. So I guess, when Bitwise as a company was born, right, I think our objective was actually to move institution into crypto and then today more DeFi native products, right? 5, 6, 7 years ago, I think when Bitwise was founded, our goal was to get easy access to institutions to buy crypto assets, right? So that's why we issued many ETFs in the States and in Europe, so that institutions like family offices and asset managers and wealth managers, they can actually get exposure to spot assets very easily through equity wrappers, right? So Bitwise as a company has been pushing that, and today we've been seeing more of that happening on the DeFi side, right? So, I mean, as we mentioned, Franklin Templeton, Benji tokens, that's one example. Obviously BlackRock with Buildo, and a bunch of other asset managers like Apollo with Accrete as well. So a lot of these funds are being tokenized. And why are they being tokenized, right? It's essentially to allow institutions to use these tokens to tap into DeFi rails, right? So think about it like yourself holding onto a fund, right? It's hard to use it as collateral to do anything with it if it's on the off-chain world. But if you use it on the on-chain world, suddenly you can use it as collateral to take out a USDC loan very easily, right? So that's what DeFi is promising institutions to do, and I believe today is really happening. So for sure, number 1 point is definitely happening. And number 2 point, so we also see like the other side of digital assets where DeFi is happening in the permission space as well. So not exactly permissionless DeFi, but more like permission DeFi. For example, chains like, Canton, it's a permission network, right? It's allowing banks to do, repos and also loans in a permission network. So all the nodes running in that network are all, banks and financial institutions who are approved to be in that network, right? So for sure, for that kind of network to exist, that's permission DeFi. So we are seeing a lot of that happening as well. I think on the Canton network, we're looking at easily billions of dollars being transacted on Canton. So definitely 1 and 2 are happening simultaneously. And for point number 3, the two sides not converging, I totally don't agree with that. So yeah.
No, I tend to agree. I mean, from my own perspective at Standard Chartered, I mean, we've built all of our ventures on public DeFi, but then we have also recently invested into Canton ourselves. So we've probably taken an even bet on 1 and 2. So I also agree with both you, Esme and Aaron, that I don't think there'll ever be parallel systems that never completely converge. So last question, I'd like to ask about another future question. We'll start with you, Aaron. What's one thing that has to change for institutions to deploy materially more capital into DeFi?
For me, I feel like it's really about the safety of DeFi that hasn't really been solved yet. And if bad things do happen, like who's responsible? I think that is really important. And I think that part of DeFi hasn't really been tackled or resolved yet in a good way. I mean, just take like the CapDAO hack, right? Again, right? Like a couple of months ago that happened. I think it's very fortunate that event ended up that a lot of companies actually came together to form a DeFi coalition to actually ensure, people who lost their assets, they actually funded a fund which actually made people whole, right? So I think that's actually really fortunate, but it's all voluntary, right? If another DeFi hack happens in the future, so who's going to be responsible? Is it a DeFi protocol? Is it the developers? Is it the builders? Who knows, right? So until we get clarity or until we get some sort of insurance, if things do happen, when hacks happen, someone is going to insure all these, hacks. Unless we see that happening, it's hard for your big funds and your big family offices to kind of go in full into DeFi. So I think that's kind of one aspect of DeFi that we haven't really seen yet. Yeah.
Well, I saw new technology in the States, and they are building L1, L2 layers into both verifiable by themselves within the ecosystem. And that helps building the governance from within the ecosystem that connects the transactions. So what I perceive in the future, those solutions could be potentially helping DeFi in terms of building more trust for getting that liquidation necessary for speedy transaction. So that is from the blockchain on-chain part instead of just talking about transaction layers. So this is what I perceived, and not sure if Esmer has similar points.
I agree with our panelists here. So I would say that in general, so I think the complexity needs to be abstracted out, right? So I know it's already like 3 years old, but then why did AI go from like the labs to, mainstream? It's because of the ChatGPT moment in which it gets so simple, in which, everyone's grandma could use it, right? So I don't think we've already felt, I don't think we've felt that for crypto yet. And the second thing is also, I think it falls back to, governance, safety, and also security. So that points haven't been addressed yet. And that's precisely why I moved from like in financial institutions into like a Web3 security company. It's because I think that's the main point as to why there isn't enough liquidity coming into the space. And as long as we are able to solve those problems as, ecosystem builders, I think I'm overall positive about this.
Well, that was a fascinating discussion, but unfortunately that's all we have time for. So would you please thank my fellow panelists, Aaron, Esme, and Carrie.
Thank you.
Thank you very much. What about we take a group photo together on stage? So we would like to have our official camera photographer ready over there and help our guest speaker as well as moderator to take a group photo. Thank you. Everyone, please look forward. And thank you very much for bringing such fruitful discussion just now for every one of us. Thank you, thank you. Now you may follow our staff and do the interview upstage if you want. Thank you, thank you. So everyone will be starting our next round of roundtable discussion. The topic is Beyond Tokenization, Solving Liquidity, Trust and Compliance in RWA from TradeFi to On-Chain Capital via Hong Kong. As real-world asset tokenization continues to evolve, the key challenge is no longer only about putting assets on chain. The real question is how to build deeper liquidity, stronger investor trust, and clearer compliance pathways between traditional finance and digital asset markets. This discussion will explore Hong Kong's role as a bridge for institutional capital market infrastructure and responsible RWA development. 这一场圆桌的题目是超越代币化，解决 RWA 领域的流动性、信任与合规难题。经由香港实现从传统金融到链上资本的转化，我们将会带大家一同去探讨香港是如何连接传统金融与链上资本，推动更有信任、流动性与合规基础的 RWA 市场发展。我们将会邀请我们的主持人，还有我们的演讲嘉宾来到台上。现在我们就让大家稍微等待一下，因为我们的演讲嘉宾马上会为大家带来一场非常有意义、有意思的讨论。And our guest speakers as well as our moderator will be bringing you a very thought-provoking discussion very soon. And now, please do some networking with the one sitting next to you, and we'll begin shortly, very soon, and see you in a while. Thank you. All right, what a surprise. So now we have our moderator and guest speakers ready. So now we would like to have everyone put your hands together to welcome our moderator, Lini Luan, GTM Manager of PIT, to the stage. And joining the discussion are our panelists, Amira Solomon, founder and CEO of Time Guardian, Yasin Tarai, founder of Propaz, Terence Hoy, CEO and co-founder of Singular Global, Bruce An, Chief of Staff, Patricia Foundation, and last but not least, we have William Gee, founder of Illuminaire, council member, ICAEW. And we are very happy to invite our moderator and guest speakers on stage, and let's give them a big hand to kickstart the discussion. Thank you.
Ready. Thank you for coming to join this panel, Beyond Tokenization and RWA. In the next 50 minutes, we will go through everyone's thoughts here on the stage in terms of understanding and solving liquidity, trust and compliance. Yes. So, I'm Lini from PIT, and I will now ask the first question. Okay. We can hear you. Okay, good. Okay. So let's start with a tokenization of liquidity. So Amira, what was it? Sorry. I will actually...
I can introduce myself. It's okay.
Yeah, please introduce yourself.
Sure. So my name is Amira Solomon. I'm the CEO and founder of Time Guardian Asar. I have 28 years of banking experience, starting from Citibank, Crédit Agricole, HSBC, done one exit for one FinTech, and now I'm bridging the gap between the TradeFi and DeFi by having multiple SaaS models built into the blockchain to enable the PayFi and to enable the inheritance of legacies.
Hi everyone, I'm Yassine. I'm the founder of Propex, which is a solution to tokenize real-world assets. I'm based in Bali, and right now we're focusing on a first use case of bringing properties on chain. And we're looking at also different type of asset classes, but we're looking at the way we can structure and the easiest way to bring real-world assets on chain.
Hello everyone, I'm Terence Hui, CEO and co-founder of Signal Global. So we are a tokenization company that tokenizes the tier 1 private companies around the world like Anthropic, OpenAI, previously SpaceX, which just recently went public, so that anyone can buy in fractions as little as $1,000.
Yeah, hi everyone. My name is Bruce An. I'm the Chief of Staff at Partisia Foundation. Partisia works on a cryptographic technology called multi-party computation, which basically allows you to compute against already encrypted data. So you don't need to disclose your data, but you can still compute against it, which kind of sounds like magic, but in the end, it's all really about math.
So I'm William. I'm a chartered accountant by profession, and I started Illumina after I left the accounting profession. I got into blockchain and related areas in around 2014. That was when I was still working in mainland China, in Beijing. And so been kind of following the development of this particular sector. In recent years, I've been looking closely at RWA in terms of how to actually tokenize things and what is the trust infrastructure that we need to support it. So as part of that, I've been working on standards. I've actually also supported the development of the practice guidance to perform reserve audit, reserve assurance for the Hong Kong stablecoin, after the MA launched the license.
Thank you for introductions, everyone. So let's move on to the first question. Amira, you spent 28 years inside global banks. Before you were building ETA and TimeGuard. ETA, yes? Yeah.
Yes, absolutely.
From an institutional lens. And can you walk me more through what has it to exist before tokenized assets is actually liquid and not just tokenized? So custody, market makers, settlement, payment rails.
So let me give you a proper real thing, which is life and operators through Asar Finance. We have, as of now, stablecoin enablement, which have activated 40,000 POS machine terminals through the partnership with Arabian Financial Service. This is a PSP which is licensed into the UAE, Bahrain, and Oman and Egypt. We have the existing rails, on-ramp, off-ramp. Everything is live and operating. What we are facing as of now is the liquidity, because what happened when they start doing the tokenization, they start tokenizing the real world asset and they forgot to tokenize the fiat. They left it into the old systems. And this is, I feel, it's the big gap as of now. When we talk about the custodial, it's available. And we partner with licensed entities, so we don't have an issue in the custodials. Off-ramp, on-ramp, it's available and it's working properly. But we don't want to create additional rail which will be adding 2 and 3 days. So like this, we didn't solve the problem. We need to settle instant. And to do settlement instant, we need to tokenize the fiat itself, which is left into the old banks or old financial solution. And this is the gap. So what's missing as of now is the market makers, which I see, and the buyers. This is two big gaps which is available. If I talk about compliance, from where I came, which is the GCC, especially in the UAE, we have the regulators, we have the compliance, the financial institutions support you and partner with you to enable them. So I think in the technology, we focused more into the real world assets or the real assets, and we forgot the most important things which buy everything, which is the fiat. So this is where we stand as of now. I will leave it to the other as well to comment.
You're highlighting a very interesting point indeed, because I think there's no problem of liquidity. Liquidity is there, right? It's just the stream. How do we reach out to it? How do we connect? Sellers wants to sell, buyers wants to buy. The medium of exchange right now is trapped in silos. And we are shifting from this fragmented liquidity because it's owned into an old system, all the rails, and we try to bring it and enable it into a new infrastructure. So everybody's sitting on Windows, 95, and you basically come with Mac OS, super efficient, super fast, but you need everybody to have this kind of computer. So it takes some time, and when we go back in history of adoption of technology, you look at, we all have a smartphone in our hands nowadays, and we communicate globally. But this took like 40, 50 years before it happened. Bitcoin is 10 years old. Tokenization is this new trend that is a couple years old. So it's not going to happen overnight. It's happening at a tremendous speed because we all agree that this is the best railways, this is the best infrastructure for all of us to exchange value, and it's coming. It's just a matter of time, adoption, but it's happening at a speed that people don't really realize, because you can now, with a smartphone, transact with anyone around the globe the same way you send a WhatsApp. But it's just people need to understand how to get there, and it's happening. And I'm actually very optimistic, very encouraged by what I see, the interest of people, how, everybody's talking about stablecoin, everybody's talking about digital assets. It's there, but it's not going to happen overnight. And it's been pretty good adoption so far, in my opinion.
So if we look at this year, NASDAQ just proposed tokenization, whereas it's going to be having all stocks traded 24/7, right? Most of the technology that we see, like today, it exists, it's still dated way back like 40 or 50 years ago. And with tokenization, it not only enables like 24/7 liquidity, but at the same time, what if regulators, like including the Hong Kong government, could regulate this from the top down to create investors' trust? And of course, last year we have seen Hong Kong passing the stablecoin bill, and I think there's now more than about $1.5 billion been tokenized, starting with green tokenized bonds, money market funds, with BOCHK, of course, Standard Chartered, and all the big names. But I think the core issue here is how do we move these three moving parts together, right? With liquidity, capital markets, as well as regulation. If we look at Asia, I mean, Hong Kong in particular, the total market cap of Hong Kong is about $7 trillion, and mainland China, which Hong Kong is acting as a window, could unlock $17 trillion, of Chinese capital markets. And if we look at, we've been speaking with like VARA or even FSC here in Hong Kong, right? What about VARA in Dubai? I think probably the UAE is just maybe 1/10 of what Hong Kong capital market is doing. So I would say Dubai is a great showroom, and Singapore could be great labs. There's a lot of crypto startups setting up in Singapore. But Hong Kong could be the exchange floor to open up capital not only from the West, but also from mainland China.
Okay. Thank you for your input on the liquidity part and your thoughts around it. So one of the other thing I actually wanted to touch on is based on the trust. So I want to start with you, Bruce. So even if we crack liquidity, there is a wall saying no banks will say, oh, they can't operate in public. So Paticia's whole thesis is that privacy is the missing layer for institutional adoption, not a nice to have. So why can't a fund just run on a transparent ledger where anyone can see see its position? So how does confidential computation let you actually be fully compliant, KYC and AML and auditable and private at the same time? Is that live on somewhere in Particia, or is it still under some research?
I think Yassine mentioned it a little bit earlier, right? This is still an evolving space, and if you really take a look at it realistically, it's very new. And so I'll give an example. I started my technology career in the 1990s. That shows my age. And back in the 1990s, there was this new thing that every corporation wanted to get on top of, which was the internet. That was the big thing back then. But back then, there wasn't really any kind of a focus on privacy. There was no such thing as a firewall. Nobody knew what a VPN was or any kind of a security antivirus. What's an antivirus back in the 1990s? And since then, the security has evolved so much that entire industries were created as a part of this maturity in the internet, where now without these kinds of security tools, you can't transact anymore. And businesses had to evolve and integrate these security tools on top of there. Now, if we compare the internet and how companies were storing data, because it's ultimately in the end, it's all about data, right? Where is the fund? Where is the money? Where is all of these different assets, living in, and who has control over, these assets? It's all about data. So the current internet model is a centralized model, which means that a bank has control over the data, or a different financial institution has control over the data. And because all the data is centralized, you can have a firewall, you can have a DMZ, you can have an intranet that secures data. But in the blockchain space, it's distributed. It is not centralized. It is a distributed environment. And so the traditional security technologies really doesn't fit well into a distributed model. And so we talked a little bit about privacy technology. And when we talk about privacy technology, we're not talking about firewalls. We're not talking about centralized, antivirus or patches to OSs and things like that. What we're talking about is unique cryptographic technology that's specifically geared towards securing a distributed network. And that's what Particia believes, and that is going to be the next industry that comes about to be able to secure these data. So from my perspective, it's not a must-have. It's just an inevitability that security and privacy gets layered on top of the technology that can support a distributed network, that gets layered on top of our existing infrastructure that's running today. So is Particia working on this? Yes, absolutely. We're working on integrating public networks, public blockchains, with private blockchains, just in the same way the current industry works, where you have the internet and the intranet. We also work on distributed technologies such as multi-party computation that allows data to be computed against without decrypting the data, which allows for security in a distributed environment. So we're working with monetary authorities, we're working with financial institutions to tackle financial fraud, we're working with hospitals to allow for researchers to gain access to medical information. So we see this new cryptographic technology to be part of the solution in this evolution that's coming up in the RWA space.
Thank you for putting this into perspective, Bruce. So there's also a second kind of trust, and Yassine, a token is only worth something if, let's say, a real estate asset behind it, it's real, right? So if I buy a fraction of your villa in, let's say, Bali, how do I actually know that property or that real estate actually exists and that it's legally mine and that the yield isn't just invented? So who stands behind that?
You know the old saying in crypto, just trust me, bro. That's the trust layer, right? No, just joke aside. Yeah, it's a good question. So obviously there is, that's today the biggest pain point in the adoption of this technology. So I'll tell you the way it's happening today. When you go and you want to buy a property in Bali, for example, in a traditional way, you would go and sit with this old person. So buyers and sellers sit at a table, and there's like this legitimate person that has, diploma on the wall and has a stamp, a bunch of stamps, and gives you this like ink to put your fingerprint on a piece of paper. So all this experience is a story, right? People believe a story that this is legitimate and this is how it works. So when I'm signing this piece of paper, these 30 pages, I am acquiring a property. And that's the way people believe in the process of acquiring a property. But of course, when you come and you say, hey, there's this way, or there is like 2 clicks that you can do and transfer the amount of money if you have it on your wallet, and you have ownership of the asset, then they don't necessarily believe it, right? Like they because it's not part of their habit. It's not the story they've been told. So again, here, adoption is happening in stages, and the convenience is a part of the story. The fact that people can swipe and see an asset that appear in their wallet is part of the process of creating trust. So the convenience is there. Then we need validation from the incumbents. We cannot work with, like the trust. We will not create a new type of trust. We're just using a new technology that enables to actually secure this trust because it's recorded on a immutable distributed ledger that can be verified by anyone. But of course, people do not have this reflex because it's not part of the story, again. So trust is something that will be built hand in hand with the incumbents. So today, what I spend most of my time doing, because I can tell you, sellers agree on the model, they love it. Buyers also are ready to, experience this. But those that we need to convince are the validators, the traditional validators, the government, the notary, the agent, all these actors, because they are a little bit, the asymmetry is where value is sitting, right? Like everybody, we're talking about transparency and liquidity. The thing is that the traditional model creates a lot of friction, and the value is hidden in that friction. All these intermediaries are all getting a cut. So of course, they're not going to enable this to happen right away. But as long as you include them in the system, right? I'm not saying blockchain is going to replace notaries, right? Notaries will be part of that. just their job will be just much more easier. So we are creating trust by onboarding incumbents, we're onboarding actors of the game, and telling them, don't worry, you still have a role to play. And it's happening. We're getting there again. I was saying it before. I think this technology is changing the world at a speed that we don't necessarily realize, because we are used to a world where everything has to happen instantaneously, right? But we're changing the way we are redacting contracts. We're changing the way we're exchanging value. This technology, this infrastructure that is being built is such a game changer. It's, really going to enable all of us to sit on the same infrastructure and be able to transact easily, the same way we're exchanging information easily via WhatsApp or WeChat or whatever, you name it. So trust will come from convenience, from experience, and from the story that people will start to repeat and adopting the process.
So Yassine, I would actually argue that this trust problem already exists in the traditional markets already. So as an example, we work with companies or organizations in Ecuador, Honduras, Colombia, where they're talking to us about problems where these frauds are occurring, where the investors are now scared to invest in foreign property because they can't figure out who the real owner is. So to me, already in the traditional systems, there's already a breakdown of trust. What I see right now with the RW space is that we're creating a solution that is more trustable because of that audit edge, the transaction that you can trace all the way down to its source to find who the accountable party really is.
You're absolutely right. That's the paradox. Right? The paradox is that we're offering a solution that is more trustworthy than the traditional system. But because it's not part of the story people have been told, right? It's the same way as I tell you, look, if I transfer to you a Bitcoin right now, you have it in your wallet. It's immutable. The ledger is here to prove it. But, people just don't believe because it's not part of the story. The story they've been told is that if I give you a banknote and there is the picture of a queen on it, that's trust, So
I think going back to the question, right, who's the issuer? In Hong Kong's case, it's simple, right? Like HSBC has issued money market funds. Everyone knows HSBC. If HSBC is to issue a stable coin, would you trust HSBC? Then maybe an ABC company that has no license, would you buy that? But all in all, USD Tether, USDT, was actually created here in Hong Kong. And USDT has $300 billion? But it was created out of, bottoms up. Now we're seeing more of a top-down approach where the regulators like HKMA, FSC is actively engaging with the banks, even startups to say that, hey, look, who's going to be an issuer? We're going to work alongside with you. If you want to do tokenized equities, we can regulate that. Everything is on chain. Everything is immutable. And, improves the efficiency of the banks. So I believe this has to come from a top-down thing, and Hong Kong is very well positioned, I would say, out of that other three, and not to Singapore and Dubai. Right.
You said something like the top-down, right? I think this is the what people do not. When we are in the industry, because we are within the system, so we are completely. We are all convinced here that the ledger is the truth, right? Or it can trace the truth. It's just that because we are we are talking about the technology that for the first time is a bottom-up adoption, right? We are into a technology that has been growing from distributed network of individuals that were sitting in the basement of their moms, and they were mining something that became a unit of account that everyone uses and transfer around the world. The story is incredible, right? Crypto adoption is happening bottom up. And for the first time, it's so powerful that institutions do not have any other way than adopting it. So the funny story is that we are exiting on institutions. because it's for the first time. Internet came a top-down. It was a top-down adoption, right?
So look, it needs about 5 layers, right, in this. One is products. We do have that products already, like DeFi, layer 2 technology, stable coins. Now, number 2, we're going to need markets, right, capital markets. You can launch anything. Anyone can tokenize a meme coin within 2 seconds, right? But you have that liquidity. Number 3, regulation, right? You need clear guidelines. Who's going to regulate, let's say, something that is moving every 6 months? So regulators have to work closely with the startups or maybe, people who are tinkering those technology. Technology is great, and that's moving along, right? Number 4, you're going to need to bring together all those other jurisdictions. Imagine if I'm a startup, I have to get a license from VARA in Dubai. I get another license from MS in Singapore, another license in Hong Kong. What if there's a passport? When this applies to, let's say, Hong Kong, I can use it in Singapore, I can use it in Dubai as well. It saves me a ton of time because we as startup, we just want to innovate, right? I just want to tokenize, let's say, the next upcoming Anthropic or OpenAI so that anyone can buy in fractions. Or think of it. There's more than 300 million wallet holders around the world with USDT in their wallet. But they cannot get access to tier 1 companies like NVIDIA, Tesla, and 70% of the people in Southeast Asia do not even have a bank account. How can this unlock, tier 1 quality financial tools for the masses? Is the next question.
This is a perfect hands-off to William. Talking about compliance and talking about regulations. You write the assurance standards. So today, what in the RWA stack is generally verifiable and audited? Proof of reserve for a stablecoin and audited property titles. And where is the trust me still only the one thing on the table?
So let us step back a bit. Everything is auditable. Everything is auditable. Any accountants in the audience or lawyers? No? Everything is auditable, providing you have determined the criteria. It is the criteria that's actually causing the problem, not the actual audit approach. We have, in the profession, I've been a professional accountant for close to 40 years, very robust standards on how you perform an audit. That has never been a problem. In terms of knowing how to perform the audit, okay? The outcome is something different. So we are not talking about outcome, we are talking about, the protocol. But to audit something requires a set of criteria. And so you say, is the property title, as is stated? No problem. Might go to the land registry, look at the title, or the lawyer can go to the land registry, look at what whose name is on it. Is it owned by one person or jointly owned by multiple person? Is the owner a corporate, or a legal person, etc., etc. It is all there. The problem when we come to RWA is actually knowing exactly what is being tokenized. So, tokenized property. In the majority of cases, it's actually not tokenizing the title of the property. It's tokenizing some rights associated with the properties. It's income rights, typically. Future rental income rights of the property. So what do? You put the property into a special purpose vehicle. You then work out the future income stream. And because it's future income, you have to actually do some estimates. And then all the NPVs and all the calculations kicked in. And then you say, I tokenize it. And so you have to set the price. And then it goes along the process and became a token. And then you can start trading. What is the auditor supposed to audit? The auditor is no longer auditing the title of the property. It's now auditing the income stream, the estimates, the valuation, the vehicle, how it was set up, etc., etc., etc. That is the difficult part, because every single RWA project has a slightly different setup. And so you don't actually have a standard kind of set of criteria. That set of criteria has to be principle-based, and you have to apply it to every project, and you have to customize it, tailor it, and then you have to write an audit report. Now, traditionally, the profession, not just accountants, also lawyers, write their reported opinion on a piece of paper, sign it with wetting, and when you say, well, today a lot of listed companies are doing digital filing. Well, in the majority of cases, apart from territories that have adopted digital filing, and it's a so-called interactive data filing like the US, you know, the other territories are actually still filing that PDF scanned version of the paper. And anything that you scan it with PDF can be forged, tinkered with. So in Hong Kong, we have fake audit reports. In many territories, we have that. That breaks the trust. So it is actually not about whether we can audit something. Everything can be verifiable. It's the protocol, and it's end-to-end. And so have you ever seen a real-time digital version of an audit report, on the system? Well, there are, but it's actually in very limited circumstances. It's a special type of report that is digital, that you click on the a seal on the website, it takes you to the report. And the report is actually hosted on a secure site. But that's actually a very, on one particular type of report, it's done that way. The majority of reports are not done that way. So we actually have challenges, not about how we audit, what audit. We actually have challenges about setting criteria, about the last mile of communicating the audit finding to the stakeholder, the interested parties. And so we, in the auditing profession, can't solve it alone. We have to work collaboratively with the service provider, with regulators, and to set up something that we can all agree to. And so the fundamental thing is, when you talk about this is a property token, you have to change the way you describe it to be more precise. This is a tokenization of future income, rental income rise of a property. And once you say that, the story changes. When you go to the SFC and say, we are tokenizing properties, they will say, oh, this is not security, this is property, this is not in my area, this is, I don't have the, jurisdiction over that. But when you go to them and say, this is tokenized REIT, then it's in their domain. And so depending, you have to be precise about what you are doing. You have to use a different set of language, and then you can close the gap, and we can actually move forward together, and you can solve, with the liquidity, you can actually have that level of assurance and allow your token to be marketed not just to PIs, professional investors, but to the general investors, and that will open up the game.
I think all the RWA builders needs to hire him as a consultant, because he's...
I agree. So,
the devil is in the detail.
That level, yes.
So the last piece of trust, Amira, is the end of investors' own safety. So custody, key management, what happens to a tokenized asset when the owner dies? It's frauded. Where are we today, and what's the gap that worries you most?
So this is the security layer, which is missing as of now. We spent the full panel talking about the institution protection, how we built a world-class rails with zero protection as of now, because we don't have any kind of investor protection. We talk about the seed phrase. If I die, what will happen to it? What is the inheritance? How many orphaned wallets available? Billions, not millions.
Well, you can program that, right? Use a smart contract to program distribution.
Yeah. So DeFi had come and then suddenly is dead because of what? because there is no security layer which protects you from fraud, from scams, and even there is no chargebacks which have been built by the banks in years and years, centuries. It had been taken for them to build this. So what I see is missing is the security layer, and this is a big gap when we talk about the blockchain. This is, they didn't think about the inheritance, they didn't think about about the transmission. And this is what I've built actually. I've built a security layer which is called Time Guardian, and it's being used by banking and financial institution in Dubai. Fab First Abu Dhabi Bank, if you heard about it, is using it. So mainly you secure the information, you secure the seed phase, you secure the smart contracts for whatever assets you will be saving in digital vaults, and you hire beneficiaries in order. Seem like he said clearly, put a policy. So you hire beneficiaries, and accordingly, you set a date and time, or you put a will, and after you go, it will be available for them. So all it had been built. So I think that we need always, it's not a matter, we have a gap in the product. No, we need to define what is missing and build a solution for it. We are very good in how to generate revenue, but how to secure it got missed regularly. So this is something which is, I see it as a gap, and I've built a solution for it, and it will be forced by all means. The government will be forcing it because it is a gap. So yes, we can tokenize everything. Yes, we can issue any stable coin. We can go do DeFis, but at the end, same like we started with the internet and nobody was believing in it. Then now nobody can live without it. I agree with this. So I think once we cover all the gaps, once we have the regulators support, everything is possible to be done. So people is very, very smart all over the world. They come with a lot of solution, but always think from the investor aspect. Don't think only to generate revenue and to come up with new ideas. Think what is the gaps and accordingly build a solution for it. And if you talk about the compliance part, APIC is very compliant and ahead from market. Again, Dubai, VARA, and FSRA in Abu Dhabi, they've built all the regulation which support the RWA's tokenization, even cross-border payments, stablecoin. They have 3 currencies already operating. So they are adapting. I see it, and the banks is adapting. So I see only when we think about the trust, think from both ways, the institution level and the customer protection level. This is, I think, is the most important.
Thank you for the input, Amira. That actually leads us to the next question around compliance in RWA. So, William, you have advised quite a lot of regulators for decades, and you're also one of the people that doesn't sell anything. Across APEC, you know, Singapore, MAS, Project Guardian, Hong Kong's SFC and HKMA's Ensemble. Amira mentioned UAE's Vera. Who's actually ahead of a workable framework, and who's just louder? And what does the same activity, same risk, and same regulation really demand of an issuer?
So we don't have time to go into the differences between each jurisdiction, right? Okay. So let's take a step back. The whole decentralized finance sector is, as the word suggests, decentralized and is global to, from day one. We have Bitcoin doesn't have any national boundaries, and so everything came after that supposed to be on a global basis. That created a problem with the regulators. Because in the old days, we have jurisdictions, we have national boundaries. And the other thing that is actually unusual was that laws and regulation always lag behind technology advancement. Always. But we can't wait anymore. Things are moving so fast that we can't wait anymore. So We have laws on AI, we have laws on blockchain, virtual assets, and so on. When the subject matter is changing and all the time. What's worst was the first participants who actually got into this sector was the technology side. But the TradFi people was forced into it. And now if you look at the market, you have tokenized bonds. You have tokenized money market funds. You have tokenized deposits of a bank. And so the traditional finance incumbent are adopting tokenization and turning their products into tokenized products and basically saying this is tokenization, which is actually not the case. At the same time, the Web3 sectors are saying we can tokenize properties, we can tokenize this, tokenize that. Now, in Hong Kong, the Electronic Transactions Ordinance, Schedule 2, specifically say we do not accept the use of digital signatures in a transfer of title of a property. On probate, sorry, you can't use digital signatures. It has to be wet ink. So you cannot transfer titles of a property digitally. So the whole notion of tokenizing property is flawed. But we are not tokenizing properties. We are tokenizing future rental income streams of a property. And so the regulator are saying same activity, same risk, same regulation, on the assumption that this is the same. Because what you are doing is tokenizing a REIT. Therefore, I'm actually using that to regulate you. But sadly, for the, people standing on the other side, we are the new age, of financial services, and you are now forcing me into something which traditional banks and brokers and so on need to comply with. And so you feel the pain, the regulators feel the pain, the investors feel the pain, because we are all talking different languages, and nobody actually understands each other, and nobody can clearly define where the risks are. Is this the same risk? No, it's not the same risk. It's subtly different. So I think that is what is required is for everybody to actually sit down and revisit this. Not now, not this year, because it's still evolving. But sometime in the future, and on a continuous basis, to actually get to a consensus in terms of how I can reframe the law to make it work. And so if you really want to tokenize property, I have to change many, many laws and regulations to make that happen. And that cannot happen overnight. So, it is a long process. It's the start of a journey. We are at the beginning of a journey, an interesting journey, and let's work together on that one.
So I want to highlight something, and I want to get William's opinion on this. Okay, so let's talk about e-signatures. Okay, e-signatures. When e-signatures, when we figured out that we can sign for things electronically, the regulators didn't accept that initially, right? They said absolutely not. You got to have a ball and pen. You have to sign that document. It's got to be done physically. And then we can accept it. But the technology continued to evolve, where now many countries, even government bodies, are now accepting e-signatures. So, to me, it's not about the fact that it actually required the physical pen to be on paper, but what was the reason why that was necessary? And as long as the new technology continues to evolve in a way that it can address that why it was important, I think the regulators will begin to accept it, right?
And the underlying criteria is trust. Okay, so we are actually working on to build a trust layer, and we try to use technology to do that. And unfortunately, just as everybody is getting familiar with the e-signatures and digital signatures, okay? comes quantum computers that's going to hack RSA and hack ECC, and you know the whole thing basically gets turned overnight. So oh no, it's not trustworthy anymore. So we have to do something else. And along with it, you know, comes another kind of a battle, you know, on in front of you. So it's interesting times. It's challenging times. It's fun. And hopefully we can all benefit economically or otherwise, you know, from this experience.
Yeah. So so Bruce, can privacy preserving compliance actually satisfy a regulator? And are there any APEC regulators accepting that kind of a model, or is it still in a fight? Because we've been talking about trust, we've been talking about compliance, and everyone is feel free to add a few lines to that.
Yeah. Are we in a fight? I wouldn't call it a fight. I began my career. I wasn't a Web3 native. I have a 30-year plus career in the traditional financial space, mostly in life insurance. And as a part of being in that industry, you go through a lot of audits. And there's a lot of requirements. And in the beginning, I was really frustrated with the process because every single time I would come back with an answer, they'd be like, no, but this doesn't address this, and this doesn't address that. And I'd be like, what the heck are you talking about? This is actually fixing this problem. Until I realized that, again, you know, to the e-signature point, it wasn't the what that was important, it was the why. Why were we doing this? And William, you could keep me honest here, but you know, regulators, auditors are not looking to get everything. They're not looking to get full transactions. What they really want, what's important to them, is about risk. It's about you know, is this putting this company at risk, or is this putting the customer at risk? Do I see some kind of an anomaly in the audit? Do I see something else? Can I see a sample set of this so that we can verify that this is you guys are doing what you said you guys are doing? So in this digital space, again, we talked a little bit about the decentralized data storage architecture and the distributed data storage architecture. Like you said, Bitcoin is global. It became, you know, global when it first you know, launched. And the cryptographic technology that's needed now has to fit that distributed model. Are we in a fight to get these things adopted? Yes, we are kind of in a fight. But what's great to see is that we have regulators and financial institutions that is actually looking at this technology to see if it is actually addressing the why and the risk. And so, you know, we've had conversations with, you know, the Hong Kong Monetary Authority as an example to incorporate these types of distributed security technologies on top of, you know, institutions to be able to not just privatize information, but also to be able to enhance the product so that you can actually identify financial fraud in a much faster way than in traditional means. So are we in a fight? I wouldn't say we're in a fight. I would say we're in a collaborative state now to be able to introduce and to create an RWA framework that does address the why of why a regulator is asking for these kinds of information.
Which actually...
Lenny, just let me add on one very, you know, small point. And just to be fair to the regulators, in many jurisdictions, the regulators came to being as a result of a law. So the Hong Kong Monetary Authority gets its power from the banking ordinance. The Securities and Futures Commission gets its power from the Securities and ordinance, and so on. So their hands are tied. And so, you know, with this digital kind of a movement, you know, I can sympathize with them because they cannot just like the technology side. If this doesn't work, I drop it and start something else. They can't. They have to continue, under that legal framework, and you can't change everything. Because like a blockchain, they have their legacy, they have their genesis block, so they can't actually do something. So just to be fair, and so it's challenging for both sides, and we need to just work together on that one.
I mean, it's clear that we're moving into a broadband moment when it comes to blockchain. Traditional equities is going to take T+2, and it's slow and expensive, right? But the thing is, if we are moving from, let's say, 56K into this broadband moment, how are we going to make it full-fledged? So it's going to be instant and fast.
But this actually creates a second problem, because like take AML, right? If you T+2, the bank can do a lot of things. If they think this is suspicious, I can freeze it. When it's atomic settlement, it's gone. It's gone.
Yeah.
So the whole game changed. And so if you have to say you have to comply with AML laws and so on, it's actually quite tough on the on the virtual players, right? Because it's not possible, because it's gone. That's the problem.
But again, everything is programmable, so you could still freeze it because tokens.
So we are actually near time.
I just want to add something. Is this the funny thing is that the beauty of this market is that regulators are debating, spending their time discussing about all these rules, and in the meantime, you have Hyperliquid that is completely, decentralized, where the market is showing their interest. People want to trade. People want to exchange value borderless. And they don't care about what regulators are saying. At the end of the day, the market is winning. And blockchain is here to enable that.
Builders gonna build.
But I see actually this really, the trust will be there. Compliance 100% will support in this. Regulators, they will keep seeing a lot of innovators coming in with a lot of solution, and they will be forced in the end to put the policy around it. What I see only how we get the first trillion out of the banks in order to place it into our blockchain. I see that, yes, there is a lot of movement and flow happening into the blockchain, but is it exiting the financial institution or it's from where? Question mark. So I see the success really for all of us when the first trillion go out of the banking system and it will be operating under the blockchain. This is the big success. Other than this, we are doing our best.
So you came all in and asking for what RWA is, what is real, what is liquidity, trust and compliance in RWA. I want to thank you to Terence, Amira, Yassine, Bruce and William for this panel today. Unfortunately, time is up, but if you all audience have any questions for the participants, please catch them when they get off the stage. Thank you.
A big thank you for our moderator as well as our guest speakers for bringing such a fruitful discussion. It's a brilliant conversation. Thank you very much. Please be seated. Thank you. Thank you. So our next presentation is coming up, and we will be talking about the gold bull market 2.0, liquidity, debt, and the crash in the dollar system. As global markets continue to face liquidity shift, rising debt concerns, and questions around the long-term strength of the dollar system, gold is once again becoming a key focus for investors seeking resilience and diversification. So this session will explore the forces behind the next phase of the gold market and what they may mean for traders and investors. And this session will be conducted in Mandarin. 这一次的主题演讲是关于黄金牛市 2.0 流动性债务与美元体系的裂痕。我们将会探讨一下流动性、债务压力，还有美元体系变化会如何影响黄金市场及投资的判断。So now, please join me in welcoming Vernon T, Master Trainer of Che Ho, to the stage. 有请 Vernon. So everyone, let's put your hands together to welcome our guest speaker once again.
All right. So good day, everyone. I will be presenting this topic in Mandarin. All right. So 接下来这个环节呢，基本上我用中文来做诠释，好不好？因为我只剩下最后的10分钟的时间可以跟大家讲。那第一件事情，我想问一下在座的各位有谁是支持，或者是你认为接下来可能就半年好了，黄金会是涨的？你举个手好不好？你谁认为黄金会是涨势的？举个手，会比现在的这样更高的举手，有没有 ？Who is thinking that gold is going to bullish? Raise up your hand. 觉得会涨的举手，来，谁觉得会跌的举手，谁觉得会跌的？没有，你觉得会跌？哦，那你压了吗？刚才我们看到了什么？涨的比较多还是比较少？比较多是不是？啊，那如果今天这是一个市场来讲，大家都是交易员来讲，那是不是代表说，你做跌的话，刚刚的那位伙伴，你做跌嘛，你看跌嘛，对不对？那但是刚刚举手的做买的比较多，怎么办？怎么办？好，来各位，好 ，So。非常感谢就是Wiki 呢给了我这个时间给大家去做一个小小的一个介绍。那当然的话呢，在这边的话呢，我会依据3个小弟我的小小的愚见以3个维度呢来去探讨说接下来的黄金到底会怎么走，好不好 ？So are you guys ready？ 可以吗？来，第一个，来我们看一看最基本上来讲的话呢，我们会去看的其实是什么？就是利率的调整。那当然呢，这里的利率不是说美联储的政策而已而是什么？我们必须要去关注的是实际利率。那实际利率呢？其实是说对我们讲人话好了。简单来说，其实是无风险利率减掉通胀率其实才是实际利率。那举个例子好了，简单来说是什么？是你的钱躺在什么？躺在这个国家或躺在这个经济体里面，1年之后它有没有变厚的意思？明白吗 ？OK， 那就是实际利率，扣除了一些相对的购买力。好，那为什么这种事跟黄金有关？因为最主要的一件事情是什么？就是在过去这么多年来里面呢，大家都知道一件事情，就是什么？就是你你拿着那一块金砖它会变得厚吗？会吗？不会嘛，对不对？会，为什么？它会生灰尘啊，不是吗？对啊，所以它不会生小金子给你嘛，对不对？但是如果今天你把钱放在哪里？放在你的定期存单。还是放在股市，或者是放在哪里放在一些无风险的一些，比如说国债利率也好，那你是不是至少还有一定的什么回报率嘛？对不对？所以你持仓持着黄金，其实是没有什么意思的。好，所以呢，站在实际率的角度来讲，其实只要实际率越来越高，黄金的什么，你持有这黄金的成本就更高。好，所以呢，另外一点就是什么，就是属于关于债务的问题这件事情。好，那基本上大家都知道嘛。现在全世界的政府都在什么扩张他们的财政有没有？在哪个部分？国防。那比如特朗普已经把这个国防2027年的国防开销呢，已经增加了额外的50%，去到了1.5万亿耶。那你想一想你的税收都没收，你的降税政策都没做，然后你还要花那么多钱，钱从哪来？债务嘛。你得借更多啊，所以债务问题这件事情，我们要不要看？也得看。好，为什么？因为你一打开过去的图表来看的话，你就发现到美国尤其是美国但用我们单一只拿美国来讲，那基本上你可以看得到呢，如果今天它的 public debt， 也就是它的公债越来越多的话呢，其实刺激黄金的上涨动能的。好，那我就直接给大家一段话就好，你就把它记下来。如果你今天你不知道的话，那你知道的话那就更好了。那首先，如果财政赤字失控，政府就被迫怎样？就你必须要发债规模就要更多，对吧？你发债规模越多，那货币超发就会越多。那货币超发越多，如果今天没人接手，谁来接手？美联储自己本身就得接手。那印更多的钞，通胀自然而然就要上来。那加上现在目前这个成本驱动的通胀率，加上未来还得超发那么多的货币。那各位，谁是赞同通胀会越来越高的举手？有吗？你认同吗？认同吧？对。 好，所以呢，那就是持有黄金的什么？对。那另一方面来讲呢，当然我们可以讨论一下美国体系的这些部分。当然这个部分对我们来讲，其实还蛮远的，但是对中央银行来讲，其实很近了。那当然最主要一件事情是什么呢？其实就是我们必须要去了解为什么中央银行在过去的这几年一直不断的买。中国大陆的朋友有没有？你们的央行连续20个月都在买哦，不断的买哦，而且是吨数的买哦。好。那最主要一件事情是什么？就是我们必须要知道自从在2022年自从俄罗斯的央行被金融制裁了之后，中央银行也怕了所以大家都不断的增持黄金好，那至于增持黄金，我也必须要怎样卖掉什么？卖掉其他的外汇储备，对吧？所以美元目前的外汇储备，针对现有的大家可以看得到呢，黄金的储备已经超越了美元的储备。再来另外一件事情是什么？那这也是我最后一点要跟大家讨论的，因为我时间也只剩下最后1分钟。那最后1分钟，我希望可以为你们带来一些最重要的一些资讯，也就是只要你看到通胀呢，其实是跟原油价格是什么同步的、正相关的。所以下一步，如果今天你想要知道黄金接下来要不要涨，往前看，实际利率一定要下降，对吧？甚至去到负利率，也就是通胀必须要往上涨。那 CPI 是不是通胀？是的，所以 CPI 往上，但是它是由谁驱割的？它是由谁驱动的？国际油价驱动的。那国际油价又是由谁驱动的？现在目前的战争。那现在国际油价多少钱了？90块一桶啊！接下来会不会下100块？那 CPI 会不会上？那黄金要不要持仓？会不会有更多人要持仓？那现在你可能讲说黄金跌嘞。你怎么在讲这些？黄金在跌呢？好啊，那是因为什么？你也得看啊。长期战略目标是是什么？央行在持仓，但是 ETF 正在抛。大家不要忘记，为什么他们抛？那些基金经理难道他们不用吃饭吗？他也得吃饭啊，他也要确保什么？对啊，实际利率在什么？在上升的情况下，我干嘛还要持有更多的黄金？但是只要未来实际率的下降，债务的增加，再加上国际油价的爆发，那肯定的 ，ETF 会不会回来？它就会回来了。好，所以至于短期的资金抛售，是现在，但我们考虑的是未来，好吗？好，所以以上这些点是我在这里给大家的10分钟的演讲。那请问大家 OK 吗？好，那谢谢大家，我是 Vernon， 然后来自于最后，如果你想要去找我的话，或者是你想要这个 slide。去那边找我。好，谢谢各位。
非常非常感谢 Vernon， Thank you. Please be seated. So everyone, next coming up will be another round of roundtable discussion, and the topic is threat or opportunity, finance in the world of AI. As artificial intelligence continues to reshape the financial services landscape, a lot of people will ask, is AI a threat to established financial practices, or does it represent a genuine opportunity for the transformation? The real challenge lies in understanding how to harness AI's potential while managing its risks responsibly. So in this session, our speakers will explore the dual nature of AI in finance. They will consider the implications for investment strategy, risk management, compliance, and the future of financial decision-making. 随着人工智能持续重塑金融服务业的格局 ，AI 对既有的金融实践来说，究竟是威胁还是真正的转型机遇呢？我们现在非常高兴可以邀请到我们的 moderator 还有 guest speaker 来到我们舞台上面。So ladies and gentlemen, please put your hands together to welcome our moderator, Kevin Liu, Director of GEL, as well as our panel guests. They are Jessica Young, CEO of ME Group, and Jerry Au, Fund Manager, Responsible Officer of Zircon Securities. Hello everyone, welcome on stage. Please take your seat accordingly. And of course, I will pass the floor to Kevin, please.
Thank you. All right, so pleasure to be here. Friday. Glad to see that the room is actually and the energy is still being kept. So my name is Kevin Liu, and pleased to be able to moderate today's panel event. So on stage, we've got Jessica Young and we've got Jerry O. So today's panel event is about threat or opportunity. The financial markets in a world of AI. Obviously, AI is a big topic out there, and very pleased today to be able to have two experts who are building or thinking or trading and managing risk, either in the traditional asset markets, but also equally within the Web3 markets. So just a quick introduction from, as I understand your backgrounds. So Jessica, you've been in the crypto industry for quite some time, based out in New York, having traveled the world, now also in Hong Kong, whether it comes to like crypto exchanges, where it comes to actually trading, advising very sizable institutions. I'll give the mic to you just now to be able to give an introduction to yourself. And now you're the CEO of ME Group as well. And with Jerry, you're a fund manager and a responsible officer of Zikron Financial Group, specializing long-short investments within equities, whether it be US as well as also China exposure. So definitely a global view, and we'll also be talking about how AI impacts your decision-making process. So with that, maybe if I could just ask you, Jessica, what does ME Group do? And if you can give a brief introduction about, how you see things currently. And then Jerry, will move on to you. Thank you.
Thank you a lot, Kevin. And hi, everyone. This is Jessica. And actually, I'm now living in Hong Kong because this is really the very good area for the exchanges and all kinds of the trading area. And I have been focused in the crypto world for more than 9 years since now. And I just think, maybe the crypto, that will be the big future. And I'm personally a true believer of the cryptos. And now I'm just entering into the AI area. So currently my role mainly that is I'm the founder and the CEO of Agent On. That is a new AI-driven trading company. And also I'm the CEO of ME Group. That is a leading Web3 media in Asia Pacific area. And I have been the co-founder of Bimar. And that is kind of the crypto exchange. Then I still have the advisor role of the BACT. That is a public company in America for crypto trading. So that's all about me. Thank you, Kevin.
Very impressive. Jerry, please, introduction about yourself.
Yeah, sure. Hello, everyone. My name is Jerry. I'm from the Zikron Financial Group.
It's very noisy, so I might just ask you just to speak very loud.
Sure.
Very loud.
Yeah, Zikron is good at so-called traditional finance, including security, brokerage, asset management. And also is very good at crypto trading as well. So I'm happy to be here. Thank you.
Great. Maybe we'll just kind of kick off the first question. Jessica, you mentioned that you're the CEO of ME Group. Also, you have an agentic payments company. What I think is actually very unique, I think, for this audience is that there's a lot of retail, a lot of energy in the room here. But given that from the media group, you speak to a lot of different aggregated partners, I think it's quite unique how you can distill that into like how AI is influencing their decision-making process. But of course, you're doing AI to AI agents, programmatic payments, which I think crypto blockchain enabled is very critical for. How do you currently see the market, and where in the next 2 to 3 years do you see for your company, do you want to be able to push this kind of business?
Yeah, before our dialogue, I just walk around for the exhibition area and saw a lot of the exchange platforms, they are just adopting the A2A trading or even AI copy trading or AI agent copy trading, those kind of the cases. I think that really, impressive, say that AI is interacting with the trading area a lot, especially through those kind of the platforms. So far, my expertise is just focusing into two areas. One of them definitely will be the crypto, as always in the past 10 years. And now, why I find AI is such a sexy area for me, because finally I understand that, the crypto basically itself is built for AI for use. Why I mention this, because crypto, they have something like peer-to-peer and seamless 7 days per 24 hours. They never stop, and they transaction a lot and very fast with low cost. So those kind of the basic infra that is now built for human self.
And as I see, that is built for the AI for use, because they are running almost everywhere, every day, every hour. So they need a higher efficiency to go through the transactions by payment, by trading, or even by kinds of the large scale of the trading volume cases. So what I'm looking into is what kind of the infra we can build for the AI to AI economy in the capital market. So definitely the pioneers will come from those kind of the exchanges, no matter that is trading Forex or that is trading commodities, that is trading about the cryptos, like me. So we still are adopting AI tools a lot recently. So if you ask me about what is the leading trend or the new things you are looking into, I think you think that will be evolve a lot in the upcoming maybe 1 year. I say maybe no need 1 year, just 6 months. Those kind of things will be the main player on current market. AI will do the copy trading as a role. You can put it here for the user select. And AI will trade with another AI to see who will be faster and who will be smarter. And all kinds of the underlying assets, even this, AI will create some new financial assets. Like we can do tokenization for kinds of the AI capability to make sure that will be traded on the exchanges as a main financial assets. So that means not only from the trading roles or the trading parties, but also for the underlying assets that will be impacted by the AI area in the upcoming 1 year. So that is in my area.
Very, very impressive. So just one more question before I move on to Jerry. So what are you building is ultimately a retail product where people are able to directly interact with like liquidity pools? Or what you're kind of considering on AI agents more wholesale, kind of like institutional for yourself? Is it building a retail product? Is that what you're building?
Yeah, both.
Both, okay. All right, Jerry, you're a TradFi guy, right? You're a CFA charter holder. You're an MBA, Cornell graduate. How do you see AI impacting what you do from investing externally? Or is it a tool that you're using internally to kind of, let's say, sharpen or make more efficient your investment and risk management decisions? How are you currently using it?
Well, I think AI is changing the asset management business. For example, it's like information summarizing and financial modeling used to take up like 17% working hours of research analysts. But now AI can do it at a much faster speed and lower price. So I think the team setting is changing and maybe team size is shrinking as well. However, I don't think AI has changed the competition landscape. For example, it's like fundamental shops are still competing on proprietary data such as satellite image and credit card data. And quant funds are still competing on execution speed, for example, like server collocation and also those microwave networks for high-frequency trading. And also nowadays, more and more funds are using similar transformer models, and that create a problem called machine learning saturation that could lead to so-called quant crash. So the competition.
So a quant crash is like just where it just exacerbates. Everyone's trading the same way. Momentum kind of just builds up.
Yeah. So the competition edge comes back to human ability to avoid algorithm crowding or those model reflexivity. And also, as you mentioned, it's like AI with AI tools, it's like the asset prices are pricing new information faster than before. That's what we call a alpha decay. And that's why now we need to pay more money for data, speed, and also talent to outperform the benchmark index.
Got it. So, I mean, look, your job as we were kind of preparing for this panel, right, is really to look at fundamentals. So is AI helping you from a credit or equity analyst perspective come to a fundamental decision faster than what you were able to previously? Like, because let's say public markets are able to push out financial statements, you can get an answer very quickly. Or, is that ultimately, is that something you guys are looking at the moment in terms of is it helping you find alpha? Or is it actually competing alpha away because everyone's able to use the same tools?
Yeah, I think both. AI is definitely speeding the research and analyzing work faster. But as you mentioned, it's also create alpha decay problems. Everyone using the same tool.
Got it. Okay, thank you. So I think, we've got a short panel. I think Jessica, as a market thought leader, right? So we're seeing firms shift capital from human headcount towards more computing infrastructure. I mean, how do you see like TradFi and crypto, and we were obviously converging now, impact, with the plans to mentor and train, cultivating next generation talent? Is AI kind of taking away from our, let's say, the younger generations to be able to kind of like grow in this area, decreasing their scope for laddering up? How do we see training the next human capital, right?
Just like what I have been asked several weeks ago, the question is, what kind of the job you think that will be taken a lot very quickly? So I just, just bring out a survey result, say that, maybe we consider some, low-level work will be take place by AI a lot very quickly. But the truth is, the most smart part, that will be taken away. So, when we just think again into the trading or exchange area, that will be the same thing happen. We may think about like some analytical work will be move out, but the truth is, like the decision making will be taken by the AI very quickly. Like that will be the generative, like one round, another round, another round. After several rounds, the decision will be made very quickly. Like we replace the copy trading part by some leading traders by AI. That is the decision making directly. You do not need to make a decision for them. They will make decision by themselves. Even you are sleeping, they are just doing the trading and make a decision very quickly. Which kind of the long position, short position will be just stop there. So that is a pretty important feature and the findings we got recently say that maybe AI will take a more critical job. Otherwise, we think maybe some important work will be taken. No. So far as my experience, I still prefer say that, for the exchange area, AI will be the leading trader. And but someone will ask another question about this, like, what will be the real competition when AI trade with AI? Like, is that the LLMs or the calculating capability or the power? The answer is not. We still consider, after we chat with a lot of the AI trading companies, the answer is not only the calculating power, but also what kind of the ways you are training them. And how about the things you accumulated there? The experience, the memory, and also the skill set you add to the the agents. So that will be also critical, except for the LLM. The LLM is just a brand, right? So we'll ask me uptake by AI very quickly.
Thank you. I think we've got 5 minutes left. Jerry, you're an RO with the firm, right? Big hat of risk and compliance that you wear. When a human broker makes a compliance error, the legal liability and pathway is like very clear. If an autonomous self-learning executes externally, where does the legal liability sit? Have you got any particular views on how that should operate currently now and into the future?
Yeah, sure. I think according to the Hong Kong law and also the guidance of SFC, the legal liabilities goes to so-called licensed corporation. That means the financial institution. And within the financial institution is like the risk officer, the manager in charge, responsible officers, and also even the board members are responsible for such failure. And you mentioned that AI did it. It's just not a permissible defense from a legal perspective. And also SFC require licensed corporations and its management properly design, test, and also supervise IT systems, including AI models. And regarding the software company, I think SFC would not directly go after it. However, the financial institution might sue it, depending on the evidence of that case.
Got it. Okay, so I think we're about to wrap up. I think on a Friday, everyone's kind of looking forward to being able to move on. So if there's a key message, people are going to come up and speak to you and approach you. Jerry, perhaps, what do you want people to, one sentence, what do you want people to come speak to you about now in terms of your group, your strategy, any of your ideas? And similar to you, Jessica, please.
Yeah, my advice to all the people or all the investors is that not only use AI as a like an investment idea generator, but also use AI as a risk control tool. So pay attention to like company valuation. Keep your investment discipline.
Focus on the fundamentals.
Yes.
Jessica?
And I still strongly encourage people to look into we compare with economy and the financial world. Not only for AI itself, but we look into the future for AI and the financial world. Economy and the financial world. I would like to say look into the A2A economy. That is what I'm boosting a lot recently. I say it everywhere, and I would like to call for people's attention. Say that look into the A2A economy. Look into that. Look into the infra, like who is doing the protocols of the payments, who is doing the ID infra, who is doing the transactions, the rules of the transactions for AI and AI, between AI and AI, who will be the king of the rules, who design the next world. So not only for the protocols and agreements and the contracts level, we still look into the infra level. Who is building the wallet? Who is building the payment infra? And who is building the A2A action code? So that will be the second layer. The last layer will be who is actually building the projects and the player as the main players of the A2A economy. Like I'm kind of the marketplace, I'm kind of the payment payers, and I'm kind of the wallet and custodian. That will be the main startups. You need to look into that, and that is prepared for that for the upcoming 1 year. That will be the main stream and the main trend for where the economy and the finance will go into. Now, because I have been in crypto world for more than 9 years, I know the people will just start to look into that. And if you hesitate to move into, after maybe 2 or 3 years, there will be always every kind of asset will be expensive enough. So this is still at the pretty early stage, but we're already here.
Wow, okay. With that, I think we're going to wrap up. So if you're looking for agentic payments, agent-to-agent experts, Jessica is definitely here. And if you're looking at anything in terms of managed risk and focusing on fundamental investments across both US and China, Jerry's your guy. Thank you so much. Let's give a round of applause for our panelists. Thank you.
A million thanks to our moderator and speaker for bringing such valuable insight into the topic. Thank you very much. Please be seated. So, ladies and gentlemen, last but not least, our final presentation will be touched on a new era for gold, future trends amid high interest rates and geopolitical risks. As global markets continue to navigate high interest rates, geopolitical uncertainty, and shifting investor sentiment, gold remains an important asset for diversification, risk management, and long-term confidence. This session will share professional insights into the future direction of the gold market and the key factors shaping investor decisions. And this session is going to be conducted in Mandarin. 这一次的主题是黄金的新纪元，在高利率与高地缘风险下的未来走势，探讨高利率、地缘风险与市场情绪变化如何影响黄金市场的投资判断。Ladies and gentlemen, please put your hands together and welcome Bruce Yam, Chief Market Strategist of Multibank Group, to the stage. Bruce, please.
Hi, 大家好啊，我叫任小平，然后今天要跟大家去讲一下那个黄金未来的趋势是怎么样。好了，在讲之前呢，先打个广告，然后我们公司呢是有资金保障的，所以有资金保障的，所以呢就 投资的时候呢就比较安全一些。然后我们有监管，然后还有不同的交易平台。好了，讲之前呢，那肯定要卖一下广告，打一下广告。就是这是我在2020年的时候已经说黄金会涨5年，去到2025年最少见3000，然后后面继续，后面会怎么样呢？我也写过书啊。然后好了，通常我是最后一个去讲课的，所以呢，我通常是把最重要的先讲。就是黄金呢，其实现在在3浪里面的4浪，然后后面呢就会再往上冲，冲完之后呢就会再往下跌，跌完才会最后那个冲上去。你会见到了1980年的时候是第1浪，然后是2011年的时候是第3浪，然后呢现在呢其实是3浪的3浪，然后现在最近是4浪下跌，然后2浪跟4浪呢其实是最主要是，如果2浪是横盘，4浪就会大跌了。所以呢，现在你见到2011年到2020年其实是一个横盘，所以现在是大跌是很正常的。这大跌之后，那肯定就是大涨了。所以现在是找位置去买黄金的最佳时机。好了，很多时候呢，那些人都说啊，黄金跟利率上涨，黄金就不涨，是不是这样子了？我们去看一下，红色的地方就是利率上涨的时期，你会见到，就算利率上涨，黄金也会涨。然后看最近的，就是最近就是上面那一张图，你会见到，美联储先加息，然后黄金还没涨，但后面黄金就涨了。所以其实是加息对黄金呢不是最大的影响。然后除了看那个之后，还有通胀，通胀也会看到其实是不会受到很大的影响，特别是通胀完之后，黄金继续涨。黄金为什么会继续上涨呢？最主要就是那个货币的那个属性回归。1971年的时候，尼克松总统把那个黄金跟美元脱钩之后，现在黄金的那个货币属性再回归，所以黄金的上涨呢还没完的。然后你会看到很多国家的债券市场都超过 GDP 的100%，代表其实最后大家都要印钱去认付那个债务，所以黄金在印钱的方面呢，它就会继续涨了。然后会看到美国的债务呢其实很严重，但是你看到在2次世界大战之后，其实曾经美国的这是 debt to GDP ratio 了，其实会下跌的。所以现在美国还是努力去做这个，除非跌到下面去，否则黄金还是有上涨的空间。然后每一个国家的黄金储备，你看到都会在上涨。所以呢，其实这个势头呢是不会短期来说去完结。然后买的最多是谁啊？买的最多是俄罗斯啦、中国啦，还有波兰。波兰还之前呢完全没有买过，这段时间呢买的最凶的其实是波兰。然后黄金的成本呢其实一直在推高，所以呢你会看到黄金现在的成本其实是2700左右了。要挖出来的话，所以其实你要跌破3000好难啊，所以3000多其实是一个很好的买点了。你会看到其实需求一直在上涨，然后供应呢就平稳了，所以只要需求上涨了，就继续黄金的价格就继续上升了。然后会看到美国跟英国的那个黄金储备都在上升，所以呢，都要去多留意这一个了。然后你会看到最近仓库里面黄金的增加也会增加了，最主要是 ETF 里面会增加很多，只是大的银行也在减仓他们的空头。然后还有就是通常呢， 对那个流动性最敏感的就是 BTC， 然后就是黄金，然后股市。所以呢 ，BTC 在去年10月份就已经下跌了，黄金呢就在今年的1月尾2月初下跌，然后现在要留意咯，股市可能在就是流动性紧张的方面，可能有一个下跌的空间了。这一个呢，就是刚刚那个图可以看到哦，大部分是 BTC 先见顶，然后到黄金，然后才到股市。然后未来，刚刚第一张图已经看过了，这个就是那个大趋势的黄金。然后香港呢，最近呢推出那个黄金的那个交易，所以呢，其实黄金也得到中国跟香港的重视，所以呢会继续有一个需求。然后参加的公司有这些了，所以这个是了一个短期的图。然后我们看到黄金上涨，现在又跌到4000多左右。其实现在在4浪下跌的4浪里面，然后还有最后一浪在下跌，那个时候就是黄金抄底的最佳时间了。然后你见到 ETF 啦，其实每一次黄金上涨呢 ，ETF 功不可没。现在 ETF 还没有特别增加，但是这一个你要特别留意，如果 ETF 增加了，黄金就一定上涨了。好了，最后就是我们有一个讲课可以学怎么去做交易啊，咱们有兴趣的可以去加入我们。好，谢谢大家。
Thank you, Bruce, for bringing such a wonderful sharing. Thank you. Please be seated. So ladies and gentlemen, thank you for being here with us today and yesterday throughout the journey here at the WikiEXPO Hong Kong 2026. 各位来宾，非常感谢大家参与我们这2天的 Wiki Finance Expo 香港2026。相信这2天大家都收获满满的。
Over these 2 days, we have explored digital assets, Web3, stablecoins, tokenization, AI, market liquidity, investor education, compliance, payments, gold, global market trends, and the future of financial service. And more importantly, we have connected professionals from different markets and disciplines under one shared purpose, building a more transparent and collaborative financial ecosystem.
That's right, Alvin. We would like to take this opportunity to thank every speaker and panelist for sharing your expertise, and every exhibitor and visitor for your participation, and every partner and team member working behind the scenes to make this event possible. Let's give yourself a big round of applause. 掌声送给在场每一位投入、参与和付出。
We would also like to express our sincere appreciation to our valued sponsors. Your trust, commitment, and generous support have played an essential role in the successful delivery of WikiFinance Expo Hong Kong 2026. Our special thanks go to our global sponsor, D Prime, for its strong support and valuable contributions to this international financial gathering. We are also deeply grateful to our diamond sponsors, AI Prime, ATFX, Mega Fusion, CXM, GTCFX, Evanos, and Top Wealth Trading.
没错，我们以特别鸣谢各位赞助商鼎力的支持，你们的信任、资源还有积极的参与，协助我们汇聚世界各地的行业领袖、金融专业人士，还有创业的新企业，共同打造一个促进专业交流、商业联系和合作发展的国际平台。你们绝对是本次活动圆满成功的重要力量。衷心感谢我们全球赞助 Global Sponsor D Prime 德普资本以及钻石赞助 Diamond Sponsors AI Prime ATFX Mega Fusion 安徽 CXM 西蒙 GTCFX Infinos 以及 Top Wealth Trading 通富，感谢你们。
And your active participation, professional expertise, and continued support have helped us bring together industry leaders, innovators, and financial professionals from around the world. So with your contributions, this Expo has become a meaningful platform for knowledge sharing, business connection, and future collaboration.
We hope you live with useful insights, new business connections, and stronger sense of where the industry is heading. The value of an expo is not only measured by the sessions completed, but also by 3 C's. The conversations, the cooperation, and the confidence that continue afterward. 希望大家通过本次的活动可以获得专业的意见、行业联系和更多的合作机会。也希望我们共同推动金融市场的信任透明，还有健康的发展。
So thank you once again. We look forward to seeing you at our upcoming WikiEXPO events, including Cyrus this November. Please stay tuned to the WikiEXPO website and the WikiFX app for the latest updates.
没错，我们期待在下一节的活动中再次与各位见面，包括我们今年11月会在塞浦路斯的 WikiEXPO， 请密切留意 WikiEXPO 官網還有 WikiFX app 的最新消息。Safe travel, stay connected, and we wish everyone continued success. Thank you once again for being part of the Wiki Finance Expo Hong Kong 2026. Thank you
and goodbye.